left the...
Yeah, I mean, market-wide, very likely. But,
Yeah.
I mean, this is just that classic period, right? Tamanna, NAV management comes so much into focus, more so at a global level too. I mean, independent of what the Nifty does, there will be some headline movers over the next 4 days in the mid-cap and the small-cap space. So really excited for that.
Yeah, maybe there are some spots of green there. But I think we will end up for just the second time in a decade closing the last 5 days, maybe not in the positive territory if you take as an average. That seems pretty certain because now you have just about 4 market sessions to go before we head. But
you mean for the last 5-day gains or losses?
I'm only talking about the Santa rally period.
Just only the
last 5 days.
Yeah,
only in terms of the last 5 days. 2019 was the last time that you were in the negative. You were in the positive from 2020 to 2023, and 2024 might be the outlier. But let's get you a sense of what was happening globally. Frankly, the headline is thin volumes. It is a truncated week. US markets were open only till 1 p.m. on the 24th of December. Bond markets, that's equity, bond markets were open till 2 p.m. So which is why you did see truncated trading. But even in that trading, there was green on Wall Street, which is why I'm saying Santa arrived on Wall Street, but not yet on the last trade. The Dow rose nearly 400 points in this trade. It was the tech stocks, though, which were completely on top. In fact, all of December for US markets, it's been a tech-fueled December rally. The NASDAQ was about 4% up. Sorry, that's not the Dow. The NASDAQ was about 4% up. Alphabet gained 16% in this time. Apple up 9% and Tesla 34%. That's month to date, I'm talking about, in the month of December. So it's just been a ferocious rally, and I would suspect Tesla has a lot to do with it, as well as Alphabet. In terms of bond action, Treasury yields ended completely flat. The 10-year topped 4.6% briefly before sliding back. Crude prices remain steady in thin trade, Brent above $73 mark. And Asian markets have opened higher. Remember, there are quite a few markets which are shut for Boxing Day. That's the 26th of December. Hong Kong, for one, is shut, and Shanghai mildly down in the red. As far as India is concerned, expect more flat trade. The implied showing a very mild uptick, about 25 points up. Having said, we're talking about thin volumes, etc. It was a fair bit of trading on December 24th. Foreign investors sold 2,454 crores. One would think they would take a break pre-Christmas from selling Indian markets. But no, that's not what's happening. Domestic investors, meanwhile, bought about 2,819 crores. I think the point you were making about NAV management also comes in here, because at the end of it all, for mutual fund managers, making the most of this dip becomes important when you have investors looking at a very long-term horizon.
Yeah, Tamanna, and somehow, I mean, it's too small a data point to look at, but if you just look at what the very recent bias is, I mean, the Nifty is facing some resistance at the overhead level. So, I think, one, that the quant indicators are not quite in favor, and 23,850 has been a very strong point of resistance. I mean, if we can pull up the 5-day chart, and you will see 2 peaks out there, right? Look at that. I mean, just just next to me, the 2 peaks that you see, that's about the 23,850 level, 23,862, 23,848 or thereabouts. And the market has retreated from those levels. So 23,850 seems to be proving a stubborn point of resistance. So that's one key thing to watch out for, that there is massive resistance out there. Now, you probably expect, like we said, some very wild swings in the SMID stocks in the next 4 days for sure. I'll be really surprised if it doesn't happen. I mean, we've seen that happen in, for example, in the Tata Group stocks, right? I'm not saying that's NAV management, that's rumor. But I do think, viewers, for example, that if you're looking at the Tata Group stocks, like the TRFs and the Tata Chemicals, etc., I mean, be careful. All of this is happening because there's this whole belief that Tata Capital IPO will come out, and everything which has some stake or otherwise will be beneficiaries. We've seen this tape play out like just this year, right? When we've seen these stocks gain 5% upper circuit each of the days for so many and then come off. And therefore, I urge viewers that please be careful. It might not be a bad idea to trade. The stocks may well do well too. But if you are not early in the boat, then please be careful. Please trade with stop losses, even if the stop losses are getting hit, because you never know when this might just turn around. So, I mean, great gains, Tamanna, on Tuesday for so many of these names. could be interesting to see what happens today. Typically, these rallies in the past have lasted for 4-5 days or more. So let's see.
Yeah. So September 2025 is the deadline by which they have to list, which we know. And, you know, I was speaking to our team of reporters as well. And they're saying that this buzz is there, but we don't have clarity on when. I think the main buzz is the size of the issue that has been reported. But that is yet to be confirmed.
Yeah, exactly. So, I mean, just be careful. That's the limited point. I mean, even if there are tangible gains to be made, I mean, the market in its wisdom may reward and then discount it again until the IPO eventually happens. So if you're buying it for a trade, please be careful. It's just scary sometimes what happens. We saw in early 2024, right, when Tata Chemicals and some of the others just went off into the stratosphere before coming down the cliff.
And especially that was on the semiconductor play, which was even more astonishing to understand because there is no clarity on the exposure of any of those group companies to the semicon business. They are at a very preliminary stage. Yes, it's exciting, but you're basically ground zero day one in where Tata's or anyone in India right now is in the OSAT business.
Most certainly. So, but interesting times, like we said.
Yeah, I think the other big one today, of course, is the monthly Nifty expiry, and the last one for 2024. New lot sizes will also come into play after this, and so expect maybe some volatility because of that. One to watch out for, but some stocks that are on our radar this morning. Let's come to that right now. First, that I'm watching out for and on my watch list is Seagal India. It's a thumbs up for the stock. That's because its arm is in agreement with NHAI, that's the National Highway Authority of India, for a road project worth 981 crores. The project was on a HAM basis. That's a hyper annuity model. Completion period and operation period is about 24 months. So now if you look at the order book position of a Seagal, the order book stands at 12,000 odd crores, a little more than 12,000 odd crores as of September 2024. And order inflow stood at 2,500 crores in H1. So if I look at the entire order inflows of 2,500 crores in H1, 981 crore order with NHAI is not that small. I think it's an important one and might see an upside on the stock, if not today, but definitely it is a positive. It has a strong order book position as well, Seagal, 4 times book to build ratio. So that's one we're watching out for. Now, EPAC Durable is a bit of an interesting one. There was a media report that China's TV company wants to buy a 26% stake in EPAC Durable's arm. The stock was up already, 5% up. Now, the only reason is usually clarifications don't lead to a thumbs up, but the only reason I'm saying this is because in the clarifications, they mention that discussions are currently in the preliminary stage and will disclose as and when required. So, in a sense, there is a confirmation that talks are on at the very least, and which is why this is a thumbs up fundamentally. On the other hand, Raymond Lifestyle, this is now, that was on circuit all of last trade on 24th. MOSL, Motilal Oswal, has initiated a buy on Raymond Lifestyle, recently listed arm of the Raymond Group and, of course, part one of the entire demerger process. They have rated a buy with a target price of 3,000 rupees. That's a 49% upside. So that's the reason I've actually picked it. The company has multiple growth drivers in place, says Motilal Oswal. They expect a 12 to 14% growth to improve Q3 collections and the company to see 9 to 11% CAGR in revenue, EBITDA and PAT over FY24 to 27. So some excitement there on Raymond Lifestyle from Motilal Oswal. So yeah, those are the first 3 that I'm talking about.
Interesting. Since you spoke about clarifications, I thought the clarification from Amber was interesting as well. So, this is what the company said. So that's the first stock on my radar. It was up 5% yesterday. The company is clarified on the report of company looking to demerge electronics division. The company says that there is no such event that triggers disclosure obligations. No firm denial to the news report. Just saying that we don't need to disclose right now. Fine, the event hasn't happened, you don't need to disclose right now. But no firm denial that no such an event is not thought of or anything of that nature. And therefore, never know, the stock may continue to remain excited. So keep an eye out for that one for sure. Keep an eye out for 2 order wins. Ramki Infra, we don't know the size of the order win, but it's received an LOA from Hyderabad Metropolitan Water Supply Board for a period of 5 years. Now, we don't know the size of the order, but pending that, it does seem a positive announcement, so that might be active. And Panacea Biotech has received an LOA from UNICEF for a supply of 115 million doses for its bivalent oral portfolio vaccine worth 127 crores in calendar year 25. So watch out for that. I'll leave for Tamanna to analyze Ola Electric. She tracks it very closely, but I do want to give a small piece of analysis on Aarti Drugs. Now remember, the announcement came in dying moments on the last half an hour in Tuesday's session. Our colleague Varsha had given clarity on what it means, but I'm just laying it out because the stock was up 12% yesterday in some numbers terms as to what can happen. So as a result of this, now company will be able to export API products to US, maybe about 60 to 80 crores annually. Could look to add production lines as well, which could add another 40-50 crores. Now the management has to verify all of this, and the management will be joining us tomorrow, by the way, first on NDTV Profit. So you'll obviously hear from the management themselves, but because the stock was up 12% on Friday, just thought we'll bring this up. So this is one. The other interesting, and by the way, we'll also come back on the Nuvama Amphi note, because I think it's very interesting. But before that, the Ola Electric expansion. Now, shaft around in media for not having adequate service centers. The fact that they are saying that they've opened 3,200 new stores co-located with service centers. Does it add some bit of positive outlay to their overall servicing, quote unquote, woes, if you will?
So they have been trying. They have been trying to change the image and outlook that there is a problem with service centers. So interestingly, Neer, since you mentioned it, we actually sent a reporter out yesterday and did a ground report. And of the 3 centers that were supposed to be opened in Mumbai, we saw 1 has actually opened and 2 have not yet. There was nothing on the locations that were mentioned. Could be, now I'm giving benefit of doubt here, could be that they are going to open it, but they have claimed that 3,200 service centers have opened. Not all of them have opened yet. Maybe they are in process. Completely benefit of doubt given over there. They are trying, so A+ for effort. But I think the real marks will come when they manage to push things through. They've also done a deep discount on 25th. It was a Christmas Day offer. They've announced it also on the 25th. So, I mean, did you give enough lead time for people to come in? So, definitely an interesting product, definitely a disruptive idea, but maybe these are teething troubles that they are having. So, the big overhang is central government agency pushed investigations into consumer redressal. That overhang has to go for it really to move. And the other big positive will definitely be when their own indigenous battery operations actually start.
Yeah, so that would be amazing. Yeah, good to see whether somebody in India is able to do, in some sense, a fully backward integrated thing. But the fact that some people have noticed that Bajaj Auto's new product is 45% cheaper than the previous one just goes to show how competition is heating up for everybody in this space. Last couple of things. The first one is this small Nuvama note on Amphi categorization. And this just, to my mind, dispels the issues that people may have around mid-cap funds liquidity, because look at the uptick in market capitalization. Nuvama says that fueled by the current market momentum, they anticipate Amphi large cap cutoff to surge to 1 lakh crores from 84,000 crores in June 2024, while the mid cap categorization threshold will soar to 32,800 crores. The last stock in the mid cap index as per Amphi categorization is 32,800 crores. Enough liquidity out there. So for mid cap funds to make or break or sell or buy large positions, because 32,800 crores is not chump change, really. So that was one interesting one. And a lot of media reports around this. It's a space to watch. There might not be any implications of this because, the news point that I'm talking about is how Billion Brains Garage Ventures, which is a part of Grow, or Zerodhas Kamath Brothers Fund, Rain Matter, Share India Securities, and others are going to invest in Metropolitan Stock Exchange. Now, a lot of chatter around this. Does it have an impact on the incumbents, BSE and NSE in any fashion? At the start, no. Can they challenge at some point of time? Maybe yes, maybe no. But the limited point I'm making is, at some point of time in the past, MCX tried to challenge, and MCX had all the technology in its power, brand name in its power, everything. It could not budge BSE and NSE, NSE predominantly, but even BSE for that matter. It was a tiny tune at that point of time in terms of market share. MCX stock exchange couldn't do anything. So because there are 2 or 3 smart brains investing in a stock exchange to revive it, potentially revive it, can it really challenge the incumbents? I think it's a far-fetched thought. So if at all this were to happen, it will probably happen at some point of time in the future. Cross the bridge when you get there. Don't try and preempt this at all, no matter who the brain is behind this. So just wanted to lay it out, because this will become a talk of town for sure.
But what would be the play here in any case for an investor?
A stock exchange.
So you mean dump BSE, thinking that this competition
could, not dump, but could you see, will there be a challenge to the incumbents? I mean, NSE is very big, even BSE, to challenge BSE, right? I mean, and I don't think this is easy. I mean, so just I want to lay it out that let's not get worried. There is a competition coming because it's backed by some serious players. We've seen this in the past.
You know, if you look at the press note, there is literally one paragraph on it. And we are actually delving in and seeing what more is there, and we'll...
Yeah, we should, that's one.
We'll come back with something more solid on this story, so viewers should watch out for that. All right, one interesting interview actually that Agni Dev from our team got, this a couple of days ago, actually on 24th, there was this event at NSE, at BSE actually, with delivery partners, etc. And we caught up with Swiggy. They say that all this quick commerce chatter going around, the stock fell 3% on Tuesday and has fallen 5% in the last 5 days. In fact, on the sidelines of the Swiggy NSE event, my colleague Agnidev Bhattacharya caught up with Swiggy's Rohit Kapoor on the introduction of Bolt and asking how it will aid the company's growth and more. Listen in.
2024 is a seminal year for us. I think saw growth in all our businesses. We've seen the quarterly results come out. We got listed in November, which was a big milestone for the company. So 2024, I think if there's a year in my professional career where I will like to keep it forever, is 2024 probably. It was a great year. Bolt has been launched. We've last report we released, the quarterly report, earnings call, we shared that 5% of the orders on Bolt. We are seeing good traction. Look, quick commerce, quick delivery is a trend, right? It is something that consumer acceptance is very strong, and we are doubling down on all aspects of it. So it's not just Bolt, like anything to do with quick delivery, we'll be right up there trying to do our best in terms of delivering that unique experience to the consumers. And I think beyond that, not much is changing the company. We remain incredibly focused on every detail which matters to consumer. We remain incredibly focused on finding the next opportunity to add more convenience to the consumer's life. That's all. I think we keep doing that.
So to quantify, how much is the food delivery business looking to spend on the quick delivery part of it?
Not spend. I don't think we should see it that way. And those are investment numbers I'll not like to quote. We are in a competitive market, right? But it's a priority. I think we are putting in all the investments required to build Bolt and any format which is new and emerging.
Right. So lastly, there were some reports today about how different people are charged differently for their Swiggy One membership. Some are charged 349, some are charged 39. Is there a difference in the way that works?
It's a dynamic pricing, always has been that way, so there's nothing new there. It's based on your usage, based on your the average order values and some simple things. So I think it's always a customized offer to each customer. But also we frequently release and just to give you a sense that the Swiggy One overall cost of the program to the consumer has gone down dramatically over the years, right?
So we also caught up at the same event with NSE's MD and CEO Ashish Chauhan about how the IPO boom signals higher entrepreneurship and participation. Listen in.
NSE's existence is ensuring that India's capital formation happens, channelization of savings happen in a productive capital, and naturally wealth of the nation increases. And so NSE, in a way, leaves for the country, and that's where if the country does well, naturally NSE would do well. At least in some ways, NSE will be a small little catalyst for ensuring that the savings, which is usually done by the households, and it's used by corporates. So the channelizing on a what we call a disintermediation basis happens via NSE.
Right, sir. My second question, again on a very predictable line, IPOs. The country's IPO market is booming. We are seeing a lot of IPOs coming up. So, large ticket IPOs too. But do you see that the primary market is sucking away the liquidity that's available for the secondary market and is in a way necessary for the secondary market to grow?
It's a two-way process. Across the world, whenever the markets go up in secondary, a lot of IPOs come, and it's necessary also because in some ways today more and more people in India are now investing via stock markets, which was not the case even 5 years back. 5 years back probably we had around 2 crore investors, unique investors. Today we have 10.7 crore unique investors. So we have literally gone up by 5 times. And so those people are now investing. Earlier they were investing into physical assets. Now they are investing in what we call trust assets. Assets where the trust on the entrepreneurs is of paramount importance, in addition to, of course, the trust on regulators and Indian judiciary, Indian parliament, and Indian overall society. And that's where I think more and more people are getting attracted. And if we continue to have very few companies listed, then naturally the prices on a demand-supply basis would be affected. While as if you have larger supply of good quality assets come up, they also create more jobs, because the new companies are also going to create more jobs, but also more wealth for all the shareholders that come up. So overall, it's a very symbiotic relationship between secondary market and primary market. And India has been in a good shape. I think last year, probably more than 195 companies got listed on NSE, more than 55 on the main board, the rest on the SME emerge platform. But overall, this has been one of the best years for IPO in Indian markets in its 150 years history and 30 years of NSE's history. And it's also telling you that more and more entrepreneurship is sort of happening in India, which is a good omen for a future of India.
Right, so lastly, while I have you on the subject of IPOs, and I'm sure you knew this was coming, where do we currently stand with respect to NSE's IPO, and do you see some silver lining for that in 2025?
In a way, we don't have any visibility as yet on our IPO. So as and when it comes, we will of course tell you.
Okay, and as we bring curtains down on 2024, I mean, this is what we'll do for the next few days. We'll try and give you some idea of what's happened, what could happen. So today, we bring you the top 9 stocks with expectations of the highest upside next year. Harsh, which are these stocks which have the highest upside?
Well, fascinating, Neeraj. The 9 stocks on the Nifty 50 offering a 30% plus upside. Now, that's rare in itself, and I'm not sure where the Nifty goes if all of these targets actually get hit, but that's for another day. Let me first talk about the names itself. First is Adani Enterprises, top of the list. 82% upside is the average analyst expectation. 4,255 is the average target price. Of course, an incubator of sorts. Stock is also corrected, therefore offering the kind of upside that it does. Second one is an IndusInd Bank, 52% upside, 1,441 being the target price, with all the issues around microfinance as well as the provisioning for Q2. Analysts seem to believe that a lot of the pain has already been built in. That is one. Second, the stock has corrected substantially from the 1,200-1,300 levels, and therefore the kind of upside that you're seeing. Third one is SBI Life, 2,000 being the target price, which is a 42% upside. The positive here is that there's been some bit of regulatory overhang. Likely, a lot of it is behind it. There's also some bit of overhang with regard to banca as a channel, and because SBI Life sources a lot from SBI, the bank, therefore you're seeing some bit of correction on the counter, which seems to be an opportunity of sorts, is what analysts see. Fourth one is Adani Ports, The largest sports operator in the country, 41% upside, 1682 being the target price as per Bloomberg average analyst expectations. Coal India, 40% upside, 536 being the target price. Of course, 70 to 80% of India's coal comes straight from Coal India. The correction seems to be an opportunity. Tata Consumer, 34% upside from here, 1211 being the target price. Plenty of noise with regard to Starbucks, as well as some bit of correction that the stock has seen, seeing this kind of upside. NTPC, largest power generator in thermal, 34% upside, 446 being the target price. Tata Motors, 32% upside, 956, possibly the twin engine, PV and CV, to power the stock forward. ONGC, 31% upside, 317 being the target price. Some oil and gas, or rather some upside with regard to crude could well move this stock as well.
So, just for the benefit of people who've just tuned in and are watching this, and we should get those lists once again, but this is as per the consensus target upside as per brokerages. How have we derived this list?
Yes, it's the analyst average, Neeraj. So all analysts give their target prices. Bloomberg compiles the average target price of all analysts combined on the street. Doesn't give any weightage to any single analyst. So this is the average upside of all analysts combined as per Bloomberg data.
This is for the Nifty 100?
This is for the Nifty 50.
Okay, Nifty 50 average target price based on the consensus of all the analysts who track this stock compiled by Bloomberg, and these are the upsides that we're putting it out. Okay, Harsh, thank you so much for bringing this list. Interesting exercise for people veering towards large caps. And if you believe that the sell side research knows their job well, then these are the average upsides that you should keep an eye out for. Mind that list. Just before we put the spotlight on M&M or PCBL rather, just want to lay out that list once again for our viewers. Adani, IndusInd, SBI, Adani Ports, Coal India, and 4 more include a Tata Consumer, NTPC, Tata Motors, and ONGC. Look at those upsides. If the sell side turns out to be true, then these are the ones that would have done remarkable work for your portfolios. Okay. On to more. I mean, let's talk about stocks which have anyways done well. So, yeah, let's think of companies which have outshone their peers relatively, or the index, if there is an index relatively, in the last few months or in calendar year 24. Philips Carbon Black, or PCBL, it's seen very strong moves this year, up over 78% and a whopping 700 jump in the last 5 years. But this year, 78% is meaningful. Now, what is aiding this stock up move? Varsha Johnson to analyze that. Varsha, good morning. I mean, PCBL has announced some major plans, etc. But what explains this kind of an upside?
Well, thank you for that. Let's see what PCBL first of all does. So it manufactures carbon black, which is used in your tires, and is also manufacturer of specialty chemicals. Now, if you see in the stock's returns, in last 1 year, company has given 78% returns, while in last 5 years, company has given 705% returns. Now, the interesting point is in last 1 year, where all the chemical companies have not given much returns to its investors, but PCL has given 78%. Now, let's see what's the reason for that, what are the triggers for that. So, we'll just divide in 3 sections. First, let's see what happened between FY16 to 19. So revenue was up. This was on the back of capacity expansion in carbon black and also volume increase in carbon black. And EBITDA margin, if you see, from 7.6% to 17.4%. Now this is, let's see the reasons for this EBITDA margin improvement. One of the reasons is their shift from a carbon black, that is a low value product, to high value product. This is one of the reasons that why EBITDA margin uptick we have seen, and also reduction in raw material cost has also aided the EBITDA margin. Now then if you see, of course, shift towards the value added products. Now from 2019 to 2024, let's analyze what happened there. So revenue from 19 to 21, if you see, revenue was down because of the COVID and the economic slowdown that we have seen, but still margin from 17% to 19%. Why? Because of the cost optimization that every company was doing. But if you analyze from 21 to 24, again revenue was up because of the volume increase and of course post-COVID impact. But EBITDA margin was down. Why? Because of the high office expenses post-COVID. All the offices were open, and because of the increase in the employee expenses and office expenses, we have seen this EBITDA margin. But overall, if you see, in last 6 years, EBITDA margin has improved from 6 to 7% to 17%. The only reason, the only trigger point here is, and why PCBL has seen such a rally, is because of their shift from low value value added products to high value added products. Now let's see what is the contribution to value added products for this company. So if you see, the contribution from 2018, it contributed almost 24-25% to value added products to 65% now. But this is all in history. Let's see, will this rally continue for PCBL? Let's see what's the outlook for the company. So company aims to reach capacity of 1 million tons from FY 27 to 28, and they also have to increase their share of specialty grade, which is a margin accretive. So imagine a company having almost 60 to 65% of their portfolio into value added products, aiming to increase their value added products, which will actually increase their margin. Then they also want to focus on the polymer and green chemicals in water treatments and detergents. Now this is on the back of their acquisition of one of their subsidiaries, which will actually aid margin for them and also aid revenue for them. Then they also expect volume CAGR of 10 to 11% in carbon black domain over the next 4 to 5 years. This will actually increase their revenue potential. And also they actually are confident in maintaining their EBITDA per ton of 21,000 per ton, and this will and also they also aim to increase this EBITDA per ton, which will increase their margins in going forward. And the JV, so they've done the JV with Kintia for nano silicon products, which will actually use in their lithium ion batteries. So they are also entering into the EV battery. So all this will actually aid growth for this company. And lastly, if I want to talk about the valuation, I've done 2 cases. One is bull case and bear case. So in bull case, if I assume the company will grow at a 34% CAGR, for the next 2 years, that has been the history. So the EPS comes at around 27.8 as on FY26. And if I fast forwarded the PE, the forward PE as of FY26 stands at around 16x, which is quite cheap. But let's not be more aggressive, let's be conservative. And if I take a bear case of having a 20% growth for 25 and 26, the EPS comes at around 19 in FY26, and PE, forward PE basis FY26 comes to around 24x. So overall, the company has seen a rally and as compared to its peers, but valuation wise, if I consider the bull case, it is like okay, 60x, 16x PE, but on the bear case, yeah, the stock has already run up.
Varsha, I have a question. So bear case, you've assumed 20% growth. I mean, that's not small in a scenario of what other chemical companies are doing. So is that the bear case or the base case? Part 1. Part 2, has the management guided to whether they'll match the last 2 years growth of the 26% number that you spoke about?
So, Neeraj, in that I would say that why I have taken 20% growth is, one is because of their the acquisition of their subsidiary, that is Aqua Chemicals. There they are targeting almost 1500 to 1600 revenue. Now this is on the very conservative side, I'm saying. The other thing is the uptick in EBITDA margin that they are expecting because of the value added products that they want to increase to. And lastly, their JV with Canada, which will actually help in EV in the lithium ion batteries. On the guidance part, they have not given the specific number, but yes, they want to they want to increase their volume growth to 14 to 15%, which will actually have a 20% growth.
Okay, Varsha, thanks a lot for that. And the reason why, viewers, you might think why chosen PCBL. It's not a strict comparison, but you think of a chemical company, etc. Look at the comparisons, right? PCBL this year, 81% uptake. Aarti is a special case because they've had troubles, but this is symptomatic of what some of the chemical companies have gone through. Aarti is down 36%. PCBL has had a phenomenal year, and therefore the reason to do this. We'll do this every day for the next 4 days, wherein our research team picks out some specific stocks which have done remarkably well, relative to this sector and try and tell you what's happening with those stocks. Another sector in focus is the electronics manufacturing sector in India. Pankaj Mohindru, Chairman of India Cellular and Electronics Association, said that the sector is working to achieve the $500 billion manufacturing target in a very short span. Listen into the slice of the conversation.
First of all, when the Prime Minister announces, it's not angling anymore. It's a very serious intent. And so, like I said before, that the famous song, "You've Taken My Breath Away." So we are working very furiously on that, and that how this 500 billion will be achieved in such a short time, which is about 25% CAGR. And export will have to grow by about 45% CAGR from the current 30 billion odd to 200 billion. So that strategy is in the works now, and we should be able to roll out something in the next 2 months.
All right. The other big stock that we need to talk about is Reliance Industry, is India's largest listed company and has fallen over 23% from its highest point, which it reached in July this year. This raises an interesting question. Can RIL be dethroned as India's largest listed firm soon? In fact, Meka is joining us with more data to try and answer that question. Is there a possibility that Reliance may break its 9-year streak of giving positive returns year on year?
Yeah, there is a possibility that we have two contenders that have done relatively well compared to Reliance. The stock is down 5%. This is regardless of Reliance currently being the largest listed firm on Indian markets as per market capitalization. But it is to be noticed that the stock is down 23% from its life high, which it hit in July, and it could see the longest monthly losing streak since the COVID-19 pandemic hit the markets, and we saw a steep fall. And this will happen if the stock doesn't gain 5% before 2024 end, and that leaves us with 4 trading sessions. And then the milestone of having 10 consecutive calendar years of positive returns is at risk. Now, what's been dragging RIL? A bunch of factors. First up, their consensus EPS estimates are down 16% when you compare to the start of FY25. They have failed to meet the earnings estimates, consensus earnings estimates over the last 6 quarters. Their O2C, which is their biggest EBITDA contributor, as well as their retail business, continue to see a weak performance, while Jio is the only segment that is doing relatively well. They have seen continuous delay in new energy investments, and they've seen a 1-year delay in many of these segments. And there's been disappointment because of no value unlocking via IPO announcements of various business segments. Now, which stocks could dethrone RIL stock? Well, as per our analysis, it could be 2 stocks. One is India's largest IT company, that is the Tata Consultancy Services, and India's largest bank as per market capitalization, which is HDFC Bank. Now, in terms of TCS, well, their share price is up 10% in 2024. You can see it in the charts here. Reliance has been declining, while TCS and HDFC Bank have been reaching very closely, and now their market capitalization just have short difference of 10 lakhs. Now, when you talk about TCS, the share is up 10% in 2024. The stock is the closest it has been in years to dethroning RIL's top spots in the market, and renewed optimism on global levels bodes well for the Indian IT sector. This includes macroeconomic events like the global rate easing cycle, which is positive for TCS. And when you look at HDFC Bank lastly, well, the share price has crossed a key level of 1,750 in 2024, and this is a level that HDFC Bank had for 3 years struggled to cross, but it's done so in 2024, and it's also set to deliver its 11th consecutive year of gains.
So, Meka, what is fundamentally ailing RIL? And then the question is that are these, conditions or issues that can retract and reverse?
Yeah. So when you talk about the O2C segment, it's a very global and macro perspective when it comes to your gross marketing margins and how the demand is playing out. We are seeing improvement with, in certain of the segments, but it's key to see how Q3 performs. When it comes to retail, the overall outlook for the retail business, because of the continuous expansion that has not played well, we've seen multiple, retail stores shut down in 2024 itself. So it depends on how the company company navigates its retail strategy going ahead, and how much it gets hurt by emerging quick commerce segments. In terms of Jio, well, everything's looking good as of now. The company has seen price hikes. It just took one recently in the last few days. So there are factors that could reverse, but it'll be key to see the second half of FY25, because something that could drive in terms of optimism for the stock is some kind of real life announcement and real life commencement of production in their new energy segment.
All right. Thank you for that, Mihika. Rahul Ghosh joining us now. He's CEO Hedge.in. Let's take a look at what should be your derivative strategy for the day. Rahul, very good morning and thank you for speaking with us here at NDTV Profit. I would say a crucial day with monthly expiry of the Nifty as well. What would be the play here?
Good morning and thank you for having me. We continue to maintain a bullish bias towards the entire January series. That is point number one. Point number two, Jan series is a 5-week expiry, and historically, if you look at the data for all 5-week series, you will notice that they have both sided movement. That is, there's a very sharp movement on the upside, as well as there is a very sharp movement on the downside. We don't expect any change in that trajectory to come about. So although the stance remains bullish, you will see a bout on the upside as well as a sharp bout on the downside, characteristic to 5-week expiries. Keeping the bullish stance intact, we have planned a bullish butterfly as the strategy of the day. What we are looking to do is we're looking to buy the 25-200 call of Jan end expiry. I repeat, we're looking to buy the 25-200 call of Jan end expiry. We're selling 2 lots of, 24-200, I beg your pardon. We're selling 2 lots of 24-800 call option. I repeat, there's a typo on the screen. We buy 24-200 call and we sell 2 lots of 24-800 call. And to offset the extra 24-800 call, we buy the 25,000 call of 16th Jan expiry. So we buy 2 units, we sell 2 units, a completely hedged position, biased on the upside.
So what would be, in your view, the levels for today? Where do you see the Nifty and the Bank Nifty ending, Rahul?
So currently today's expiry, as you've seen the last 2 expiries, can be very choppy. On the bottom end, we don't expect 23,500 to get taken out now, although that is about 250 points from here. Unfortunately, that's the only level of support. And on the upside, you will see an accelerated movement only and only above 24,100. So the range per se for today can be tepid on the upside, but the downside is still 23,500. So between 23,500 and 920 odd could be the range for the day. The best way to play today's expiry, in my opinion, is to maybe take a call spread on the upside and buy a put on the downside. This would give you a range, or if Nifty tends to move on either side with a more bias on the downside. That would be or could be a prudent strategy to look for today.
Okay. Just in terms of your calls today, stock-specific derivative strategies, Rahul, let's come to that.
So on the derivative side, I don't have any stock-specific strategies, but one stock that I keenly have my eye on is VEDL. So VEDL has had a brilliant run so far and conventionally is breaking out of a very popular pattern. I'll give you some levels. It's come to a level of 460, which is a very strong level of demand. Currently, it's trading at 462. What one can look to do is once 469 gets crossed, I repeat, once 469 gets crossed, one can look for a bull call spread in the month of January, or even plain vanilla get into it as cash. The levels on cash would be once 469 is crossed to keep a stop loss at about 459. And targets one can expect is 490. So VADL is on my radar for the next coming few weeks.
Rahul, can you just explain this strategy once more? You are saying if it crosses 469, then and only then, right, you are not doing a plain vanilla buy any which ways. You're doing a strategy of sorts, right? Can you explain that once more?
Sure. So the current market price is 462. It's come and stopped at a very, very critical buy level. Now, once we see some momentum from this buy level, we don't want to catch a falling knife. Once we see some kind of momentum from this buy level is where we want to initiate any kind of strategy. So 469, once you see prices crossing, you can enter a simple bull call spread. What do I mean by that? You can buy the 480 call and sell the 500 call of January expiry. The advantage of any spread, as I'm sure viewers would know, is it keeps your risk limited on the downside. And of course, it keeps your reward also limited on the upside. For those people who are looking to vanilla enter in cash, once 469 gets crossed, you can keep a stop loss at 459, a small 10 rupee stop loss, and play for a target of 490 on the upside.
So 2:1, a bit the reward to risk, or 1:2, the risk reward on this one. Okay. Thank you for explaining that in detail. Good to know. Remember, viewers, it's a conditional strategy that he's putting in. He's laying it out very clear. 460 is a point of maximum buying that is happening, but it is a falling knife right now, so he doesn't want to experiment with it. Remember, Vedanta went ex-dividend on Tuesday, and therefore some bit of that cut was also warranted. Great. Rahul, so good talking to you. Thanks much for taking the time out and being with us. Really appreciate your time. All right. All right, the profit watch list and some more stocks that should be on your list today. Seagull has executed an agreement with NHAI for a 981 crore project. Could be active today. Surya Roshni has gotten an approval for 1:1 bonus issue. Don't know if it triggers, but watch out. Wellcorp or Welspun Corp wins orders worth 130 crores. You might want to watch out for that. Ola Electric has opened 3,200 new stores as per their declaration. And watch out for an NDTV Profit special on this sometime later in the day. And BPCL is an L1 bidder for a 756 crore project. Not a stock moving news necessarily, but certainly a small positive.
Ramki Infra is the other one you should watch out for, has received a letter of approval worth 215 crores. Panacea Biotech has received a letter of approval worth 127 crores. It's all about order wins and new business right now. IFGL will be setting up greenfield facilities, and Raymond Life, because a bullish call there from Motilal Oswal. All right, Chakri Lokpriya joining us this morning, managing partner at Red Strawberry. Chakri, thank you so much for speaking with us, and a very good morning to you. Let's talk about what the movers could be in a market which is really hunting for direction. Are you looking at any of the heavyweight plays here, or are you looking at theme stock specific where there are clear order wins in play? Are you seeing that as a short-term move?
Good morning. If you look at the overall index, the way it's worked out, it's roughly 60% of the companies have missed expectations, earnings expectations. And this is largely because, their revenue growth had slowed down, or there was a miss on margin because of multiple reasons depending on the company. So basically, the demand, so the top line grew and is expected to grow at about 7%. Inflation is about 5, 6 to 7%. So which means companies are growing in line with the inflation, which is not great news for the stock market. So against that thing, now your question is very relevant in terms of where will the earnings, or rather where would the revenue grow much faster than 7%, which is the index? I think that is largely in very few pockets, which is IT, some of the export-driven companies, and maybe some of the industrials.
Okay. Chakri, this is the classic period, right, wherein NAV management comes into play. You can see some wild swings in the SMID stocks, etc. Do you expect something like this? And would you take advantage of some of the dips that have come into a lot of mid-cap names, Chakri, to tactically allocate small positions in an uncertain 2025 environment?
Now, if you look at the large cap versus the mid cap, the large cap is actually where the earnings misses were far higher than some of the mid caps in general, at a broad level. So if you look at, metals have been weak, pharma has been okay, financials well-known, earnings have, margins have contracted. So against this backdrop, I think, in the mid cap, you have a larger playing field in choosing. And where is that? I think it's still in some of the industrials where, companies like Siemens, they're completely missed revenues, and EPSs were down like about 10-15%, missed expectations. So I think that's where the thing, whereas the stocks have corrected 30-40%. So I think that's where we need to look out for. And those are largely still in the PSUs and both banks as well as non-banks.
The big question really, Chakri, and I'm just wondering, and we're in that mode where we're looking forward to 2025 now. A lot of conversations, and we were having this very interesting conversation with Hiren Ved the other day, who is saying that he is just not excited about banks right now. But would you say that there is some upside potential in the majors, the good old HDFC, ICICI, private bank plays, and Axis? Axis is featuring on a lot of lists from brokerages this time round as a favorite for 2025?
Banks are the primary beneficiaries of any uptake in any economic activity. Economic activity has slowed down both at the GDP level, which has now come down to about 5.5–6%, and earnings at the corporate level have also slowed down. Now, the Nifty is expected to grow next year at roughly between 7–8% EPS growth. Now, that's a very poor number. And so the whole expectation is FY27 earnings will grow. So against that backdrop, which means what? Companies are not spending on capex, companies are not expanding offices, services companies are not expanding operations. So now all this requires credit, and that credit comes from banks and financial institutions. So they will be the primary beneficiaries, and they have also corrected, whether it's PSU banks or whether it's private banks, all of them have corrected in valuations. So I think RBI's actions will hold the key in, and I think once that happens, that is the rate cut, at that point I think banks will start performing.
Okay. Now, viewers, one interesting thing that happened, and we spoke about it, right, that Tuesday saw a clutch of the Tata Group stocks move higher in trade, presumably on the expected benefits out of a listing of Tata Capital. I mean, just look at the gains that came in a TRF, Tata Chemicals, automotive stamping, arts and engineering, etc. Some very strong gains there. Chakri, have you looked at this? I mean, there will be some deadlines by which Tata Capital lists, if it does, but the valuations will always be unknown. The market, of course, loves to speculate, take these stocks higher, but there might be some merit to this as well. So I would love to know from you, have you looked at this piece, of course, and is there merit in trying to own some of these well-managed Tata Group companies, if they are within this space, within this list, which might also benefit out of a potential Tata Capital listing at good valuations?
Tata Capital's move is because of it needs to align itself with RBI's guidelines for upper layer NBFCs. So now if that happens, then it's going to be, they're going to probably raise about 12 to 15,000 crores. Then if you look down at companies like Tata Chemicals, which own about 4–5% of Tata Capital, then Tata Motors maybe about 3–4%, and so those are like so that is the valuation benefit of what price the Tata Capital lists at will benefit whether it's a Tata Chemicals or a Tata Motors and a few other companies. The others have even smaller shareholdings. So I don't think one should really expect big fireworks in a Tata Chemicals or a Tata Motors just because of a Tata Capital listing.
Yeah, I mean, big fireworks maybe for a momentary play. I'm just wondering, Chakri, what is your top call this morning? I mean, when you're going into the trading morning, what are the sectors of the stocks you're looking at?
Today is going to be a mixed bag because, on the one hand, the US market continues to go from strength to strength, whereas India is struggling to find direction, and for reasons that we've just discussed. So I think, what is corrected, again, banks have corrected quite a lot. Some of the IT companies are, so what I would do in this market is, buy the IT, HCLT, KPIT, Cummins, Cyient. These are the names where at least earnings protection is there.
Okay, thank you for that, Chakri, but stay on with us. We're going to take a very, very short break. We're coming back just a couple of minutes before the pre-open session, and we'll tell you what your top trades should be this morning. Stay tuned.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Welcome back. About 2 minutes left for pre-open. Just want to quickly look at the implied. I mean, it's going to become a redundant marker in a few minutes from now. I'll take heart, if at all, from the fact that at least it's climbed in the last, 1 hour or so that we've been speaking. But you're not going to have a fireworks kind of day. That's pretty much sure. In fact, Shrikant Chauhan is joining us now, Executive Vice President and Head Equity Research at Kotak Securities. Very good morning, Shrikant. Always great to speak with you here on India Market Open. What is the kind of day that you think we're going to see for the Nifty and the Bank Nifty? Let's start with Nifty, since you have the monthly expiry as well.
Good morning, Tamanna. Good morning, everyone. I think, the markets are going to remain in a range because there is good amount of call writing lined up at 23,800 to 24,000. So between these levels, there is good amount of call writing, and unless and until the market is crossing the level of 200-day simple moving average, which is around 23,870, and coincidentally, if we go through with the option pain price, then that is also around the same level. So about 23,870, we are expecting market to enter into short covering mode. Till then, I'm expecting market to remain in a range. On the downside also, there is good amount of put writing, huge amount of put writing at 23,600 and 500 levels. So on the downside also, it is not that easy for the market to break the level of 23,500. But yes, in case if we see the currency is dropping further from 85.20 to let's say 85.30, 35, then in that case, there is a possibility that we may see further more weakness in the market. But broadly, if we see the overall setup of the market and considering the global macros, which are still unfavorable for emerging markets, I'm of the view that the markets are going to remain under pressure. And in case if there is any rally, then that is also going to get sold off. So today we may see some maybe short covering sort of activity in the second half if we see the market is crossing the important level. Otherwise, I'm of the view that in the near term, we are going to see further more weakness in the market. And for the Bank Nifty, 51,500 is the level. Above that only we can expect bullishness or some short-term strength in the market. Otherwise, there also I'm expecting to fall further close to 50,500.
Okay, 50,500 on the Bank Nifty. So then would you say it is a day to go long at all on the Nifty? I mean, it's the first few seconds of pre-open trade. So wait for that to settle. That's, for all of our viewers. But would you say it's a day to go long on the Nifty? Or
no,
wait and watch?
I think it is still not advisable to go long at the beginning. Let the market cross the level of 23,870. Because see, today, and if we consider the data of last 5 days, then unless and until the market is crossing the option writing price, we are not going to see any short covering in this market. So there is and it's a monthly expiration. So whenever there is a monthly expiration and the markets are in a range, in a broader range, most of the time we see the market closes very close to the equilibrium level, let's say somewhere close to 23,700 or 600 sort of level. But in the first half, if we see the market is crossing 23,870, then only we can see some bullishness. So it is advisable to take a trending bet in this market instead of taking any contra bet.
And okay, let's get your top picks very quickly.
See, in this market, if there is any upward activity in the near term, then we can expect that out of Jindal Steel and Power from the commodity space, because there we are seeing some stability. So Jindal Steel and Power, which is around some 930, 940 levels, there I am expecting a move towards 965, 970 in the near term, and we can keep a stop loss somewhere close to 920. The other stock on which I am bullish is HDFC Bank. The reason is because it is still into that uptrend in the long run as well as in the short term. So from here, the stock can move towards the levels of 1850 or 1860 in the near term. And in case if there is any correction, then I'm not expecting stock to fall below the levels of 1770 so easily. So 1770 should be the final stop loss for creating any long position at current levels.
Okay. Thanks for those recommendations as well. Now, in one of the calls that we've this morning, in fact, a key brokerage call, you could argue, Motilal Oswal has a note on TCI. They're saying that they expect a weak volume trend from the logistics players, and it has a few other headwinds as well. So Harsh Johnson with the details of that note. Harsh, morning again. What does the note say?
Well, they are in fact reiterating their stance with regard to target price. 13% upside is what they see from here. Neutral kind of rating. They believe weak volumes will likely continue through the rest of FY25. Near term, there are headwinds. Now, weak rural demand, consumption slowdown, elevated inflation, all of that is contributing to the weakness. They are expecting weak demand from MSME customers also, along with rising costs to continue to somewhere keep a lid on operational efficiency. The company does not expect to take any price hikes currently, but they are expecting the company to see a 5% to 10% price hike in the near term. And this is around 8 to 10% CAGR in volume, revenue and profit after tax over FY24 to 27. Upside being 13%, target price being 940. Now, one thing I want to kind of carve out, brokerage downgraded the stock's rating in October 2024 on the back of both volume as well as profitability concerns. So they downgraded it, they've kind of held on to their neutral rating as of now.
Okay, well, so that's on this one, but Harsh, I believe Motilal Oswal has maintained a buy on Raymond Lifestyle. By any chance, do you have the details of that note? Seems an interesting one.
Yeah, very interesting this one, Neeraj. So I want to first off carve out 49% upside is what Motilal sees on Raymond Lifestyle. Again, they're maintaining their buy rating, no changes here, 3,000 being the target price. They're just kind of reassessing everything that's happening with Raymond. One, they believe that renewed growth focus, working capital discipline, better balance sheet management, as well as value re-rating, all of that should contribute to good solid returns over the medium term for shareholders. You also have a scale up in the distribution network, especially in branded apparels. This is going to be a key focus area for the company, and they believe that the company will well benefit from this. Successful execution of Ethnics, which is of course their Indian brand, to help, or rather their wedding wear brand, will help the company become a larger player in the unorganized India ethnic wear industry. They are expecting headwinds, especially in garment exporting countries, which should bode well for Raymond in particular. So likely Raymond to benefit going into that. They are expecting a 9 to 11% revenue, EBITDA as well as PAT CAGR over FY24 to 27, and despite that, 49% upside on the stock. So that's what really stood out for me.
Okay. Thank you so much for that, Harsh. So Raymond Lifestyle already doing okay. What's moving first few minutes of trade? I mean, a mixed bag and a bit of a quiet morning. I see Rajesh exports buzzing, about 4% up. Nalco is doing okay. Prince Pipes moving a bit. United Spirits maybe to, at the back of good sales in this period. Maybe that's one trigger. But nothing standing out per se, at least for me, Neeraj, from what I'm seeing. Even on the downside, maybe a 5-star Anupam Rasayan. Gland Pharma, yes, because they've got observations from the FDA, so that's a bit of a downer for Gland Pharma, so that's moving, but not massively. I think you're going to see a bit of a thin trade and range-bound kind of day today.
Yeah, that certainly seems like it, and just the point being that can specific stocks do the trick, which is what we've been talking about almost every single minute of the last 1 hour and 6 minutes of trade. But Chakri, do you have any thoughts on, for example, the Raymond group of stocks, and do you like any of them? Why or why not?
The Raymond Lifestyle is actually quite interesting in terms of they're expanding into areas which are, Raymond was always known for its Western suit wears. And now if they're expanding into an Indian ethnic, which is a maneuver type of business, now whether the same customer can walk into a store who's looking for a suit and now looking for an Indian ethnic wear is yet to be seen. But the distribution expansion across the nation will help them in greater reach. Their export business is clearly well positioned because exports as an area will clearly do well. Anything exports from India are likely to do better than domestic, at least in the short run. So the ethnic wear bit is a bit unknown, and the revenue associated with that might actually, I would discount from the upsides that are out there.
Okay, so you are liking Raymond as an option. I mean, recently listed, so I don't know how much Shrikant wants to add on the charts. But Shrikant, in terms of what's moving, I mean, you talked about HDFC Bank, and I thought, I found that a little interesting because fundamentally, at least, banks are not finding those many takers or that much excitement right now, whether it's economic outlook or deposit creation concerns. But any others in the BFSI space, or is this specific to HDFC Bank just on where the charts are right now?
Yes, if we consider the relative outperformance from the private bank space, then in that HDFC Bank is showing better strength as compared to even I can say Axis Bank or ICICI Bank. And as we are entering into the quarterly results season, I am expecting this stock to come under some specific buying interest if there is any correction in the near term. Also, if there is any rally, let's say because of any breakout sort of formation, then I think that should come up from the large cap companies or those who are like part of the index. Right now, Reliance is not participating, Bajaj Finance is not participating, which are heavyweights, Hindustan Lever, as well as I can see even ITC. So all these stocks are like showing signs of sluggishness. And if we consider all these baskets, then in that, yes, HDFC Bank should do well. That's the overall view. But yes, if we go through with few housing companies, then in that we like other housing finance as well as Awas housing. So there I'm expecting some maybe sideways sort of activity for in the near term, but in the medium to long run, I'm expecting this stocks should also do well. So from the housing finance companies, we need to be we need to be more in terms of active in terms of taking trading calls or even positional calls at current levels, because most of these stocks have fallen to their extreme levels or at crucial support levels. So from here, I'm expecting other housing finance to move towards again 500, 550 sort of levels in the medium term. And for Awas also, there is like a minimum downside. So broadly, we should look for BFSI, but in that banks as well as housing finance companies.
Okay. Well, fair call. Now, just trying to see as the pre-open rate settled down, right? I mean, we marked some stocks and I mean, movements or the lack of them. I don't know if Godrej Agrovet has some news bit to it or otherwise, but that's the interesting mover. Okay, so here's the deal. Shrikant, we know that the ones which have been in momentum, if you will, in the last few days have been the EMS stocks, right? And every company has some news bit to it. The stocks have done very well, from a Dixon to an Amber to whatever else. Is there something that you like within that bucket for a trade in what otherwise promises to be a quiet market?
Yeah, I think see, like most of these stocks are like forming some continuation formation on a regular basis. Like Amber has also spent a lot of time between the range of 7,200 and 5,600, almost 2 months. And later on, we saw breakout sort of formation. So similar sort of formation we witnessed in Dixon Technologies. So in that space, if any specific stock to really buy with a short-term view or with a medium-term view, then I think Amber Enterprises should be on the watch list, because there the stock has broken its previous high, and it has already spent a lot of time within the range of 7,000 and 5,600, and now it is breaking out of that. The volume-based activity is also there. So from here, from current levels, the stock can move to the levels of at least 7,500, 7,600 in the near term. That's the overall view. And in this market where there is like a lot of sluggishness, the stock is crossing its previous high or all-time high. That means that definitely there is a strength, and also the volume participation is indicating us that there is like good amount of participation from experts. So I am of the view that yes, Amber Enterprises should be on the watch list. We also like Dixon based on its technical formation, and currently it is correcting from the high. So in case if the stock falls to the levels of 17,300, 17,400, then there we should look for taking some contra bets of going long with a target of 18,000, 18,300.
Wow, okay. And Chakri, same question to you. But because Amber has some news, Dixon has gained, Keynes Tech, very expensive stocks these. Would you have them in your portfolio? Could you buy them afresh as well?
You know, Keynes, Dixon, Amber, all these companies have one thing in common, as they will all benefit from a revival of the export markets. And the export market bit of it is something which is looking more promising than domestic demand growth. So from that perspective, you know, all these companies, if you rewind back a couple of years ago, they were struggling when there was an export slowdown. So clearly, yes, the valuations are expensive, but the revenue, the visibility is far higher. So, you know, I would accumulate these stocks because in bits and pieces, because they are a bit expensive.
Okay, a couple of stocks that we should talk about before we go in. I'm wondering if you are tracking, Shrikant, Cello World. There's a positive note out today. Maybe that's why some movement. We spoke about Tata investment fundamentally, but on this on the charts, do you see anything interesting in a Tata investment might move today as well? And the third one I'll give you is PNC Infra.
Okay. So if we just go through with the Cello, then it is falling consistently from its highs and it is forming lower top, lower bottom series. But at the same time, it is available at its 52-week lows, around 740, 720. So at these levels, still, if we go through with the technicals, then the indications are not there to take any contra bet or going long sort of bet in this market. But yes, if there is any reversal formation after this particular note or maybe in next few days, then we should look for taking some long bet with a view that the stock is forming double bottom or maybe multiple bottom sort of formation. But for PNC Infra, there I am of the view that it is very close to its crucial support levels. And a few days back, there was bulk deal. So based on that, at these levels, around 308, 310 levels, it's a buy. And we can keep stop loss at 290 or 280, which was its previous low. 280 should be the final stop loss. And again, we can expect...
I'll have to just come in there, Shrikant. Sorry, I'll have to cut you there because the markets are just starting off. So let's get the markets going first and then we'll come back to you with the third stock that was pending. But here's how the markets are starting off. 1/3% in the green. So mirroring what Asia is doing, but I reckon the volumes would be thin. Nifty IT, 1/4%. Banks, 0.5%. Banks are leading the way and yet the index is down, which means some other indices, and we'll get to know that once we get the heat map up. But just a word on the mid cap and the small cap indices too, 1/4% in the green. Let's get the heat map, see what's not doing well. Actually not too much really, maybe a little bit of FMCG, Britannia, HUL, etc. Life insurance looking slightly wobbly, but a fair degree of green, muted but in the green. So BPCL up 1.24% higher. I doubt the news was so strong. Let's see if it sustains this. But banks, ICICI, IndusInd, SBI, Kotak. So it's bank nifty per se, and SBI too. It's all about banks really. Small gains, but in the last 1 month at least, I've not seen such high participation from banks at the start. Let's see if this sustains. Maruti and Bajaj Auto are the remaining ones which are doing well. There is some strength in ITC as well. So that's the long and short of it. Banks on one side, FMCG on the other, with ITC somewhere in between. But smart move for banks and a BPCL, Tamanna.
Interesting to see banks making that kind of a comeback, definitely. And index also not looking bad at all. Let's pull up the sectoral heat map just for a second and look at what the bank nifty is doing right there, up about 1% on a otherwise very, very dull day, which shows you that there is interest there. It's all about the banks, Nifty Bank, Private Bank, Nifty PSU Bank. So the first three sectoral indices to be up or the highest moves this morning, first four actually, are all in the BFSI space. That's telling you where the rally is, if at all, today. On the downside, Nifty Realty about 0.5% down, hurting a bit over there. Interesting report today about how supply is shrinking. Even as demand goes up, supply is not coming in at that pace in key markets. The mid-cap 100 completely flat. The broader indices have taken a snooze. You're not seeing anything happening there as well. So specific stocks then that we should look at and that we spoke about today. Let's look at what Seagull is doing. We told you that they've executed an agreement with the National Highway Authority of India for about 900 odd crores, 981 to be specific. The stock about 5.5% up. So remember, this is a market where it's all about stock picking, and that's what we help you do every morning. I want to look at what's happening with Surya Roshni. They've received approval for a 1:1 bonus. Is that leading to a bit of an up move? Yes, it is, about 2.5% up. Welspun Corp has won orders worth 130 crores. The stock is showing some movement. Ola Electric Mobility on our watch list. They've said that they've opened 3,200 new stores. Stock is reacting positively, about 4.5% up. BPCL, lowest bidder for a project worth 756 crores. You're seeing it as the top mover on the Nifty this morning, about 1% up. Ramkey Infrastructures have received an LOA worth 215 crores. Suez Panesia Biotech, both of them because of new LOAs. Panesha Biotech is the one that's actually moving about 5% up this morning. IFGL Refractories will be setting up a greenfield facility. Is anything happening there? Miley up in the green, about 0.5% up. And let's look at Raymond Lifestyle, whether that Motilal Oswal note has helped. Yes, it has to some extent, 2.5% up nearly in this morning's trade. So there are winners there, I would say, Neeraj, tougher to spot them, but definitely I would say new approvals is definitely something that's moving, and I suppose a Gland Pharma would be down in the dumps.
Yeah, actually, let's pull that up and let's see what Gland Pharma is up to as well before we talk about others. Because there's Rajesh Exports, which is also gotten it, but if we can get a Gland Pharma on the screen, actually not too bad, kind of doing okay. Prudent Corporate Advisory is down about 2.5. It's not a very highly traded stock, but it's down in trade today. Hathway Cable is down about 7%, if I'm not wrong. So that one's probably had some downticks to itself. Rajesh Exports on the upside. Is Jack Heavy Engineering is about 6% as well. Panesha Biotech, that UNICEF order, has gotten that stock higher for sure. So Taman, I think, marked it also, but that one is interesting. Okay, Shrikant, opening thoughts from you. You also were finishing the point on the third one, but it's just remarkable what the Bank Nifty is doing this morning. Opening thoughts there.
Yeah, correct. Due to this uncertain sort of activity in the market and overall the uncertainty in terms of news flow, whenever there is any some upward activity we see in the market, specifically we see buying interest in bank stocks, because most of these stocks are available at decent valuations as compared to other sectors or other baskets. And even if we consider their upside in terms of fundamental value, then most of these stocks are available at nearly 10-15% lower from their face value, fair values. So broadly, I am of the view that I think this particular space should remain in the limelight for next couple of weeks. That's the overall view, as the markets are in a range. And today, if we see any further more activity, then we can expect that activity out of maybe ITC as well as HDFC Bank. So these two stocks should be on the watch list. From the oil and gas space, apart from BPCL, we like GAIL, which is around 199-200 levels. And there also we are seeing positive reversal formation. Technical formation is indicating us that it is heading for the levels of 215 in next few days. So it will take some time, but at current level, it's a buy with a stop loss close to 195.
Okay, I just want to mark, and too early, if we can just pull up the charts for now, just to show a bit of a surge that we're seeing in all three indices on your screen, the Sensex Nifty and the Bank Nifty. Yeah, there's the Nifty showing an up move above the 23,800 level as well, pretty comfortably. Shrikant, do you want to look at what the Nifty trend is for today, looking at what the opening has been? Pretty decent opening actually.
Yeah, actually it was expected that the market can open somewhere close to 23,870, 865 sort of levels based on the overall rally in the US markets on Tuesday. But in the morning when I was going through with the Asian markets and global macros, they were still at an unchanged levels. So I'm of the view that till the market is not crossing 23,870, we need to be careful in this market, because on Tuesday also and on Monday when there was rally in the market, we saw good amount of selling at 23,850, 870. And here around this level, the market is having resistance of 200 days simple moving average. And most of the time, this particular average act as major resistance for the market, because most of the institutions, most of the mutual fund managers and top players, they consider this as the crucial level. And based on that, they design their trading strategy or investment strategy. So I'm of the view that close to these levels, they must be having some position. I'm to say they must be liquidating some long positions. But today, on the day of monthly expiration, if we see the market is crossing this level, then we can expect short covering in the market. So let the market cross this level, and then we should look for taking some trending bet in this market. Till then, we need to be.
Sorry, which is the level you mentioned?
Sorry.
Which is the level you mentioned?
That is 23,870.
Okay. 23,000.
Close to those levels.
Yeah, you're actually there. So, okay, suppose we see a 23,870, which is likely in the next, few minutes or so.
Maybe few minutes.
Yeah, what is the trade then?
Yeah, in that case, definitely we should look for taking long bid, because see, on the day of monthly expiry, if we see the market is crossing the crucial level, which acted as resistance for last 3 days, and it's a value of 200 days average, I think then in that case short covering is more likely.
Okay, so 23,870 is the level to watch out for the Nifty. If that crosses, look at a long trade that's coming in from Shrikant Chauhan. In the first few minutes of opening, Shrikant, anything that you've spotted which is interesting? I mean, we saw a Seagull showing some good moves this morning, a Panacea Biotech showing some good moves this morning. Any of these that you find interesting? And a BPCL actually, if I may add.
Yeah, BPCL is also showing some strength, but at the same time, if we go through with few banks, then in that State Bank of India, there I'm seeing some buying interest. The stock is very close to its important support levels like 810, 805, and from there it is reversing. So from here, again, stock can move towards 845, 850 sort of level. So State Bank should be on the watch list. Along with that, we like GAIL, Gas Authority, which is around 199, 198 sort of levels, and the stock can move towards 210 or 215. We also like a few contra bets like Bajaj Auto, which is currently trading at 88.50. The stock has fallen to its extreme level, but it is diverging positively. That means that in the near term, we can see some rebound in the stock. So from here, the stock can move towards 9200 sort of level. There also, I think we need to keep a close watch.
Okay. Chakri, we spoke about banks earlier on in the day. Let's leave that out but while they're active, I mean, we discussed banks a lot. 2024 has been a year of capital market plays, but the point being, there are now some restrictions that have come on brokers, right? And very likely that Q3 will see a sharp dip in revenues or profitabilities for brokers because the derivative volumes would have been curtailed. So if you want to play the capital market story in India, would you play it via AMCs which have lower yields, or you play it via brokers which have got these restrictions, or do you play via wealth firms which thus far seem a bit unscathed? So out of the 3 or 4 buckets out there, what do you choose and why?
All these three have been subject to a number of pricing restrictions rather, and also the volumes have been hit. And I think these are the kinds of moves, while that's left to best to the authorities to figure out, are best left aside simply because large amount of uncertainty. Within that, the wealth firms look slightly more better off simply because they have not run so much, and second, the regulations there are already, the pricing there has come off quite significantly.
I want to ask you about Ola Electric. Ola Electric buzzing this morning, Chakri, and the trigger, of course, is the 3,200 new stores they've opened, now taking their total to 4,000. The pace at which this is being announced is truly astonishing, at a very fast pace. But I just want to know from you whether you think this kind of comes back and combats some of those concerns on the service, etc. for Ola.
Services concerns are usually a part and parcel of any manufacturing company. So I think the stock has, from that perspective, taken more than its fair share of being hit. But that aside, the company itself listed at a very significant premium versus TVS Motors, Bajaj Auto, and the established players who have very strong EV franchises. So and after the correction, still the valuation is still higher than the traditional players like TVS Motors and Bajaj Auto. Therefore, I would stay away from Ola Motors. But for a positional investment, maybe yes, but not as a long-term one.
Okay, not in the long term. Chakri, as we wrap up 2024, we'll now talk again straight in 2025. But if you had to look at one large cap or one mid cap, let's say, and I'm not saying that you are recommending that people should go out and buy it today or people should buy it at all. People should study on their own. But if you had to give us one large cap stock that you think business is looking attractive and one mid cap stock where the business is looking attractive for a 12 to 24 month perspective, which one would that be?
Amongst the mid caps, banks, Canara Bank, the company is very well positioned. The bank has a very strong capital base. The loan growth is strong. Valuations is under a book value. And I think so as and when economic activity picks up, it'll benefit most. Second is Adani Ports. Adani Ports business is very domestic, very secular, will not suffer from an earnings downgrade. In fact, its earnings are growing at 25% or more versus the Nifty is growing at 7%. Its valuations have corrected, so Adani Ports.
Okay. Okay, Jamin, thanks so much for tuning in, coming in and giving us your perspective. Really appreciate your time this morning, and happy 2025 to both of you.
Happy New Year.
Thank you. Just before we get to Harsh, since Chakri spoke about Adani Ports, if we can, I just want to bring up the list of stocks that Harsh had highlighted in the morning. These are the large cap names, Nifty 50 names, which have the highest potential upside as per the consensus Bloomberg target price. Now, for people who've tuned in right now, just what the methodology is that these stocks are covered by a wide range of analysts. All of them give a target price. The consensus average target price is displayed on Bloomberg, and Harsh has taken a list of the Nifty 50 highest upsides between the current price and the consensus target price for 2025. Adani Enterprises tops that list. Then there is IndusInd, SBI Life, Adani Ports, 41% upside. Chakri was speaking about Adani Ports, and which is why I thought this list was important. But watch out for some of these stocks. There are 4 more, by the way. Coal India is the 5th one, and then there are 4 more. Tata Consumer, NTPC, Tata Motors, ONGC. So watch out for all of these names. So these are some of the stocks that may not have had done very well. But I'll tell you a pocket that has done really well, and that is energy. All forms of power, distribution, transmission, IPPs, CPPs have all done well. One such name is Hitachi Energy. It's one of the top multi-baggers of 2024. Look at the year-to-date chart and you will see the stock soaring over 175% in this calendar. But will the outperformance continue in 2025? Well, first let's get in my colleague Harsh to talk about details about Hitachi Energy. Harsh.
Well, you're right, Neeraj. So 2.5 bagger this year. It's had a phenomenal run. But the unique part about this one is a large part of those gains have come in the first 4 months, 5 months of the year. The last 6 odd months, the stock has not done much. It's just done about 12%. And out of that, 14.5% has come in the last 1 month alone. So the stock has been a buzz in the last 1 month, but a large part of the returns, as you can see on that chart in front of you, has come in the first 5 to 6 months of the year. So that really stood out for me. Now, in terms of what Hitachi does, it's the Indian arm of Hitachi Energy into grid automation, grid integration, high voltage products, as well as transformers. Mind you, transformers is a space which is currently in high demand. In terms of order book position, it has 8,900 crore worth of orders, which the management expects will get fulfilled over the next 26 months. The order book in Q2 alone increased by almost 2,000 crore, which is around a 12% growth YOY. So order book growing as well. So those are a couple of quick positives. With regard to where the orders are coming from in FY24 as of now, utilities and renewables contributes around 60% of that book. Industries is around 20%, and transport is the balance 22 odd percent. That's how it really stacks up. And in terms of financial performance, we've seen a healthy bounce back in FY24 versus FY23. FY23 saw a bit of degrowth. Margins also saw an uptick, but FY22 was the standout year. Can it replicate that will be the question. And where the growth is coming from, I think that was really, really interesting. Look at transmission, around 34%, industries 78%. It's also into data centers, which has grown 3.5 times or 346%, so 4.5 times in that sense. Railway and metro has degrown in this environment, so will be interesting to understand why. And renewables has gone up by 135%. Outlook forward, they've announced 2,000 crore of capex spread over 4 to 5 years. The capex offerings or rather expansion is towards offerings across T&D, data centers and railways. They're anticipating investment in green hydrogen as well as power transmission. they're maintaining guidance for double-digit margins by year end. And if that were to happen, that will be extremely strong. The company is also bidding on several projects, expecting at least one HVDC high voltage project to come through sometime this year. So a lot of interesting things happening. We'll be very keen to understand from management as to how that's playing out.
Yep, Harsh, thanks so much for that. Let me try and do that, Harsh. Remember, the Hitachi Energy is in a silent period, so they will be constrained to talk too much about the company at large. We'll try and talk about industry and try and get some color about how Hitachi's participation in that could be. Mr. N. Venu, MD and CEO of India and South Asia of Hitachi Energy, joins us right now on the show. Mr. Venu, good morning. Thank you so much for taking the time out and speaking to us.
Good morning and festival greetings to all of you and season greetings as well.
Same to you and your team at Hitachi. I'm Neeraj here.
Thank you.
Can I understand you're in a silent period, Mr. Venu. So if there are questions that I ask inadvertently, which might lead you to give company specific information, feel free to not answer that.
Sure,
but
sure.
let me try and, for the benefit of viewers, let me try and understand from you. Do you believe that for the industry, and specific pockets or subsets within the industry where you operate in, the kind of growth opportunities and the kind of growth that has been seen in the last 12, 18, 24 months, do you think that there is visibility of similar or better growth for the next 1, 2, 3 years or longer?
Yeah, absolutely. So thank you very much for having you in your show. And India's energy transition is really driving a lot of tailwinds. And if I take the one data point of the National Electricity Bond NEP 2024, which rolled out this year, it talks about investments of 9.15 lakh crore from now to FY32. And where these investments are going is basically 191,000 circuit kilometer of a transmission line and almost 12,000 GVA of transformation capacity. And you're talking about 33 gigawatt of HVDC projects going into that. So all these things, what exactly is showing is basically that the energy transition is accelerating. And in my view, it's only going to go at least a couple of years from now. It's not going to be 1 year or 2 years. And our view is that it is going to be a multi-year from now, at least until FY32 in that. Because you need a robust for energy transition to take place. We need the renewable energy capacity has to happen. That's the one aspect and the second one is the grid needs to be robust and modernized. When I say modernized means anywhere you are able to generate the solar, you are able to bring it to the load center, and that's only possible if you have a very robust, flexible grids, and that's exactly these investments are going to go up. The NEP 24 is also giving a very visibility to all the stakeholders like the developers, the stakeholders like the financiers, and also like us, original equipment manufacturers, and many other stakeholders. We are able to scale up our product, our manufacturing lines, our productions, etc. In that, we have seen this coming in much ahead of the curve. In the last 24 months, we have actually added 4 greenfield factories. And we are expanding our factories are expanding our capacities in anticipation of this demand is going to be there, not 1 year, but it's a multi-year. The energy transition, in my view, is going to accelerate in the coming years.
So what does this hold in store for businesses such as yours, not just Hitachi, but your businesses? I mean, because you've come off a base of performance. The sector was clouded maybe until 3 years ago. Suddenly there is visibility. There's a lot of visibility. You might have availability of finances as well, both from lenders as well as from equity investors who might want to give the much desired equity capital. Maybe your company doesn't need it, but by and large, I'm saying. So what does this do for executors? Is it a bed of roses? I know it's difficult work, but I'm just saying the journey, is it looking very smooth? If you can manage things well till 2032, as you said?
Yeah, any business is not smooth, right? We all know that. And but if we're coming back to the energy related investments, I think this is the need of the hour. Take for example, country has made a commitment of net zero by 2070, but that the 2070 is the one aspect. But we also made, as a country as a whole, made a very ambitious target by 2030. 2030, we want to add 500 gigawatt of renewable and 500 gigawatt of interstate transmission systems in that. So this is a huge amount of opportunity. To do that, country as a whole, we need to do 2 to 3 times more than what we have been doing it. If you're adding 18 to 20 gigawatt of renewable per year, we need to at least double it, if not 2.5 times. Same is the case on the grids, etc. in that. So there are a lot of opportunities are there. Of course, there are also challenges, in terms of land availability, in terms of the finance, and in terms of the ROW. So those things are there, but the demand is so much. We are at least able to solve many of those problems and proceed with that. And those are the opportunities are coming to companies like us, where we are actually able to in some of our product lines, we have actually doubled our product lines in some of our portfolios in that. And we are also planning in many other places of our portfolio, increasing our portfolio, because the demand what we see is quite a lot.
Okay, so now when I look at, and again, I'm not asking for a guidance, Mr. Venu, so that it doesn't kind of hit your being in a silent period. But when I look at all that you've done, right, in consortium with BHEL, you've won the first of what a lot of people say many HVDC projects. I believe there are multiple ones in the pipeline as well. I don't want specific details, but I would just love to know, basically, do you reckon that there could be, after what you've done already in 2024 in terms of order bagging, more HVDC projects out of the 4 or 5 or 6 that are to be ordered over the next couple of years? You think there is a chance that you could be bagging more, 2 or 3, if you will, in the next 2 years?
Yeah. So let me come from the industry standpoint.
Okay,
right?
fine. Yeah.
I have been saying this, we used to have in India, we means country as a whole, used to have a one HVDC project every 5-6 years, right? That was a thing. But based on the energy transition requirement, based on the grid stability modernization requirement, we need to have every year, if not one project, but at least 2 projects per year, because that's the demand is happening in that. And this HVDC technology is way back invented by us. And then today in India, 7 out of the 15 HVDC links runs through with our technology. Okay. And we have seen this coming in, the demand coming in, and we have taken a lot of actions in localizing the product portfolio. We have also announced, our power system factory in Chennai and engineering capabilities, and those are the things we have done. And then we have won the first ever project awarded through tariff-based competitive bidding, that is HVDC from Khavda to Nagpur in consortium with the BHEL in that. So we have seen another 2 or 3 are coming under bidding. And as I said, we are very actively bidding on that. Of course, we will put all our efforts to see that we win, but it is too early to comment at this point in time. All we say that we have, capabilities, both in terms of our resources, in terms of the manufacturing, things like that. And we will try our level best to win our due share.
Mr. Venu, morning, Tamanna here. You mentioned a little earlier that the demand is growing much more than anticipated, and hence, of course, all the capacity expansion, etc. I'm just trying to get a sense of, do you see that demand pipeline sustaining? Because obviously, the renewable energy push is there, a lot of states will come in, there's central projects as well. Where is that demand going to sustain from?
Yeah, sure. So let me just give you, Tamanna, one data point. A query on a chat GPT requires at least 8 to 10 times more power than the Google search. Okay, so the new age data centers, which are AI ready data centers, require far more higher power demand than the traditional data center. Many of things are getting evolved, right? So those are the things, what I'm saying, that creating a more amount of demand on the energy, more amount of demand on the networks, more amount of the demand on the whole power systems, to manage those kind of complexity arising this energy transition. New forms of the load, for example, electrical vehicles is, even though penetration in India is very slow, but still that is creating a lot of demand on those things. And similarly, many of the industries has decarbonization target. For example, Hitachi Energy, we have our own sustainable target. By 2030, we want to be carbon neutral in all operations in India in all our manufacturing factories. As we speak today, all our 19 manufacturing factories is powered to the renewable power. Okay, so same we see in the many of the high power guzzling industries like steel, cement, and those kind of things also going through this.
You're absolutely right, and very good example of ChatGPT versus Google. Yes, usage trends are changing, and you're guzzling more power. My question is the sort of timeline that you're seeing, because this first push is coming because of policy push, right? You have more states coming in, and that will reach its end before you have a bigger sea change of power consumption, don't you think? Or is that something that is not a concern?
No, that's always a concern. I'm not saying that's not a concern. But, if you really look at where this transmission-related investments are coming, it is predominantly coming from the central policy, like a CA has announced NEP. And there are also interstate transmission, within the state transmission, that's a thing. The 9.15 lakh crore of investment projected in the NEP is only for interstates. Okay, that itself is a huge amount of, tailwinds is going to create from that in that. Then we're going to have, some of the states, are already looking at modernizing their, the network of the power system. So that we are seeing in that. Yes, all the states are not in the same level of, maturity, financial things like that we do understand. The timing, etc., will take place. But if you really look at on the overall central sector standpoint, I think the tailwinds are very clearly visible, not 1 year, but multi-year from now to at least until FY32.
One final question, Mr. Venu. It looks very promising. And Mr. Venu, we would love to talk to you post your Q3 numbers are out, because understandably today we couldn't talk much about what the company has done, and rightfully so. But would love to talk to you post your Q3, because your first half is looking very promising and very interesting indeed. So I'd love to kind of talk ahead. But just one final question. Is there enough supply of reliable ancillaries for the business that you are in? I mean, I hear, maybe not for you, but maybe for T&D, I hear a lot of shortage of high voltage HVDC cables, for example, that there are not enough reliable suppliers out there, and what happens to cross-country lines, etc. Is there an issue there?
No, you're absolutely right. As I said, the demand is so much. If you really want to reach our targets of the country, we need to do 2 to 3 times more than what has been done, right? For that, everything has to be doubled. Everything has to be 2.5 times. Your capacity has to be done 2.5 times. Your skill sets, your engineering, your testing, all those things need to be at least go 2 to 3 times, depending upon the sector, depending upon the product segment, etc. And that. So, but that is, if you conventionally do what is being done, there will be some shortage in that. So that's where our approach, our discussion with all the policymakers is that we need to move from a project-based to a program-based. When I say project-based, means you bring a one project, you tender it, and your finalization will take a long time, and you engineer it, and after that, you make manufacturing. Instead of that, you tender a bulk of the projects, 2-3 projects together, and you engineer one time, you execute 3-4 times. A lot of synergies, a lot of cost benefits, and also, we are able to manage those supply chain related challenges in that. So I think that's the way, moving from project-based to program-based is the way forward to manage these supply chain challenges.
All right. Thank you so much, Mr. Venu, for joining us today. And looking forward to what the company will do in the new year. Definitely, Hitachi Energy has been a multi-bagger in 2024. Now, moving on to a fairly new player in the renewable energy space, Acme Solar. The company has received a commissioning of 1,000 megawatt capacity in Rajasthan and has won a 250 megawatt order by NHPC. Before we speak with the management on this, let's head across to Mihika, who's setting up the conversation for us.
Thank you so much for that, Tamanna. So a little bit about Acme Solar for the viewers. Well, the company is a renewable energy independent power producer, and it has a diverse portfolio which spans across solar, wind, hybrid systems, and now it's also planning to capitalize on the round-the-clock and firm and dispatchable renewable energy tenders that are coming in the industry. You have a total portfolio of around 7 gigawatts. And in terms of their financial performance, well, revenue is up 5.5% on a year-on-year basis when you adjust it, when you compare to the adjusted revenues a year ago. EBITDA has seen a 4.8% uptick, and the net profit is also up 10.6% year-on-year. In terms of the IPO, the stock did list on exchanges this year. It was subscribed 2.75 times on the final day, and the bids were led by the institutional investors. Now, the stock is listed stock did list 13% discount over the issue price of 289, and it's up 5% since its listing.
Wow. Okay. Well, Mika, thanks for that update. Now, remember, it's great to talk to a renewable energy independent power producer, right? And Nikhil Dhingra, CEO of Acme Solar, Johnson right now to talk about that and more. It's the season, or it's been a year, Nikhil, good morning, of power. We were talking to Hitachi Energy earlier in the energy transition space. You are an IPP who's done some great work since before listing and since listing too. Tell us a bit about what's been the landscape for 2024 and how do you see 2025? Because you expanded your bouquet of offerings as well, as I understand, from what used to be to what is right now.
Right. No, Neeraj, so this year has been a transitional year for the renewable energy per se. We had a big move from conventional solar and wind moving towards firm and dispatchable renewable energy and hybrid power. And these are projects which really ramp up the capacity in a far greater manner than a conventional renewable, and they channelize the renewable much better, the existing transmission capacity and the shortage of equipment, which you were talking about with Venu shortly. These modes of power address those problems far better because the utilization of the transmission capacity is much higher. So we had very great bidding happening in the last year. More than 50 gigawatt of tenders came up. A lot of new players came into the country. And of course, we saw a lot of execution also happen this year. As you have seen, the country is slated to do upwards of 25 gigawatts of solar this year. So we had the highest ever execution, and we played our part in this execution by commissioning more than a gigawatt of capacity this quarter. And we are doing our bit in the next quarters as well. So in terms of the landscape, we're quite positive about the growth year on year. Of course, to reach 500 gigawatt, we need to do more, like Venu mentioned. The existing developers need to step up. All of us need to step up and grow by much higher than what we have been doing. Even if you look at this sector, the growth rates are far higher than any other sector. But still, to reach a 500 gigawatt target as a nation, we definitely need to do more.
Okay, just good morning, Mr. Dhingra. Tamanna here. Just coming specifically to your NHPC order, which has come in this project, 250 megawatts at a tariff of 4.56 per unit. Just give us some perspective and details on this. What is the kind of timelines you're looking at it? What is the kind of revenue potential that you're penciling in?
Sure. So this tender is a part of those firm and dispatchable renewable energy tender I was speaking about. In this tender, we have to provide peak power to the client, which will be a state discom, and of course NHPC will have a PSA with them, and we will have a PPA with NHPC. Of course, it's a 25-year contract of supply of power, and the tariff, as you rightly said, is 4.56. So in this, typically the revenue is almost double of what you do in solar. Solar, you typically do a revenue at 2.44, revenue of around 70 lakh per megawatt. In this, the revenue will be close to, you can say, around 1.8 crore per megawatt. So much higher revenue, much higher capex. But of course, the capex is typically around 3 times of solar, but the revenue is typically around 4 times of solar. So the return on capital are slightly higher. But of course, the project is slightly more complex because you need to put up all 3 capacities, be it solar, wind, and battery. And these are all done on national grid. So the integration is not an issue. But in terms of the sheer complexity, these are complicated projects as compared to a conventional renewable, and that's why the tariff is slightly higher than renewable. The capex is, of course, higher than renewable as well.
Does that leave margins in that sense? Because of course you're in a business with fairly healthy margins, but since you said it's more complicated, revenues are higher, but where does it leave margins?
So on the margin basis, see all the three sources of capex which we are talking about, solar, wind, and battery, they have a high EBITDA margin, typically in the range of 85 to 90%. So in this business, the key thing is capex. How are you able to manage your capex cost? Because other than interest and a very small operation and maintenance cost, there is no cost. So essentially, your capex is your real cost, which of course gets amortized through the repayment of loan and depreciation. So the margins are fairly high, and it will be high in these projects also. But of course, like I said, the capex will be high. So the margins will be similar to like how the solar business margins are.
85% or in that range, like you mentioned.
85 to 90%. Yeah, 85 to 90%.
Okay, so that makes sense. So higher revenue, higher cost, but you're saying it does not squeeze margins for these kind of projects.
We don't need to. It's just that the capex is a bit higher, so you need to put more equity. You need to take more debt because and of course you need to execute 3 projects at one time. So large land acquisition, large connectivity. So these are you can say integrated projects done at multiple locations. Wherever you find land suitable for solar, you do solar, and where you do wind, these are all connected to national grid, and you connect them together, and you put batteries at each of these locations where you have solar and wind capacities. So an integrated project, a very actually useful from a national grid perspective, because here we are using the grid much effectively than a conventional solar does. Because in a solar plant the transmission capacity is not fully utilized because the solar only generates for a specific hours of the day. But in a firm and dispatchable renewable energy plant, the grid is much more effectively utilized.
Just I want to talk about your Jaisalmer project as well for a minute, Mr. Dhingra. Give us a sense of that, because I think that has gotten finalized this December itself, and fairly large one. 1,023 megawatts of the 1,200 megawatts capacity in December has been commissioned. Give us a sense of timelines on this and a revenue picture if you can.
Sure, Tamanna. So this is a very proud moment for us in terms of this is our largest commissioning to date, and of course in terms of whole industry, it is one of the largest commissioning ever. This is a group of 4 plants, 300 megawatt into 4, built at a single location in near Jaisalmer, Sanavra village. And of course, it's one of the highest radiation zones in the country. So you get the best capacity utilization factor here, surely because the radiation is very high. And it is connected to the Fatehgarh 1 substation, which is operated by Adani. And of course, in terms of revenue potential, it will, in terms of the estimated CUF, it will do more than 800 crores of revenue per year, and so it's a fairly large addition to our portfolio. And of course, the capex for this was already done when we, of course, were listed. So and also, as you can see in our H1 results, also this was already part of the CWIP, and the debt was already taken. So the revenue for this will now actually it got charged in October. So it started producing in October, but the firm power started going in December, and we announced commissioning in December for 1,023 odd megawatts. The 170 odd megawatt will be early January. We will be adding from this plant. So this plant has a very high efficiency because there is only one transmission line connecting this large amount of power to the substation, to the Adani substation. So a very efficient use of transmission resources and very efficient use of even the O&M, because typically we build plants in configuration of 300 megawatt each. But here, since we have a 1200 megawatt plant at one location, we have a huge saving on the O&M side, which will increase the EBITDA margin for this plant as well.
Nikhil, if I may, so you have you of course you told us what the current numbers look like, right? If I'm not wrong, the current operational capacity at 2350 odd megawatts plus the Jaisalmer plant, I presume. And I believe the target is to reach 6,700 odd megawatts by FY28. Is that correct?
Right. Yes, Tarun, you're right. It's essentially calendar year 27. How we are splitting this move from, you can say, 2.5 to 7 gigawatt. In terms of the financial years, we can speak about as per the estimated PPA sign timelines. So we have 2.3 currently operational. In the next quarter, we have estimated CODs coming up for, you can say, around 500 odd megawatts, including the 170 odd which is pending at Jaisalmer. So 500 odd megawatt is targeted to be commissioned in the next quarter. You will see that we will have around 2.85 gigawatt of capacity by financial year 25. In terms of the pipeline, like you rightly mentioned, we have won the bids which aggregate take us our total capacity to 7 gigawatts. In terms of signed PPAs, because that's how everybody tracks the execution, we have currently around 1700 odd megawatts of PPA signed, and 680 megawatts of PSA has been signed by NHPC. So I'm just adding that. So it is around 2400 megawatts of PPA is signed, and around 1600 odd megawatt PPAs to be signed. But let's say these 4 gigawatt of capacity which we have to execute to take our capacity from 3 odd gigawatt to 7 odd gigawatts. So it will be executed in calendar year 26 and mid 27. And these timelines are coming from PPA timelines, because PPA gives you 2 years to execute the plant. And where the PPAs are not yet signed, we are making an assumption that those PPAs will be signed in another quarter or so.
Got it. But I'm assuming, so my final question, Nikhil, and I'm assuming a blue sky scenario that you do manage to reach these targets of what you've guided to by FY28, if I'm not wrong. What does it take your EBITDA estimates to lie, by then? And because taxation is a bit of a tricky issue, difficult to understand based on quarterly or annual basis, does profitability metric change, or does it improve, or does it remain the same until then? So just one sense, let's assume we reach 6700 megawatts, all right? What does it do to your EBITDA numbers, and what does it do to your profitability metrics?
Sure, Tarun. So the EBITDA is anyway increasing linearly. It does not get impacted by taxation, because, like you rightly said, it is a much above the line item. So EBITDA will definitely increase by manyfold, because the weighted average tariff in solar is, let's say, 2.44, but the tariff in FDRE is around 4.5. Like I said, the capex is higher, tariff is higher, so EBITDA will increase by manifold times in terms of the FY28, and the PAT also will increase by the same ratio, because the newer plants have lower depreciation in terms of the life of the plant, because it's around 3.33% annual depreciation. So you will see that the PAT level also there will be substantial improvement in terms, because our older plants had accelerated depreciation, and so we had a higher bit of depreciation both on the tax and the book level. So on both these numbers, there'll be a multiple X jump. I cannot guide you to the exact numbers, but in terms of the megawatts, these future megawatts, like I said, have a higher average tariff. Let's say our solar generates 70 lakhs per megawatt. Like I said, FDRE does closer to 2 crore per megawatt. So a higher revenue and a higher EBITDA coming in from these. And just in terms of the last year operational capacity, there was a you can say a higher tariff because they were older plants. So adjusted for all of that, there'll be a substantial jump. We will be able to give guidance whenever in terms of the megawatt, what we are building, where those projects are. But in terms of EBITDA, I'll not be able to give you a guidance today.
Just one last point, Mr. Dhingra, is because you mentioned earlier that the tricky bit is capex and of course then amortization, etc. So I just wanted to get a sense on your debt profile and your refinance strategy going into the rest of the financial year and FY26 as well. How are you expecting it to move forward? Because your H1 FY25 debt has jumped up as expected when you get a larger order book. What is the plan here?
Yes. So H1 debt was around 8,800 crores. And of course, like you said, it had jumped up because we had not yet operationalized the Jaisalmer plant in that quarter. So now that the Jaisalmer plant is up, the debt to EBITDA numbers is well within our range of 5.5. So we had operational projects of around 1,300 megawatt, which were generating an EBITDA of around 1,100 crores, and EBITDA and debt was close to 5,500 crores. So a debt to EBITDA of around 5 times from the operational asset basis. Now, since our Jaisalmer plant is up, so our operational EBITDA to operational debt will be again less than 5 times, which is very healthy if you look at the life cycle of these debt, which is more than 18-20 years. So these debt, you have to appreciate that these are long-term projects with a offtake with AAA counterparty, government counterparty for 25 years. So you get long-term debt from these financial institutions like infrastructure-focused financial institutions like PFC, REC, SBI, IREDA, and these are all 20-year debt. So we don't have to pay down these debt in a short-term basis, and they are totally linked to the cash flows of the project. They have nothing to do with the listed company. They are all done in a subsidiary, and they are linked to the cash flow profile of that project. So as we move forward, Tamanna, we will have we will be doing capex in this ratio of 75-25 because that's an accepted sort of debt to equity ratio, and EBITDA as the plant. And what happens is we have a two-year execution cycle, and we take debt typically. The large chunk of the debt comes around 8 months before the project COD. So in terms of the actual interest during construction, it's a very small number, and the debt is used for large capex item like you were talking to Venu. There are only few items like transformers and long lead item which we order in the first year. But of course, the major part of the capex happens in the second year and the last 8 months. So the construction debt stays on the books for a very small duration of time, and as you make it operational, your debt comes down to around 5 odd times of EBITDA, 5 to 5.5, which is a very healthy number. If you look at any utility, we have very little example of listed utilities, renewable utilities. You have thermal utilities listed in India for a long time. What is the difference between them and us is they have plants which are older than 5 to 10 years. So when your plants are older, around 10 years, you have a bit of a debt pay down which happens. So your debt to EBITDA reduces sharply. So which will happen with us as we age and as we reduce our debt to EBITDA levels will also come down. But when you operationalize a renewable project, because and you also have to appreciate in renewables, there is no operational cost as compared to thermal, where there is a large bit of fuel expenses because we don't need to buy any fuel. Right. So there will always be that debt to EBITDA difference between a renewable power plant and a thermal power plant.
Noted. Nikhil, all the best for a strong 2025 and beyond. Thanks so much for taking the time out. Best wishes.
Thank you. Thank you.
All right. That's Acme Solar, recent listing. Has corrected a little bit post-listing, but the management confident of better times ahead, has commissioned a large project as well recently. Let's see all of that helps them or no. But Tamanna, tell you what, age has ceased to be a constraint.
As it should be.
As it should be.
As it should be. What a fantastic story actually Neeraj spotted this morning. Did you know 79-year-old model Debbie Harry, the American singer-songwriter best known as lead vocalist of the band Blondie, fantastic band by the way, is the face of Gucci's advertising campaign for its new bag, the Blondie bags. I just think that is just so cool.
It is very, very cool, and it just and is it also a sign of the times, Tamanna, that certain brands, and if the market for luxury is moving back to the US, then it's not the young Gen Z buyer, as is the case in Asia, but the slightly older buyer in the US who's going out and buying it, and hence brands are doing that. Louis Vuitton has refurbished 3 stores in New York because China is seeing a downtick. So is this also an economic thing in addition to the fact that it is such a splendid story by itself?
I would say absolutely yes, because globally, I mean, if you cut out, of course, India and China, it's an aging population. And the older ones are the wealthier ones.
Yeah.
The loans, education loans, debt means not everyone can buy a Gucci bag. So maybe, yeah, it is 80 is the new 20.
Yeah, and you know what, viewers, we are getting somebody on the other side of the break who's not old but is wealthy, who may not be wanting to buy a Gucci but can tell all of you how to enable yourself to buy a Gucci. Nilesh Shah of Kotak Mahindra Asset Management Company joins us on the other side. Stay tuned. You don't want to miss this.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So
Back with India Market Open and on the show right now, as we said before the break, a very special guest, Nilesh Shah, MD of Kotak Mahindra Asset Management Company. Nilesh bhai, so good having you. Thank you for being in our studios, and at the onset to you and yours at Kotak and family, a very happy 2025.
Thank you, Neeraj bhai, and wish all the viewers of NDTV Profit a very happy new year.
Thank you so much. We are excited to have this next few minutes of conversation with you. Would love to understand, for somebody who is looking at the glass half full, there is enough reason to be worried. Q2 was bad. Q3 may not necessarily turn out to be great. Rupee is depreciating. There is an uncertain era of Trump 2.0 out there as well. How do you juxtapose all of this into a frame and then try and build out your picture for 2025?
So, if we look at President Trump, obviously we need to engage with their administration better. India-US partnership has always created win-win situation. We solved their Y2K problem. Until today, we would have given billions of dollars of lines of programming. There's no ransomware there. There's no cyber security there. There's no other risk. If they would have programmed this in China, what would have happened? Their efficiency has gone up, their costs have come down, their security is enhanced. Through collaboration with India, we also benefit. We have done the same thing in generic medicine. Can this be extended into other sectors? So we need to engage with US better, and I'm sure they will figure out which side the bread is buttered. Second, on rupee, of course rupee is falling, but that's its destiny. With our inflation differential and productivity differential worse than our peers in trading group, the rupee will have to depreciate. But from 7% depreciation every year, now we are depreciating 2-3% a year. And we still have 4th or 5th largest FX reserves in the world. On the economy, yes, second quarter did came below expectation at 5.4%. Not many people expected it. But the third quarter is beginning on a good note. The festival season sales are up. The wedding season is in full bloom. And the government capex has picked up. So will 5.4% become somewhere between 6-6.5%? Looks quite likely. Most importantly, we care for corporate earnings. The first half earning per share for Nifty 50 is about 550 rupees. The second half expectation is 500 rupees because people expect 1050 to come for FY25. Now we all know second half is better than first half. क्या 500 रुपया नहीं आएगा?
Point well noted.
So the glass is half full or half empty. It may sound to be intelligent by sounding pessimist. But please remember, optimist makes money in the market.
That's very well put, because a lot of the conversations we're having right now, Nilesh bhai, and it's great to have you here to put light on them, is all about economy is slowing down, rupee getting weaker versus the dollar, foreign investors not looking like they're coming back anytime soon, corporate earnings a little shaky, and consumption a concern. You're saying all of this is being looked at with an over-bearish sentiment?
So again, you have to look at the data. Rupee is depreciating, but which currency is not depreciating?
Yeah.
Corporate earnings growth is slowing down. Okay, so do you expect even 500 won't be achieved? And the best thing is to ask that pessimistic guy, are you willing to short Indian market for next 10 years? Unlikely he will say yes. Are you willing to short it for 5 years? Unlikely he will say yes. Are you willing to short it for 3 years? Unlikely they will say yes. If you're not willing to short the market and you sound to be bearish, then there's something wrong. We are not at all saying that these trends are not there. Economy did slow down in second quarter, but second half it will bounce back. Corporate earnings growth, of course the base has increased. From 4 lakh crore profit in 2020, we are at 15 lakh crore. Now, no one can expect that over next 5 years, 15 lakh crore will become 60 lakh crore. So, growth will slow down because the base has become bigger. But will the market continue to reward investors? Answer is yes. On a price to earning basis, India may look expensive, but on a price to earnings growth, India doesn't look that expensive. It is still somewhere in the middle. And investors will invest over a longer term horizon. We tell people, please don't invest with 1 year view. If you are coming in equity, take a 5-year view. Second, have moderated return expectation. Last 5 years were exceptional, broad-based rally, 300 stocks out of 500 stocks almost doubled or more. Now that's not going to happen. The valuations are now at a fair value level. So your returns expectations will have to be moderated. You will have to invest for longer term. There will be volatility. We are down 10% and people say, oh, markets have crashed. China is at the same level for last 17 years. No one is complaining there. And if they complain, they'll be put behind the bar.
No, we're definitely not there.
17 years, no return, and people are happy.
Yeah.
Over here, we are probably negative return for 6 months.
If they're unhappy, we won't even know. So that's a China
and they
story.
can't even express. And we are down for about 6 months. And people are saying, oh, our markets have crashed. So we'll have to differentiate noise from the news. An investor can make money if they take a longer term view, ride the volatility.
Just on that point, I'll follow up on lowered expectations of returns. To what extent? What is the quantum of lowering expectations? And I ask this to everyone we speak to, because a lot of new investors who've come in the last 3 or 4 years have not seen this kind of a sideways market where there's no real action. They're used to a different kind of a pace. It's become a bit like rummy. So what happens to their expectations and how much do they need to be lowered?
It will have to be significantly lowered. One, our inflation has come down, so nominal return will fall. Second, the base has become big. So today people are expecting 20-30% return. They are most likely to be disappointed. The numbers will be probably high single digit to low double digit.
Interesting. So in which case, well, then the argument would be, Nilesh bhai, that the risk premium that equity should give versus a fixed income fund giving the kind of returns, would equities attract the same kind of flows? I mean, hitherto, domestic mutual funds have been the linchpin on which these markets have stood. Can that change?
So Neeraj bhai, my competition is with the cash. Now, if you keep cash at home, you don't make any money.
That's true.
That everyone knows, but no one believes. There are crores of Indians who believe कि पैसे झाड़ पे उगते हैं. In FY21 to FY23, total flow into mutual fund, including debt mutual fund, was 4 lakh crore. Increase in currency note was 9 lakh crore. I have to just go to those savers and convince them that cash at home is not going to give you any return. It's actually going to depreciate. And please walk over to mutual fund.
Okay.
If I can do that, my flows can double.
Got it. Okay, fair call. In such a challenged environment then, Nilesh bhai, what do you think? I mean, people don't have nifty futures in their portfolios, right? Hopefully. And if that is the case, I'm guessing that even if the markets were to be stable, don't give dramatic returns, but there will always be pockets of outperformance based on earnings growth, etc. While you now look at the business side of things, what does the investor in Nilesh Shah tell him about where is it that the business growth will be very, very positive within themes, if you will?
So one, this is quality over momentum market. And in this correction, momentum has slowed down. It is market where valuations will make a material difference, because if you're fast growing company but valuations are pricing even faster growth, somewhere the base will catch up.
Yeah.
So go from a reasonable valuation sectors or counters. Today, if you put these two things together, private banks which haven't delivered return for last 3-5 years, valuations have been derated. Telecom, where price revisions are likely to happen. Rural focused consumer staple as Kharif and Rabi crop is likely to be bumper. And there are lots of Ladli Behna schemes. Pharma, because as your income level goes higher per capita, from roti kapda makan, you will go and shift spending to entertainment, healthcare, education, travel, tourism. So I will say go for quality companies across these sectors and focus on valuation. Price is what you pay, value is what you get.
Just last points are banks for the next 1 year. You talked about 10 years, 5 years, 3 years outlook. Thoda main shorten karungi, 1 year. Banks, capital goods, or new age platform companies. How would you rank these three? 1, 2, 3.
So from a risk return point of view, if I see, it will be pure bottom up stories. There are banks who are exposed to microfinance, personal loans, unsecured loans, whose credit culture has not been good. They are unlikely to outperform.
Okay.
We see stress in microfinance, personal loans, unsecured lendings. And in this thing, men's will be separated from the boys. In case of platform new age companies, you have to bet on the winner. This economy, this digital economy, winner takes it all. The margin of the number one player will be 50-60%, number two will be 20-30%, third guy will be loss making. So you have to bet on the winner. And to be winner in this industry, you need access to deep capital. If you or your sponsors don't have capital, then you are unlikely to succeed. So go for winner, having deep pockets. Obviously management and everything else do play a role, but focus on person who will become winner thanks to capital access and management.
That is for banks?
For the new age platforms.
Okay. And on banks?
Banks, credit culture will become very, very important.
Okay.
Avoid those banks who have higher exposure to microfinance, unsecured lendings, personal loans.
Private versus public in banks?
Bottom up, figure out who has better credit culture.
Okay, and if you can't figure out, then of course mutual fund sahi is always
Absolutely.
there. Are you optimistic about 2025? I know you've said you have, but...
So, optimism is relative. If you're looking at 30% return, I am a deep pessimistic guy. If you are looking at reasonable return...
So what is reasonable?
High single digit, low double digit.
Okay. So between say 8 to 12?
I don't know what that number will be.
Yeah.
I have never been right in predicting those things in my whole life. Unlikely that it will change now. But again, you don't invest with 1 year horizon in equity.
Of course not.
And you follow the dharma of asset allocation. If market at 26,000 when it was expensive looked attractive to you to invest, at 24,000 it has become more attractive, so you should be putting more money.
Yeah, and these are lessons that I think Indian investors, especially in SIPs, etc., have learnt over time.
Absolutely.
So they're unlikely to forget it anytime soon. Thank you so much, Nilesh Bhai, for joining us today. Fantastic to have you at our studios.
Yeah.
Thank you.
And season's greetings to you.
Season's greet.
Most importantly. Thanks so much. And with that, it's a wrap on India Markets Open. Thanks so much for tuning in. Up next is Ask Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas.
Hello and welcome to NDTV Profit. My name is Mihika Barve and with me is Anushi Vakharia, and you're watching Ask Profit, a show where we get all your stock related queries answered by our fundamental as well as technical guests. Joining us today we do have Khush Bora, the founder of khushbora.com from the technical side, and Neerav Ashar, the head equity research analyst at Latin Manandral Securities, to answer your queries. If you have any queries, you can send it to us on WhatsApp on the number that starts with 81. If you want to call us, you can do that as well at the landline number that starts with 022, and it's flashing below your screens right now. But just before we get on to the queries, let's just take a quick look at how markets are faring right now, where we do have the benchmark, the Nifty 50, trading fairly flat right now with a positive bias, up 0.05% right now. When you look at some of the stocks that are moving on the positive side on the Nifty 50, we have SBI Life, which is the top gainer as of right now, up 1.5% in trade today, followed by Bharat Petroleum as well as Maruti Suzuki. Both of these counters up 1%. Some of the counters that are under pressure, you have Asian Paints, Britannia, and Trend. Some of the consumer and FMCG names, they're all seeing cuts of 0.6 to 1%. When you look at the advanced decline ratio, if you can just pull up that for the Nifty 50, well, you have 30 advances versus declines of around 20 stocks, and you can see how that's moved throughout the day. But Anushi, how are broader markets performing? Underperforming or outperforming the benchmark?
Definitely underperforming, Mihika. It's not a great day for the broader markets. If we see, while the benchmarks have remained flat on the day, we are seeing a lot of weakness in the small cap and the mid cap indices. In fact, we are seeing about a 0.5% of a cuts in between both of these indices. If you look at, let's just pull up the Nifty mid cap index and see how it is doing. What are the top players that are leading to this drag that we are looking at the indexes? We have names like Cummins, Bandhan Bank, CRISIL seeing about a 3 to 4% of a cut in the day, while what's also leading to the gains in the indices, let's check that as well. There's GIC, there's Mazgaon Dock. Mazgaon Dock has clocked in about a 4% of gain. Honeywell Automation about 3.4% of gains that we are looking at. This is in terms of mid-cap space that we are looking at, but let's also address the small-cap indices. So in small-cap, again, we are looking at a 0.5% of a decline, but this is led by some counters. Like if we can pull up the small-cap 250, what is leading to this loss that we are looking in the indices? We have names like 361, Aarti Industries seeing about 1% of losses, while Chemplast, Hindustan Copper, Titagarh in pressure, seeing about 3 to 5% of cuts in the day. What is interesting though is counters like Intellect Design, 11% of gains that we are looking at. Even in the Monday session, we had seen this counter recording strong set of gains, but again in Tuesday it was in pressure due to the correction which took place. Blue Dart, KFintech, JNK Bank, all pulling up the small cap 250 index despite the weakness that we are seeing in trade today, 4 to 8% of gains. Well, this is in terms of how the broader markets are looking like, Mihika, but let's talk about the queries for the day, right?
Let's get on to that. And, we're going to take our first query, and this is from Shashwat from Dehradun. Now, he's currently holding 20 shares of Garden Reach shipbuilders at a price of 1,796. This is much higher than what the stock is trading at. Kush, I'll come to you first. He's asking whether, he should hold his position or sell his stake. He's currently at a loss of roughly about 4,000 rupees.
Hi, sir. It's a very good morning to everyone. Well, the stock is actually, done rather well. If you see in the last 15, odd days, it's just that the last 3-4 sessions have seen some profit booking in line with the markets. It's holding on to the 200-day moving average support zone as well very dearly. The volumes on the way down are thin, so which is an encouraging sign. So my suggestion on this would be a hold. However, I will suggest a positional stop loss at the 1515 level, which is a medium-term support zone for this one. If that is taken out, then the stock would retest the recent lows of 1380 as well. So continue holding on to this one for some time, let's say a month or two, and the positional stop on this one comes in at 1515.
Well, that was on the view of Garden Reach that we should be looking out for. But next we have a caller joining in with us. Jitendra Ajay from Andhra Pradesh wants to know whether this is the right time to buy Motherson or not. Jitendra, I hope I'm audible to you.
Yeah, madam. Good morning, madam.
Yeah, can you please state your query?
Madam, I am very much poor in English, but I will manage. Please understand.
कोई बात नहीं, आप हिंदी में बात कर दीजिए.
हिंदी ना, हम तेलुगु का. So I want to buy Motherson Sumi wiring right now. Is it a good time to buy?
Do you want a fundamental view on this or a technical view?
Fundamentals, okay, madam, but technical view, what will be the future of this stock?
Okay, Kush, let me come to you on this one. What is your view? Is this the correct time to buy Motherson wiring shares?
I would wait out a little. The silver lining is that despite the kind of sharp downfall that the stock is seeing, there is a positive divergence building on the daily setup, which is suggesting that the selling pressure, at least from the near-term perspective, might be coming to an end. But that is the divergence telling you, and so we need a price confirmation as well for this. So my suggestion would be to hold up on that buying. Once the stock crosses the 61 threshold on the upside, is when you should consider buying, and the stop loss in that case will be 57. So for these levels, you could continue to hold because any kind of a bounce back could be quite sharp, and the first target on the way up for the stock could be 65, and then you're looking at the 68 as well. So hold up on the purchase just yet. Let the price tell you that the bottom is indeed in place. We're getting some technical suggestions that it is perhaps coming to an end. The fall is perhaps from a near-term perspective coming to an end. Let the price tell you that. Above 61, go ahead and buy with a stop loss of 57.
Thank you so much, Kush, for that. Jitendra, I hope your query is answered. Kush has stated that about the 61 level, it would be a good, call to buy. But, let's move on to our next query, and this is from Thiago, who is from Tamil Nadu. He's holding 300 shares of Bharat Electronics currently at a price of 280 a piece, and he's asking whether he should hold or sell his position. Nirav, I'll come to you. From a fundamental perspective, do you think Bharat Electronics is more, driving it in the future?
Thank you so much for having me on your show. Good morning. And I think Bharat Electronics definitely it's a hold at this point of time, and I think the investor should even consider adding to some of his positions because the performance of Bharat Electronics has been quite consistent. They've managed to beat their expectations. They have reported very good margins. The order book has been growing very, very consistently. So I think there's a very strong possibility that the stock might be an outperformer in the near future. So I think it's a hold, and if possible, one can even add or build on to the positions from these levels.
Okay, so hold position for this counter that we are looking at. Next, again, we have a caller joining us. Kunal is our next caller from Chennai. Hi, Kunal. I hope I'm audible to you. Can you state what your query is?
Yes, hi. Good morning. So I have 500 shares of Lancer Containers, and I was actually looking at a long-term view or a short-term view because I saw this share somewhere. And after looking and looking up the financials, I had made a purchase, but then it's been range bound since then. So just wanted a call on this. Thank you.
Kunal, can you just help us know since when have you been holding the shares of this company?
Maybe 15 days, around 15 days.
Okay, so 15 days, and you want both the fundamental and the technical view on this, right?
Yeah.
Okay, Neerav, first I'll come to you on this one. What do you think? He's just bought this position in the last 15 days. If you can talk to us about Lancer Container, what's your view on this stock?
Yeah, so I think 15 days is just too short a time frame. But I think if one were to look at it from, say, a 6-month to a 12-month perspective, then I think one has to wait for the operating environment to improve because we are seeing in EXIM trade there are certain headwinds at this point of time. There has been some shortage of containers, the Red Sea crisis, etc. So I think it would be better to hold the position and then see what kind of quarterly results are reported by the company and wait for another quarter at least before taking a decision on what would be the next course of action. So I think it's better to wait for at least 6 months before we decide on the next course of action.
Okay, so wait for 6 months for this stock. Kush, quickly coming to you on this as well, since you wanted a technical view also. What is your view on Lancer Corp?
So after a fall from those 100 levels, all the way up until 30, the stock is attempting a recovery now, but it's not really as significant just yet. But there are early signs. So my suggestion would be hold it with a stop loss of 33.50, and on the way up, you could actually look at targets of 41 and 45. If this recovery does come into play.
Thank you, Kush. Let's move on to the next query. This is from Nagaraju, who's from Bengaluru. He's holding 100 shares of Coal India at a price of 453 rupees per share, and he's asking what he should do next. Currently, facing a loss of 6,000. Neerav, I'll come to you. Coal India, the energy space. What's your outlook? Could this stock recover from its levels?
Yeah, there is a strong possibility that the stock can recover in the near future. But I think at this point of time, we have the winter which is there in the country. So the demand for coal tends to be a little bit on the subdued side. But I think come summer and we will have the power plants which will be buzzing again because the demand for power will pick up. And Coal India is the predominant supplier of coal, and coal is the predominant form of energy. So I think one has to hold with a 3 to 6 months horizon for better results to emerge.
View for Coal India. Next we have Adarsh joining us, the next caller from New Delhi. Hi Adarsh, how can we help you? Okay, till the time that Adarsh joins us, we'll take up the next query, and this is from KP Singh. He's holding about 3,900 shares of Vedanta, and this is at a price of 340 a piece. Neerav, I'll come to you whether he should continue to hold this or sell. There's a lot in cards in terms of Vedanta. Demerger definitely on the news. So if you can give us an outlook on this one.
Yeah, this is definitely a hold considering the pedigree of the company and considering the fact that it's such an asset-rich company. They're doing the right restructuring also, all the right steps being taken by the company. So I think this is definitely a hold from the current levels.
Thank you so much, Neera, for that. So hold on Vedanta, some multiple triggers going forward. But the next query, we have Vel Shankar, who's holding 400 shares of Vishal Megamart at a price of 104 rupees a piece, and he's asking about what to do next. Kush, I'll come to you. How does Vishal Megamart look on the chart? Should he hold or sell his position?
Well, it's a very recent listing, so very limited data, so I'm afraid I'm going to have to toss it to Neera.
Neera, outlook on Vishal Megamart.
Yeah, so I think they've given a very confident outlook in the near future. But having said that, I think it will be advisable to hold at least, let's wait for a couple of quarters, what kind of growth outlook they are giving going forward. So I think one must take the decision to hold. But at the same time, we are seeing very divergent trends in retail because DMart has been under a lot of pressure. We are seeing the players like Shoppers Stop, etc., continue to face a lot of headwinds. But I think Vishal Megamart, since it's a new listing, I think it is advisable to wait for a couple of quarters and then take a decision.
Thank you so much, Neera, for that. The next query we have is from Suman Roy, who's holding 100 shares of Axis Bank at a price of 1,150 a piece. And, he's asking whether he should hold or sell. Currently facing a loss. Kush, I'll come to you from the technical side. Fundamentally, we've seen a lot of traction from, different analysts, talking about how Axis Bank, is performing better from peers. But from on the charts, how does it look? Because the person asking the query is currently facing a loss of over 6,000 rupees.
Well, so the kind of bounce that we're seeing right now are actually mainly from the oversold territory side. I'm not sure if the fall is entirely over because if you see the volumes on the way down, they've been quite staggering, or maybe at least up until the averages for the last 20 days, or the volumes on the way up haven't really matched as much, which is suggesting that the buying interest hasn't really kicked in. This is too early to call, a bottom in place for this one. My suggestion would be that, if you can, then perhaps hold on to this one with a stop loss at 1060. It's a slightly deeper stop loss compared to where, the stock is right now, in the sense that, his loss might deepen, but it will give him an opportunity to see if the stock indeed does rebound. So hold, but with a stop loss of 1060, if that is broken, the stock could actually head to 1020 levels also.
Hold on Axis Bank is what Kush is saying. But as we talk about the big players of 2024, we have the top 9 stocks in focus. And this is with the expectations of highest upside that we could be seeing next year. Harsh joins us with more details on these stocks.
12-month upside, 30% plus. It's so unlikely that Nifty 50 comprises of 9 stocks having a 30% plus upside. I'm not sure how or where the Nifty will move if all of these target prices are hit, but that's for another day. Let me first start off. First one, Adani Enterprises, 82% upside. This is the average analyst estimate as per Bloomberg. All analysts combine average target price and therefore the average upside. 4255 is the target price on this one, an incubator company of sorts, but also the kind of negative returns that it has given has led to this kind of upside that we are seeing currently on the stock. IndusInd Bank, 52% upside, again negative to the Q2 numbers. We've seen IndusInd Bank therefore give us a 52% upside. A lot of analysts suggesting that a lot of the pain has already been built in. That's what it seems like. Third one, SBI Life, 42% upside from here, target price 2,000 rupees. With everything that's happening in the regulatory space, SBI Life has seen a bit of a tapering on the stock performance side, which is what has led to this upside potential. Adani Ports, 41% upside, 1,682 rupees is the target price. The number 1 ports operator in the country, also a Nifty 50 counter, available with a 41% upside possible. Coal India is the 5th on the list, 40% upside. Now 5 stocks on the Nifty having a 40+% upside. This is the other possible headline to take on this one. 536 rupees being the target price. The largest coal miner in the country, 70 to 80% market share in domestic coal is what this one has. Tata Consumer, 34% upside from here. A Tata Group stock, 34% upside, 1211 being the target price. NTPC, the largest thermal power generator in the country, 34% upside from here, 446 rupees is the target price on this one. Tata Motors, another Tata Group company, 32% upside, possibly the twin engine of PV and CV starting to play out, likely, hopefully should start playing out on the stock price as well, 956 being the target price. ONGC is the last one, 31% upside, 317 being the target price. Again, not sure where the Nifty will be if all of these target prices are hit.
Thank you, Harsh, so much for giving us, all those details. Let's go to our guest. Nirav, I'll come to you first. If you had to, take your top 5 big ideas for 2025, since we've spoken about the Nifty, within the Nifty, what would they be?
Yeah, actually, from the list which we have discussed, I think we'll like a few ideas from there itself. So I think Adani Enterprises looking quite good. As you pointed out, this is an incubator firm, and it has got exposure to various businesses. One is of course, the ANIL, that is the Adani New Industries Limited. There is exposure to mining, there are highway projects, and most importantly, around 8 operational airports. Navi Mumbai International Airport expected to be operationalized. So I think the cash flows will start coming in, and I think the quality of earnings is likely to improve. So that remains a key monitorable going forward. So Adani Enterprises is a good story at this point of time. The second would be, of course, Adani Ports and SEZ, because they too have around 15 operational ports, and strong cash flows being generated, a very big contributor to the cash flows as far as the Adani Group is concerned. Third, I think we would like to look at Reliance Industries, because I think while they've been facing certain headwinds in the retail businesses at this point of time, but I think O2C, that is oil to chemicals, is starting to make a comeback. And I think we should see relatively better quality numbers going forward as far as the O2C business is concerned. And we could also see some improvement in the telecom side also, because the ARPUs have improved, although they are facing some problems on the subscriber front. But overall, I think Reliance Industries is also looking quite good going forward. The fourth, I think we would like is HDFC Bank. It's looking quite good, has the leadership mantle as far as the banking sector is concerned. And I think we would like to have a look at Coal India Limited, because come summer, and I think the coal demand is expected to start moving up, and it has virtually a monopoly status as far as coal supplies are concerned. So I think broadly we would like to have a look at these stocks. They look attractive at this point of time.
Thank you so much, Neil. So Coal India and HDFC Bank, Reliance Industries, and Adani Enterprises and Adani Ports. A standard disclaimer, viewers. The NDTV is a subsidiary of AMG Media Networks Limited, which is a part of the Adani Group company. But Khush, I'll quickly go to you. If you had to, pick your top 5 big ideas for 2025 from the Nifty 50 pack, what would it be? And do you have a specific Nifty 50 target in mind? What we could see in 2025? In the last few weeks have been somewhat tough for the benchmark.
Mika, we are in the works, and we're about to finalize that report also for the next year. But I can give you a heads up in terms of the stock that we are looking at currently. The common ones in the large cap names, between myself and Nirav, are Reliance Industries and HDFC Bank. Reliance has had quite a bit of fall already, but on the daily charts, you're starting to see positive divergences. So from a near term, it could be that the selling is over, and after this kind of a sharp correction, it makes an interesting buy on a large cap name like that. And exactly opposite, end of the spectrum is HDFC Bank, which hasn't really performed but has picked up steam now. So these are the two stocks which are common from the large cap names. Now, as far as the mid cap, small cap names go, a couple of stocks that we've discussed quite extensively on the channel before. One of them is Skipper. If you've seen that, the kind of moves that it has made, it's already a multi-bagger over the last 3-4 years, and we still remain very bullish on this. In fact, the correction that you've seen from 650, 700 odd levels is actually quite a healthy one. It should be taken as an opportunity to accumulate. And also PCBL. This one too has had a good run, seen a round of profit booking, but after a good base formation in place, it's on the way up. So we are looking at some of these names. And as for the Nifty target, as I said, the report is in the works. We'll come back with an update shortly on that.
Okay, so Skipper, KPCPL and other stocks and radar in the mid and small cap space. But with that, let's go across to the queries again. We have a caller joining us, Govind Kumar from Hyderabad. Hi Govind, please can you state your query?
Yeah, ma'am, I am brought at KPIT Technology at the rate of 1661 200 numbers. Can I add it somewhere or else book losses?
Okay, can you state the timeline at when did you buy these shares? What was the rationale
I
behind
am
it?
holding at least origin is 1 to 2 years. 1 to 2 years.
Okay, so do you want a technical view on this?
No, I am long-term investor, ma'am.
Long-term investor, okay. Nirav, coming to you for KPIT Tech, what is your view on this, whether he should continue to hold or sell the stock?
Yeah, I think it's got good long-term prospects, so I think I should keep the faith and hold with a medium to long-term perspective.
Okay, so continue to hold it for a long-term perspective. But with that, it's time to slip into a short break. More stock queries remain on the other side, so do stay tuned in.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show where we get all your queries sorted. You can reach out to us on the number flashing below on WhatsApp, or you can even call us. But let's take the next viewer query for the day. It's coming from Rachit, who's holding 63 shares of Zomato at a price of 250 rupees. He's currently at a 1K profit and he's asking about what to do next. Nirav, I'll come to you. Outlook on Zomato, playing the digital quick commerce theme and what more?
Yes, I think it's a clear-cut hold, and I think the recent inclusion in the main indices, I think, also augurs well for the stock. So I think the advice from here is to definitely hold and keep adding some more quantity if in case there's a decline. So I think it's a clear-cut long-term hold.
So clear-cut long-term hold from Zomato. But up next, we have a caller, and this is Rahul from Chennai. Good morning, Rahul. Could you state your query for us?
Yeah, good morning, madam. Hope you are doing well.
Yes.
Yeah, I have a query on Good Luck India, madam. I am holding 200 share at 98 rupees, and I bought it in May 2021. So when I have bought it, it was at trading at around 7p. But currently, if you see, it is trading at 20p. And the thing is, when I have invested, the top line was around 1,500 crores, but now it is around 3,000 crores. So we can see in 3 years, it's growing around 30 to 33%. And recently in Jan 24, the company has also initiated a QIP of 200 crores for some of the amounts they will be using for. They have also made a subsidiary in August 23 for defense and aerospace limited in the company in the name in the field of defense and aerospace. And I have also seen the management commentary in your channel itself. I think Neeraj sir has interviewed the management. So again, the company promoter is holding 55% and retail is participating around 27%. And if I see in the financials, there is one HNI investor like Sage Investment who is also holding 1 to 1.5% holding 2 lakh shares at 617. So my question is, can I also further invest more in this company, considering it is trading at 20p and the company's sector P is I think 30 to 60. Okay. So I feel it is undervalued stock, but you can give your views.
Yeah. First of all, Rahul, I'd like to congratulate you because you made Good Luck has turned out to be very lucky to you. It's trading around over 930 rupees right now and you bought it at 98. I want to know, is your concern mainly on valuations or a general outlook when you look at adding your position?
Yeah, I think, madam, it's on valuation. I feel it is still undervalued considering because it's at 20p only. Yeah. But if you see sector-wise, and they are ending a defense also in the flavor as a new in the their book. So that's why I thought, can I invest more in this?
Okay. Then I'll go to Nirav. Nirav, Rahul has bought Good Luck at a price of 98, and he's concerned about valuations. He's looking whether he should add to his position, and it's clearly he's been holding it for a long time now. What's your outlook on Good Luck?
Yeah, so I think first of all, I congratulate Rahul for all the good research, the deep research which has been done before initiating a buy. on the stock. And I think continue the good work, and I hope it continues to bring good luck to you. So, but yes, from a valuation perspective, as you rightly pointed out, it was trading at a 7 PE multiple. Currently, it trades at 20 PE multiple. But it's very important to note that PE multiple is associated with growth. As you go, as the chances of profitability increase, as you keep on going, as the prospects keep on improving, the market keeps on revising the PE growth multiple upwards. So I think it should be viewed as a positive sign. And I think the kind of areas which they are targeting, as you pointed out, defense and aerospace, these are the areas where you have a huge amount of entry barriers. It's not easy to get enter these areas, and these businesses require a huge amount of perfection in terms of execution. So I think you have to wait it out for a couple of quarters to see how they are performing with respect to these particular areas, and what is the order book, what are the kind of orders which they are executing, and more importantly, it will be important to monitor the margins. If they are able to improve their margin trajectory, then I think the operating leverage will improve, cash flows will improve, and consequently the valuations too will improve. So I think it's advisable to hold this stock from a medium to long term perspective.
Okay, so hold coming in for a medium to long perspective for good luck, and very interesting query that was in fact. But moving on to the next query is from Jai Kishan Gwalior. He's holding about 1,000 shares of Adani Wilmar, and this is at a price of 350 a piece. Whether he should continue to hold or sell. Kush, coming to you for this one. What's your outlook on Adani Wilmar?
Well, you can continue to hold. I mean, the stock has seen quite a bit of a sharp downturn, but if you see, yesterday, day before, the couple of sessions, the stocks actually recovered quite well, and the volumes on the way up were very, very encouraging. So I think this upward momentum could well continue. However, I would suggest a stop loss near the 300 level. If that is taken out, then perhaps the stock could slip further. So continue holding on to this one, but keep a stop loss around the 300 mark.
Okay, standard disclaimer on your screen. NDTV is a subsidiary of AMG Media Networks, which is an Adani Group company. But on to the next query, if we go on, this is from Nambiar from Kerala. He's holding about 300 shares of RBL Bank, and this is at a price of 257 a piece. Again, whether continue to hold or sell on this one. Nirav, coming to you for a long-term outlook on RBL Bank.
Well, I think it would be advisable to shift to some better alternative. I think personally would recommend something like a Federal Bank. It would be a better alternative to shift over there.
Got it. So a sell on RBL Bank, advised to maybe shift to a different bank if you want the exposure in the BFS segment. But moving on, we have our next call, and this is Ankit from Raigad. Good morning, Ankit. What's your query?
Good morning, ma'am. Actually, I have Dixon Tech 14 shares at rupees 3415 a piece, ma'am.
Okay.
So I wanted to know if I can hold it for some more time or book some profit for ma'am.
And for how long have you been holding this position? What was your initial rationale?
Around 4 years, ma'am.
Okay,
around 4 years. I mean, investment it is a long-term bet, ma'am. And actually, I have taken this share before it has been subdivided or taken the split, ma'am.
Got it. First of all, congratulations, because the stock is currently trading at around 70,800 rupees, and you entered at the 3,400 level. Nirav, I'll come to you. We have a long-term investor for Dixon Tech, again holding for a period of 4 years, significant gains on his position, and he wants to know whether he should hold his position a little bit longer, or what to do next. What's your view?
Yes, I think unless it is necessary to raise some funds, I think one should hold on to this position because of the fact that we are looking at a very explosive growth as far as this entire EMS space is concerned. So I think definitely you should hold on to the position.
Okay, so next we have a caller joining us. So this is Chandan Jain from Karnataka. Hi Chandan, can you state your query for the viewers, please? I think there's a disturbance. Chandan, can you hear us? Okay, so just taking Chandan's query into account, he's holding about 60 shares of KFin Tech, and this is at a price of 700 a piece. His query is whether he should continue to hold or sell this stock. Kush, coming to you, what is your outlook on KFin Tech? We've addressed this earlier in the show before as well. If you can just reiterate what was your view.
So depending on his horizon, I mean, if it's a short to a medium term kind of a position, then not a bad idea to book out partially and then accumulate it again closer to the 1400, 1450 odd levels. The reason being that while the stock is on a very firm footing, even we've discussed this stock as a call a couple of times, on the channel, a couple of times the target 2 has also been hit. That's the kind of momentum that the stock is in. However, on the daily and the weekly setup, the stock is nearly overheated territories, and hence perhaps could see some sort of a pullback. Hence, the suggestion is to book it partially and add again on declines closer to the 1400, 1450 mark.
Okay, got it. Thank you, Kush, for that. Your next query is from Metin Khan, who's from Chennai, holding 1,200 shares of NMDC at a price of 242 a piece and asking for the outlook of what's next, currently facing a loss of 32,000. Nirav, I'll come to you. NMDC does, from an iron ore miner perspective, have some advantage, but there have been significant headwinds. Commodity-based company, certain Karnataka potential mining taxes. So what would be the outlook for NMDC? An exit on this position, or some hold? Could the person hold for some recovery?
I think it will be advisable to exit the position because of the challenges which we are facing at this point of time, the headwinds, and as you rightly pointed out, the Karnataka government has tabled this bill where they want to increase the royalty, etc. So considering the kind of volatility, I think it will be better to shift to some other player like a Tata Steel or a JSW Steel, etc.
Okay, so that's on the view for NMDC. Nirav, I'll stay for you for the next query as well. Next query is from Satish Kumar. He's holding about 200 shares of Cummins, and this is at a price of 3,610 per piece. Wants to know whether he should hold on to this one or sell it. Nirav, a lot happening in Cummins, new guidelines, new emission norms that the company has to adopt to. Along with that, there would be concerns about its margins, growth picture forward. Can you give us an outlook on this?
Yeah, actually, two angles to look at this. One is the CPCB norms, which you pointed out, the Central Pollution Control Board norms. I think the 6th version is now applicable, and so I think a lot of upgrades will be required at this point of time. But from what we are hearing just now, I think the demand conditions continue to remain quite muted. So I think the capital goods space overall has been under some sort of pressure. First, we saw Siemens, which has corrected by 13% in the last few trading sessions, and today, as we are talking, I think Cummins too has been under pressure. I think the stock was down about 3% on last count. So I think from that perspective, it's better to take some profits and then maybe consider re-entering at lower levels.
Our next question is from Jaya Krishnan, currently holding Ultratech Cement at a price of 11,894 a piece. Kush, I'll come to you first. 400 rupees below, the holding price. What's the outlook on Ultratech Cement? It's a large cap player, the largest player in the market, but from a chart perspective, could we see more of an uptick?
Sure. So while the recent about week to 10 days odd price action is on the downside, let's not forget that this is on the back of what the market has been doing. Before that the stock was actually recovering rather well, and we've seen some traction in the cement space already. So my suggestion on Ultratech would be a hold, given the kind of uptick that the stock had begun. Even now, if you see the stock is taking support near the 50-day moving average, if the risk appetite is there, then 11,000, that's the level where you should keep your stop loss. If that's broken, then the structure would perhaps fizzle out. But there's a possibility that once the market stabilizes, the stock could resume its uptrend. Now, on the way up, I'm looking at a target of 12,000 as the first level where the stock has actually attempted 3 times to cross, but hasn't really been able to. So that should be the first key level to watch for. But I think once that is taken out, you're looking at a 12,500 as well as a very realistic target. So with a stop loss of 11,000, continue to hold Ultratech.
Okay, continue to hold Ultratech. That's a view coming in from Kush. Next, we want move to the gas space, gas stock space, and this is next query is from Vimal. He wants to understand the outlook on Indraprastha Gas Limited. Nirav, coming to you on this one. In the last 6 months, 1 year, we've seen the stock underperform the markets. Can you share your fundamental view on this?
Yes, recently I think we've seen a lot of pressure as far as the city gas distribution companies are concerned, predominantly Indraprastha Gas, Mahanagar Gas. There is a possibility that their margins are likely to get squeezed in the near term. But I think we've seen a sharp correction, and now the stocks are on the comeback trail because of some tax reliefs, etc., which are there in the offing. But I think it would be better to wait and watch at this point of time. Wait for one quarterly results, see their commentary, what they are up to, and then take a decision whether to enter or not.
Got it. Thank you for that, Neerav. The next query is from AM Reddy, who is holding 800 Ward Wizard Innovations stocks at a share price of 56 a piece. Kush, I'll come to you. He's asking whether he should add or hold his position.
Sorry, what's the buy price?
Okay. Okay, we have AM Reddy on the caller. Okay, so no, he's asking whether he should add or hold his position in Ward Wizard Innovation. He bought it at 56 a piece, 800 shares.
Well, I'm afraid the outlook on this one is actually quite negative. The stocks actually had quite a stellar downward move ever since it hit that 85 odd mark. There isn't really a sign of a recovery on this one, even though the investor is in a quite a bit of a loss. I would suggest an exit, on this one, because as I said, there's very sharp downfall, and even now on the way down, the volumes are sort of peaking. So not a bad idea to exit this one and perhaps look for an alternative.
Very bearish outlook for Ward Wizard Innovations that we are looking at. But next we have a caller joining us. Gopal Krishna is joining us. Hi, Gopal. Can you state your query for us?
I'm holding 20 shares of Bombay Stock Exchange, BSE.
Yes. Can you state from when you are holding this? What was your rationale behind holding the stocks?
I started acquiring it in 2020. 2021, I closed it. Around 830 rupees is my average price.
Okay. So I believe that you want to understand the fundamental view on this stock, right?
No, I wish to know whether should I hold it or sell it, or if I can hold it, can I add more?
Okay. Neerav, coming to you on this one, BSE around 830, he's holding it from a long time of frame. So can you share your outlook on BSE?
Well, this is a concept stock, and I think he's bought it at the right price. So I think there's no question of selling it. It's a hold from a medium to long term perspective.
Okay. Got it. Thank you for that. So hold on BSE. The next query is from D. Mazumdar from Rourkela, and he's holding 15 shares of Amber Enterprises. We have him on call. Welcome to the show. Could you state your query and the rationale and your position in Amber Enterprises right now? Your query, exact query. What's your position in Amber Enterprises right now, and what was your rationale when you bought it?
Yeah, you see, I bought it because at that time it was means it had come down quite sharply, and it was one of the main companies which catered to the refrigeration industry.
Got it. Neerav, I'll come to you. Oh yeah, go ahead. Sorry.
So I bought it now. Now that it has appreciated so much, and there is a talk of demerger of its electronics manufacturing division. So what should I do? Should I stay invested, add more, or sell partially?
Okay, Neerav, I'll come to you. There's been talks about Amber kind of electronics division kind of getting demerged, and what's your outlook? Significant gains that caller has made right now. What's your outlook for Amber Enterprises?
Yes, I think continue to hold for better gains. That is one. And I think the markets have already given a thumbs up to this proposal for the proposed demerger. It's likely to unlock a lot of value. So I think he should continue to hold on to the position.
Okay, so a hold that we should be seeing in terms of our enterprises. But moving to the hospitality space now, Rajiv wants to understand the 6-month outlook on Sami Hotels. Now, if you look at the last 1 year returns, the stock has seen about a 16% of a gain. Kush, coming to you on this one, what's your view? Is your view positive in this stock or not?
Well, not too optimistic. The reason being that if you look at some of its peers, they've had quite a bit of a run where this stock hasn't really been able to perform. So within the sector itself, if you see the relative strength isn't really there, in this stock. While it could get some benefit of the sectoral tailwind, but other than that, there isn't really much going for itself. Even if you see the kind of moves that it made towards the 200 mark and then kind of fizzled out, I would say this is perhaps an avoid right now. If he wants to stick to the hospitality space, then I would suggest two names. One is obviously the leader, which is Indian Hotels, which has had a stellar year, and even now it does look like a good buying opportunity. The other one is Lemon Tree. The stock's had a good run, mild profit booking, but the kind of trajectory that it is on, it could very well go ahead and hit 175 kind of levels. So my suggestion would be to either pick one of the two or divide the capital between the two of them, Indian Hotels and Lemon Tree.
Thank you, Kush, for that. The next question is from Gul, and he's asking whether at what price can Cipla be bought from a 1 year point of view. Kush, I'll come back to you. A 1 year outlook on Cipla, what would be the right price point to enter the position in the counter?
You see, the current price is actually not a bad one because it gives you a very clear stop loss on the downside, assuming so he's already given this outlook for about a year's time frame. Then 1400 is a good level where you can keep your stop loss. If you see, the November low has also been around that level only, which means the stock actually got that base in place. So 1400 being your positional stop, you could actually start looking at accumulation here as well. The pharma sector has been doing well. Even this stock has been attempting a move up. On the higher side, you're looking at targets of 1575 once that is taken out, even a 1650 on the upside. So this base formation attempt in place, some recovery on the stock from lower levels makes it a good, interesting buy at this level as well. The stop loss, as I said, is at 1400.
Okay, so a positive view that we should be looking in terms of Cipla. Next, we have a caller joining us. I believe this is MS Prasad from Vizag joining us. Hi, Mr. Prasad. What can we help you with?
Yeah, madam. Good morning. I am holding Poonawalla 1200 piece at 400 rupees per piece. So, shall I hold, exit, or average?
Mr. Prasad, can you give us your rationale behind why you had invested in this particular stock? What's your outlook that you're looking for? Is it for a longer term that you're seeing or not?
Yeah, longer time, 1 to 2 years.
Okay. And okay, Nirav, I'll come to you for this one. He wants to understand the 1 to 2 year of an outlook for Poonawalla Fincorp, whether he should continue to hold on this one or sell.
Well, I think it's been facing certain headwinds as of now, and I think it would be better to shift to other alternatives like Jio Financial Services or Bajaj Housing Finance. I think these would be better alternatives.
Okay, so a sell on this counter. The next query we have is from Manoj, who's holding 3,000 shares of Dish TV at a price of 15 a piece, and he's asking whether he should hold or sell, currently facing a loss of 13,000 rupees. Kush, I'll come to you. Dish TV on the charts.
It's been a while since someone's inquired about this stock. Massive fall on this one. Barely any attempt of recovery. Any attempt been sold into at the 50-day moving average. I don't think this is one stock that you should continue to hold. I think this is a very clear exit from my side.
Okay, well, that was the view for Dish TV that we've seen. Next, we have a caller joining, Yash from Mumbai. Hi, Yash. Can you state your query, please?
Yeah, I have Clean Science. I bought it at 1400 3 years ago. The stock hasn't done much. I want to know the future view.
Okay, and what was your rationale behind investing in this stock and staying in for such a longer period of time?
This stock selection capital. allocation. That's it.
Okay. Okay, Nirav, coming to you for this one, Clean Science. This he had bought it at a price of 1,400. Wants to understand the long-term view.
Well, the stock hasn't done much in terms of performance, so I think it's been a disappointment. So I think it will be better to liquidate the position and look for some better alternative. There are quite a few alternatives which are there available in the pharma space at very compelling valuations. So I think advice to exit the counter.
Got it. Let's move on to the next section of this edition of Ask Profit, and that is the rapid fire round. And I want to request Nirav and Yash just to keep your answers short, so we can take as many of the queries that have been flowing in throughout the show. So we will talk about, I want quick answers, and let's just take the first one. It's from JM Dave from Rajkot. He's holding 15 shares in Newland at the price of 17,000. Kush, I'll come to you.
Newland Labs, is it right?
Yes, that is right.
Yes, keep a stop loss near the 13,200 mark and continue to hold.
Okay, got it. The next one is holding Spandana from, is this query from Vijay from Chennai, bought 110 at a price of 1,048. Nirav, your outlook on Spandana?
Sell.
A sell for Spandana. Next one is EFCIL. Karthik bought it at 675 a piece. Kush, I'll come to you for this. EFCIL.
Hold. The stop loss on this one is at 635.
Okay, stop loss at 635. The next query is on Moil and whether it could be bought at the current price for long term. Nirav, the outlook on Moil?
Yes, very positive.
Okay. The next one is from Sunil. They have 25,000 promoter shares of Indraprastha Apollo Hospitals. Asking whether they should hold or sell for some more. Kush, I'll come to you.
I'm going to have to skip this query. I'm sorry.
Okay. Nirav, I'll come to you. Indraprastha Apollo Hospital.
Hold.
Okay, the next question is for Hitachi Energy. 22 shares bought at a price of 12,800. Nirav, I'll come to you. Outlook on Hitachi Energy.
Hold
for Hitachi Energy. The next stock that's focused on IRCTC and Kush, whether the right time to buy currently?
No, not yet. Hold up any purchases. Don't buy just yet.
Okay, not to buy for just yet. The next one is on, we have from Tata Motors, bought at 100 shares, purchased at a price of 834, sitting at a 10k loss. Nirav, your outlook for Tata Motors?
Exit.
Okay, exit for Tata Motors. The next one is Restaurant Brands Asia, also known as Burger King. 500 shares at a price of 106. The time horizon is 3 years. Nirav, what should an investor do?
Exit.
Okay, yeah. And with that, I'm sorry, but we're completely out of time. I want to thank Kush and Nirav for joining us today and helping our viewers with their queries. And thank you for joining in.
Thank you.
And viewers, I want to thank you all for watching. Do remember that we can get all your stock related queries answered with our fundamental and technical analysis. We also have our Ask Profit show in the evening, and we'll be back same time as today tomorrow. And me and Anushi would like to say goodbye on behalf of us and everyone who put this show together. And stay tuned to NDTV Profit. Lots more lined up on the other side.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve.
Hello and welcome. You're watching KYC, which is Know Your Company. It's a brand new show on NDTV Profit. In this fast-paced world of stock markets, we are all, including investors, bombarded with information. But what we often lack is a deep and comprehensive understanding of specific companies and specific companies you invest in. We try to break each company down, right, to give the regular investor powerful, actionable insights into the fundamentals of single NSE listed company every day. So every day we do this, and this is of course a new show. Today we're going to zoom in on Royal Orchid Hotel. It's a sub 1,000 crore market cap company, but the hotels business in general has done very, very well through 2023 as well as 2024. This one was incorporated, as you can see, in 1986, and it was named Universal Resorts. Thereafter, it has now diversified. It also manages hotels under flagship brands but it's largely also in the business of running hotels. So these are all the brands that they run as well as manage, and they currently have a portfolio of 109 plus hotels and resorts, and they boast 6,556 keys, and they are also ramping up fairly quickly in terms of expansion. Currently they are spread across 72 plus locations, and this is how their revenue split currently looks like. That's room revenue 57%, 34% coming from the food and beverages pocket. Then there is managed hotels, which is roughly 6.5% but growing fast, and then you have 2.5% which is other services. That's the larger split with regard to how revenue stacks up. In terms of how operational metrics are stacking up, let's look at some of them. In terms of average room rent, both for the existing brands as well as for the managed brands. And before I do that, let's quickly look at the parameters. One is you have operational metrics that we will look for. We look at various metrics from average room rent to occupancy, and try and gauge as to how and what's the kind of pattern that's coming out from there. We look at the revenue, income statement, margins, as well as profit after tax, how the growth has been. We'll do a quick balance sheet check. We'll do a cash flow check as well. We'll look at return ratios. Capex heavy businesses always, we focus in on the return ratio. The shareholding pattern, how much is owned by promoters. We'll also see what kind of returns the stock has given, and we'll also zoom in on what kind of coverage the stock has. To break all of this down, I have with me Anushi Vakharia, who tracks hotels and who tracks hotels quite closely. Anushi, first on operational metrics. I was just, before you came in, just speaking about how operational metrics have panned out. Your average room rent is just marginally reduced. Right. In FY24 versus H1 FY25 versus FY24. Give us perspective on what's happening there in your view.
Right, Harsh. So before we go to the income statement checks, it's very important to highlight some of the key operational measures that a hospitality business has. Three important figures, if you have to see, is obviously the occupancy levels, as that indicates how the hotel is performing, if there is demand scenario there or not. So average room rates, as you've mentioned, that in FY23 the rates were around 5,370 rupees, in FY24 5,673, and this has decreased to 5,141 rupees in this. But do note that a lot of the company's assets are under renovation and refurbishing, so it could be a result of that which we could be looking at, but definitely commentary on this would be awaited from the management side. This is from the joint ventures, leased and owned hotels that we are seeing. Even in the managed hotel side piece of business, if we look at the ARRs, the average room rates have remained similarly in the 3,700 mark to 4,000 of mark. So further growth from these levels is something that we should definitely be watching out for. If we look at the occupancy levels, occupancy, what was at 77% in FY23 is now at 70% in H1 of FY25. Similarly, in the managed business also, last two fiscals we've seen a 60% of an occupancy level, and in FY23 this figure stood at about 63%. But with that, let's move to the income statement. If we look at the revenue picture in FY23, FY24, we've seen the 264 crore of revenue in FY23, and in FY24, 294 crore of revenues. Margins 31%, then which have decreased 26%, and we're looking at a 20% of a margin picture. But again, this is a result of two factors that we are seeing. One is increase in the cost. This translates to both the staff as well as wages and other renovation cost as well. Along with that, something that we should be pointing out is the change in the Indian accounting standards also, because of which we are looking at this change. Net profit, if we see, have seen about a 17 crore of a net profit, and in FY24 17.7 crore of a net profit. In H1 this figure stood at about 16 crore. So a good growth in terms of net profit that we are seeing compared to the other metrics. But this is as well as the key operational metrics and the income statement check goes. But let's also talk about the balance sheet, Harsh. There's a lot of important space to cover there as well.
Yeah, absolutely, because how is the company allocating capital? And let's look at first off shareholders equity. It's a strong equity base for a sub 1,000 crore kind of company. So 200 crore in terms of equity shareholders funds. A large part, in fact 90% of this is profits which have been plowed back into the business. So just about 27 crore of pure play equity. The rest is all sitting in premium and reserves, and therefore looks fairly healthy. Look at the debt. That's really standing out for me. 84 crore of borrowing at the end of H1 FY25. No concern whatsoever, because it's a fairly healthy mix of debt and equity. In fact, debt is quite subdued to a large extent, and therefore this is looking fairly good in terms of how the balance sheet is stacking up. Let's look at the cash and bank balances. Well, 45 crore rupees of cash for a roughly 20 odd crore rupee profit business. Not bad at all, and compared to the debt as well, around 80 crore of debt, they've got a fairly healthy amount of cash which is sitting in books. So overall it looks like a very, very healthy balance sheet, well placed for growth, good opportunity to increase debt to grow, good opportunity in terms of utilizing cash to grow. Working capital needs seem to be well taken care of, but that's how the balance sheet is stacking up. Let's look at the cash flow as well very quickly. Now, cash flow from operations has come off slightly, and that's obviously because what Anushi said, there's plenty of maintenance happening in H1 FY25. What's the pipeline like for H2 will be key to understand there. Your net cash flow though has improved to a certain extent. So in that sense, there's a bit of improvement, but that's how cash flows are stacking up. You give it an even Steven kind of a rating on the cash flow front. The dividend yield is 0.7%, not expecting too much, because it's a strong return, or it's a company which gives strong return ratios, and therefore dividends can be depressed for some time because you're getting a 20% plus kind of ROC, which we will come to. Anushi, why don't you, or rather let's look at the return ratios while we are at it. There you go. So look at the ROEs and the ROCs, how they're stacking up. The ROC is roughly 18% currently, the ROE is sitting at a healthy 25%, and therefore a depressed kind of dividend yield, not too bad. Return ratios definitely deserve a thumbs up, because it's a 20% plus kind of return ratio business, or rather mid-teens to 20% kind of return ratios business, which is very solid for a hotels business. But Anushi, shareholding.
Harsh, no complaints there as well in terms of shareholding. If you are looking at, promoters hold about 63.64% of the stake, while foreign institutions hold about 6.5% of stake. Coming to domestic institution, about 0.67% is what they have, and with the rest remaining stake is with the public, that is around 29% of mix. So a good mix in terms of shareholding that we are looking at. But let's also see how the company has performed with the kind of metrics, the balance sheet, the cash flow it has. How is the investor confidence in this company? In the last 6 months, we've not seen much of a movement in terms of stock price performance. We've in fact seen a 1% of a downtick. In 1 year, we've seen about 11% of an uptick in stock prices. But the last 5 years, it's the last 5 years which we've seen a very healthy number, around more than a 300% of gains in this company. So definitely in terms of the long-term perspective, the stock has awarded its return. While coming to the street coverage, we don't have a lot of analysts on the street covering this particular company. We just have one analyst, and their target price is around 431, which is again a 22% of an upside that we are looking at. So this is as far as the shareholding, the promoter confidence, the street performance, the investor, how they think about the company, and the analyst recommendation goes for Royal Orchard.
Okay, so that's how we're stacking up. Let's quickly summarize that in a nutshell first before we do a quick SWOT. There you go. Operational metrics flat. We did speak about this. H1 this year was slightly depressed. How quickly are we recovering in H2 is something that we'll have to look for. Income statement also flat because margins were slightly on the weaker side, even though profit growth was strong. Balance sheet looks very, very healthy. Cash flow, because of the income statement, largely impacted this time around, and therefore flat. We'll have to wait and watch how that plays out. Let's quickly move to the next one. There you go. Return ratios, definitely a thumbs up, no doubt there. Shareholding 63% has remained above 60 for a very long period of time, and therefore clearly a thumbs up. Street cred, it's given good returns, especially in the medium term for sure. Street coverage, there's just lack of it, frankly, even though Nuvama has a very positive, constructive note on it, 22% upside. But that's how the KYC rating stacks up. It's a 5.5 on 8, a very healthy one. But that may change a little bit depending on our interaction with the management. Before I go to management, I want to quickly look at the strengths, weaknesses, opportunities and threats. First off, on the strength side, it's got good brand presence. The room additions and the pipeline looks extremely strong. On the weaknesses, it's a smaller brand versus some of the bigger ones. Indian Hotels, East India Hotels, far stronger brands in that sense. And that's where it probably doesn't pack as much of a punch. Also on the size of the company, just 1,000 crore versus the kind of company size that some of the others are at. Margin pressures, temporary, likely, but at the moment that's a weakness which is sitting in that box. Let's look at opportunities as well. There's a large growth runway, right, Anushi? The hotels business these days has a very large runway. Why don't you take this over?
Especially after COVID, what we've seen in terms of travel, the revenge travel that we are seeing, it's been crazy for hospitality.
You've been traveling quite a bit.
You too, Harsh. So if we look at the opportunity side of the business, there's a long growth way that we are looking in terms of revenue for the company. Anticipation is of a 15% of an increase in terms of revenue. This is from the existing brands itself that we are seeing. Another good opportunity for the business is that now instead of volume, it's considering on its value offering. So this means that its focus is shifting towards its more premium offerings, which is catered towards the 5-star business. So again, a good set of ARR growth that we can see coming in for the company. We had pointed out in the beginning as well that ARR pickup is something that we should be watching out for in terms of management commentary as far as it goes. There's a lot of capacity additions also happening in terms of new pipeline coming into the picture, which could further aid the revenue growth for the company as well. In threats, if you look at this, is more on the operational side of, or more on the industry side of threats that we are looking at. Firstly, hospitality as a business is cyclical in nature. So any kind of disturbances in this is potentially what we can be seen in coming. But after the kind of return that we've seen post-COVID, this is one industry wherein is cyclicity a question again, still rooms over that. And again, other than that, occupancy levels is something that we should continue to keep in check for some of the new properties coming in for the company, since this could be something that we should be watching out for. This as far as the opportunities and threats of the business are concerned, Harsh.
Right. While we are at that, let's also quickly go across. We have the management with us. We have Amit Jaiswal, who's the CFO at Royal Orchard Hotels, joining us. Welcome, Amit. Good having you here. Amit, I want to first start off by asking what's happening on the ARR front, which is average room rent. Or rather average room rates. What's happening there? Do you believe that this taper towards 5,000 in your hotels is something which is going to last in the medium term? Was the FY23 and 24 numbers slightly, in that sense an anomaly?
Yeah, thank you so much.
Right.
Yes, let me tell you one thing. As far as the ARR growth is concerned, if I, compare the last year, same quarter or H1 with, this year's H1, there is a growth. Okay. So last year we were at around 4,700. Now we are at 5,100 and so. And let me tell you also the ARR is going to grow substantially in next 2 years. That is 25-26 and 26-27, there will be a growth of roughly, 15 to 20% growth you will see in ARR because there's huge demand. Now, if this quarter is very good for the entire industry as such, it's not only Royal Orchid, but for all the entire industry, the occupancies has been good and the business is good. And that's why it will drive the ARR to go further. The growth in demand in last couple of years has been phenomenal. Okay, the economy of our country is doing well. There's huge domestic travels which happen, but of course domestic travel affects the leisure destinations, but business also is doing well. And I have no reason to, estimate a growth of 15% in the ARR in next 2 years.
Jaiswal, this is Anushi joining in. So 15% is the growth projection that you have for the next 1 to 2 years in terms of ARR. So considering that along with increase in occupancies, if you can give us a picture on that as well, what is the kind of revenue growth that we can expect from the business side, since you have tall targets for the PAT margins and the PAT numbers as well for FY26 and 27? If you can help us with the revenue growth for the company.
Yeah, so as far as the occupancies are concerned, right now we are at 70 plus. So it may go up by another 5-6% because doing an occupancy above 77-78% becomes a little difficult. Being the weekends, the occupancies of all the business hotel drops. So I believe that the occupancy of 76-77% will be the optimum occupancies. So another growth of maybe 3-4% will be there. Now, as far as the year 25-26 is concerned, let me tell you that we will be launching our new 300-room 5-star deluxe hotel in Mumbai next to the Terminal 2, which we will be launching at the end of this financial year. So that the next year this hotel will add a lot of revenues to our group as such. 100 crore plus will be added. So next year our target top line of 500 crore is there. And the bottom line will grow by almost 20%. That's the target we have kept for next year, which looks very reasonably achievable.
One quick clarification on this one. So you will have a new hotel coming up in Mumbai next to T2. Likely, that will help your ARRs as well. Does this 15% bump up in ARR include that? Okay, yeah.
No.
Understood.
That is excluding. That will bump up our ARR drastically up. This I'm talking the organic growth will be around 15% next 2 years.
Understood. So this is on existing hotels. There will be a 15% growth. On top of it, you'll have your Mumbai hotel, which will contribute disproportionately with regard to the ARR. So understood, sir. Also, I want to understand how has recovery in H2 been? You had certain pockets of your business which were under maintenance. And therefore, there was some bit of anomaly which crept into H1's numbers. Has H2 been robust for you? Has it been full-fledged in terms, and I'm not asking you numbers, but just in terms of business, has it been full power?
See, yes, let me get back to you. I was just hearing both of you speaking about our company that our bottom line got hit. Okay, let me tell you, I have given a lot of explanation towards that. See, we all of a sudden, when the COVID started, we were around 40-45 hotels we were having. Then all of a sudden in the last 2 years, we have crossed 100 hotels and our target is to, take further. We have around 21-22 hotels in the pipeline signed, which are ready to open in next 6 months. So we had to invest a lot of money in creating the bandwidth and the infrastructure to manage such a large chain of hotels. Okay, that's why what happened in last 1 year, if you see, we have invested a lot of money into that, whether it is IT, manpower, and a lot of hotels required some spruce up. So we have been investing. That is why our bottom line got hit in last 1.5 year. However, the benefit of this will come in next 3-4 years. Okay, whatever we are doing now, this expenditure are being hit into our P&L immediately, but the benefit of all this we will be reaping in next 3-4 years. So that is why I am telling that the further next 2-3 years looks very enterprising. And as far as this H2 is concerned, H1 was badly hit first quarter because of the elections and the heat wave. And in second quarter, there were a lot of rains however, the numbers were not hit that badly in Q2 because of the rain. But believe me, this quarter is good. And it is not only good for us, it is for the entire industry. And we have been doing predominantly very well in this quarter, and hopefully fourth quarter also appears to be very good.
So, Jaiswal, that you have a lot of new inventory coming up. In fact, you've mentioned that you have stayed in front of the curve in terms of the capacity additions that you plan over the next 2 to 3 years. But considering the kind of capex that you're making with the new inventory coming on stream, I want to understand the margin picture for not this FY25 in particular, but once the inventory is back full-fledged in picture, we see more of these revenue growth that you've pointed out after 2 to 3 years. So a long-term picture in terms of where margins are concerned, if you can give us clarification that whether it would be back to what we had seen in the FY23 levels or where?
See, let me tell you, we don't have a huge capex plan. Okay, as I told you earlier also that our strategy is asset light, and these hotels which are coming up, a lot of other revenue share hotels are coming up where we don't have a huge capex deployment. In management business, we don't invest anything, and only in the revenue share, some part of capex is required for the deposit and all. But we don't have a huge capex plan. Barring couple of hotels, one is Goa, where we are trying to add another 40 odd rooms. So there probably we'll be spending some 25 crores for adding those, because Goa market is doing phenomenal, and that hotel will add a lot of value to our the entire group. And apart from that, another 15 crore, we are again adding inventory in our resort in Bangalore, which is also doing very well. So barring this, we don't have a huge capex plan. We are committed to follow the asset light strategy, which we will be doing. So our return on capital employment is going to further improve in next couple of years.
So, Mr. Jaiswal, you've guided for 100 crore profit after tax by FY26. You're guiding for a 500 crore top line by FY26. Mumbai hotel also coming through likely. Where do you deploy that money? Because you're going to be capex light.
Yeah. So yes, I will explain to you. See, these internal accruals, we will try to make the company debt free.
Okay.
Second, whatever revenue share hotels we sign, we need to give some deposit, like 6 months rental deposit, and some working capital and some loose furniture, linen, blah blah things we have to add. So for each hotel, say of 100 rooms, we need to invest around 8 to 9 crores. So with this money, we will be further growing and taking the hotels on leases and revenue share model in time to come. The target is that around 10% of the addition should come in this leased and revenue share model.
So just give us visibility. Maybe FY26, how many hotels will you have? How many would you be owning and how many will you be managing?
See, if you really look at that, how we are owning and managing, see, most of our hotel are managed. See, total 6,556 rooms, out of which 5,277 rooms we are managing. And balance, we are owning and leasing it. So this ratio we will be maintaining. And in FY26, we should be owning roughly around 130 odd hotels by the end of FY26, 130 to 135 hotels. We will be running it, out of which around 18 hotels we will be, like owned and leased model, it will be there. Balance all we will be managing it.
It certainly changes the picture, Mr. Jaiswal, with regard to the analysis we did at the start of this show. And might also tweak the ratings a little bit. Maybe Anushi can sit back and do that. But thank you so much for joining us and giving us all of those clarifications. Helpful to understand how the business is doing. Thanks so much for joining us this morning.
Thank you, yes. Thanks.
Well, with that, from Anushi, myself, everyone who puts the show together, thanks so much for watching. We hope you found it extremely productive. Stay tuned to NDTV Profit. More action on the other side.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, The news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Hot Money. I'm Hiral Datia and with me is Varsha Chandani. Varsha, good afternoon. Clearly, markets are trading in the positive. However, it's a pretty slow day from the day's highs. We have gone down now. We hit a high of almost 23,854 in terms of Nifty 50 and now we are down almost around 100 points. Overall, if you see in terms of the advance decline ratio as well, you have 33 advances on Nifty versus 16 declines, and that's what the stat is indicating in terms, in terms of NSE overall. The declines are almost the double with regards to what the advances are looking like. Overall, let's pull up the sectoral heat map and see where is the pressure coming in, which is not helping Nifty 50. Overall, if you see in terms of sectors which are losing, Nifty Media is the top losing sector, followed by Nifty Real Estate, which is down a little over 1.2%. Apart from that, metals has been under pressure over the last couple of trading sessions, and the pressure could continue as well. FMCG, IT are also down in trade. Pharma is absolutely on the borderline. Private banks and bank Nifty is on the borderline, but it's interesting to see how auto is the top gainer. The PSU bank index is surprisingly doing well with gains of almost 0.3 to 0.4%. It's a good buying interest coming in the PSU banking space, and you have infra which is up and about. So that's what the sectoral heat map is looking like. And if you see in terms of stocks, Maruti Suzuki is the top gainer in today's session, followed by Adani Ports, M&M, Coal India, as well as SBI Life, which are doing well in trade. Trent is losing today. Grasim is down. Asian Paints, ICICI Bank, as well as TCS. These are the ones which are trading under pressure. Basha, that's the overall picture with regards to the larger market size. But what are broader markets indicating?
Well, here quite opposite if you see. So Nifty mid-cap 150, is down almost 0.5%. Key companies, which are dragging the index are Cummins, then you have Bandhan Bank, Uno Minda, Metro Brand. While if you see Nifty small cap 250, down 0.45%. Now the key companies which are dragging the index are, you have Hind Copper, you have Chemplast, Phenolics Cable, Titagar Rail, and NMDC E-Class. But while Intellect Design, KFin Tech, Godfrey Phillips, Blue Dart are in green today. Even when I talk about, Hiral Godfrey, so basically the company said that 24/7 retail store actually filed suit against the company for the royalty, and the company suit asked for royalty and damages worth 2 crore. But the stock is up, quite 6-7% in trade today. Yeah.
Absolutely. So that's with regards to the gainers, but few losers also I want to highlight in terms of the markets. Is going to be the key theme today. On number one, you have RIL. Now, is RIL's position of being the largest listed firm at risk? And if so, who is going to take over? Mika is going to get us the details.
Well, the theme 2 would be last leg of order wins and contracts for 2024. We'll have a couple of companies that we'll be speaking about.
And on number 3, we will be talking about stake sales, acquisitions, and investments.
Theme 4 will be banks, how the year has gone by for the banks, especially for the PSU banks.
And you have 2 stocks from the pharma pack that are in focus on the back of the impact of inspection outcomes. One positive, one negative.
While the last theme will be which defense stocks should you invest in, we speak about the key defense stocks as of today.
So these are the 6 themes that we're focusing on, but let's look at the first one. India's largest listed company, that is Reliance Industries, has actually fallen over 23% from its highest points, which it actually achieved in July 2024. Now, this raises an interesting question. Can Reliance Industries be dethroned as India's largest listed firm soon? And if so, who are the contenders who could be taking it over? Mika is joining us with the data to try and answer that. Mika, over to you.
Thank you for that. Reliance Industries not done very well this year. It's down about 5% year to date, but it's still the largest listed firm on Indian stock markets today. But the stock is down from its life high. It's down 23%, and this is a life high it did reach in July. And it will see the longest monthly losing streak since COVID's slump on the markets if the stock doesn't gain 5% before 2024 ends, and that's 3 more trading sessions and 1 more that is today. And the milestone of 10 consecutive calendar years of positive returns will be at risk if it doesn't do so. Now, what has been dragging RIL? Several factors. Upwards consensus earnings per share estimates, as per Bloomberg, has fallen 16% versus what it was at the start of the year. The company has failed to meet earnings estimates for the last 6 quarters. 2 of its segments, the O2C, which is a key EBITDA contributor, as well as its retail business, continue to see weak performance, and the delay in the heavy investments it have made in the new energy field yield has yet to be seen, and there's been no value unlocking via IPO announcements of its key business segments, which shareholders were looking out for. So which stock could dethrone RIL's top spot? Well, we have two contenders. Up first, we have India's largest IT company, Tata Consultancy Services, and we also have India's largest bank as per market capitalization, which is HDFC Bank. Even if you see on how the stocks have moved, okay, we can see they're very close in terms of their market caps. When we talk about TCS, the share price is up 10% in 2024, and it's the closest to dethroning RIL's top spot than it has been in years. And there's been a renewed optimism from a macro perspective on global levels with the global rate cycle easing, and this bodes well for the Indian IT sector. And lastly, when you talk about HDFC Bank, where HDFC Bank's share price finally crossed the 1,750 rupee per share level in 2024, and this is a level that the stock has been testing for almost 3 years now, and it's done so this year. And lastly, it's also set to deliver 11 consecutive years of gains. So you have HDFC Bank and TCS likely contenders to dethrone RIL's top spot in terms of market capitalization.
Thank you, Mika, for getting us the details. That's an interesting analysis that we're picking up. Let me also welcome in Gaurang Shah from Geojit Financial. Gaurang, good afternoon and welcome to the show. You heard Mika, RIL, probably to be dethroned in terms of market capitalization by HDFC Bank, which was absolutely a slow mover and now probably starting to pick up pace. And you have the likes of a TCS coming our way. How are you looking at these three companies and what would you advise to buy?
Well, thank you very much, Hiral, for having me on the show, and good afternoon to all of you all. So first, let me give a prudent disclosure. As a brokerage house, Hiral, we have coverage on all three: Reliance, HDFC Bank, as well as TCS. Let me give you a trivia over here. The two likely contenders to overthrow Reliance used to be underperformers. First half of 2024, Jan to June, if you look at HDFC Bank, it was, consolidating or stagnant between 1400 and 1500. Didn't do much for quite a long period of time. And of course, we had the legacy of two large companies merging into one, HDFC Limited into HDFC Bank. TCS, I think about 21, 22, 22, 23, if you actually go to see, the entire IT sector was underperforming and nobody wanted to even touch or go closer to the IT sector because of the non-conducive global environment and of course earnings disappointment. Fast forward to the current date, these two are the contenders to possibly replace Reliance. But yeah, I mean, replace Reliance Industries. I do agree that the energy business and the O2C business and of course the retail energy business, I'm talking about the green hydrogen and of course the solar push that they are going to do. They will start contributing as the ground level, works kicks off and the market share is possibly captured. As far as retail and O2C business, yeah, I mean, there was expectation, the contribution to come through, but that's not. Like I said, I won't give a biased opinion on either of them. I will give an equal weightage to all three since we have coverage on all three of them.
Right, equal weightage to all three. Thank you, Gaurang. So now moving on, second theme is order wins and contracts. Seagull India, Panacea Biotech, NACL, Ramke Infra and Walchandar Nagar Industries are the companies in focus. Let's go across to Mika for more on this.
Varsha, you've seen all the stocks actually gain. Up first, I'll talk about Seagull India. Now, its subsidiary has executed an agreement with the National Highways Authority of India, and they're going to develop a 6-lane Ludhiana, but in the Greenfield Highway, which will be a part of the Ludhiana-Ajmer Economic Corridor. Now, the project cost is at 981 crores and is expected to be completed within the next 24 months. Now, as of Q2, the order book of the company did stand at around 12,000 crores, and the new order win is in a key segment of the company because around 85% of the company's total orders do come from the roads or the highway segment. Up next, we have Panacea Biotech. It's received a 127 crore order win from UNICEF, and this order value is at 22% its total FY24 revenue number, and the order contains the supply of 115 million doses of bivalent oral polio vaccines, which will fill the requirements in the Africa and Asia regions, and this order will be executed in 2025. Then we have National Aluminium Company, which has signed a mining lease deed for the for the Utkal D and the Utkal E coal block. The block will help enhance the company's coal production capacity to 4 million tons per annum, and will also help secure fuel for its captive power plants, and it could help reduce the power and fuel costs for the company, since this is a key cost for the company. It's around 37% of their total expenses, and the lease deed is valid for a long period. It's valid up till April 21st of 2051. Then we have Ramki Infrastructure. It's received a letter of acceptance from the Hyderabad Metropolitan Water Supply and Sewerage Board. This order value is at 215.08 crores, and it's going to operate and maintain the sewage treatment plants for a period of 5 years. And lastly, we have Valchand Nagar Industries. It's received a purchase order from Fluorine Korea Company, and the order is worth 45 crores. They're going to manufacture and supply HF, or hydrofluoric acid, a reactor for Fluorine Korea's Fisher project, and they will execute this order by October of 2025.
Well, thank you, Mihika, for all such details. Gaurang, the stocks that Mihika has highlighted, your views on this, which all stocks you are tracking?
Well, so Usha, Nalco is the one that we have a positive coverage on. But other than sectorially speaking, I think your colleague was mentioning about, Mihika was mentioning about infrastructure. So as a brokerage house, we remain very optimistic on the infrastructure sector. And I think very soon, 1st of Feb, we will have the budget unfold in front of us. Like every year, we expect the budgetary allocation for infrastructure creation and modernization of existing infrastructure to be a big theme going forward. We, in the infrastructure space, we have coverage on NCC Limited, PNC Infra, KNR Constructions, HG Infra and Engineering, and a company which is a well-diversified company for almost about 8 decades, that is Larsen & Toubro L&T, which also has an infrastructure business vertical. So we believe that infrastructure is going to be one of the themes to look forward for 2025.
Right, so infrastructure, a theme that we should be watching out for with regards to 2025. But moving on, stake sales, acquisitions and investments that are happening at the lag end. 3 stocks that we're focusing on. One is, you have IGI, who has acquired 100% stake in IGI Netherlands. Secondly, you have Ultratech that has gone ahead and acquired 26% stake in CleanMax Sapphire. And another one that we are watching out for as well in terms of today's session, I'll just pick up the name, I've just lost that one. We have TCI as well, that is in focus, Reflex Industries, Bharat Forge, as well as Aditya Capital. But first, let me get in Rucha to get us more in terms of the 3 stocks that she's closely tracking today. Rucha, over to you.
Thank you so much. So I'll start with IGI, which is International Gemological Institute. The company has acquired 100% stake in 2 companies, IGI Netherlands BV and International Gemological Institute BV. So one is the Netherlands-based and another one is the subsidiary. So the acquisition for the Netherlands-based subsidiary is for $88 million, and for the other company is $69 million. Now remember that this company got listed on the bourses on the 20th at 22% premium. But moving on to Ultratech Cement, well, the company has acquired stake in CleanMax. Now this is for the purpose of entering into the clean energy and also fulfilling its meeting its green energy needs and optimizing on energy costs, as well as complying with the regulatory requirements for captive power consumption. Moving on to TCI, that is Transport Corporation of India. The company has actually sold, which is on a slump sale basis. It has sold the chemical logistic business, but a catch over here is this has been sold to its own subsidiary company, so there will be no change in the shareholding pattern. The sale is to happen at a fair market value of 45 crore rupees. Well, the turnover of the company stands out at 99 crore. The chemical business stands out at 99 crore, which is about 2.7% of the total turnover of the company. But adding on to more, why is the company actually doing this? Number one, because it wants to differentiate the chemical business from its other businesses, and also it says that the chemical business requires a focused leadership and management. So this is what we have for these 3 stocks which I have closely picked. Another one, Hiral, as you rightly mentioned, Reflex Industry, just giving up a short brief sale of up to 33% stake in Wenwid Reflex Power, but the buyer does not belong to the promoter group. Bharat Forge, another stock, investment of 39 billion in Germany-based Bharat Forge Globing Holding. And lastly, Aditya Birla Capital, investment of about 23 crore in Aditya Birla Health Insurance. Back to you.
right, thank you for getting us the details, Rucha. So these are few of the stocks we've been watching out for. Gaurang, from the names that Rucha got to us, let's pick up firstly IGI, bumper listing. Again, the stock, has seen smart returns from the listing date as well. How are you looking at that one? And secondly, with regards to TCI, both these counters, what's your view?
So I'll take the second one first, Hiral. On Transport Corporation of India, we do have a positive coverage. I think it's a well-placed company to augment the entire transportation and logistics sector. Not really spoken about much, Transport Corporation of India, as far as investment ideas are concerned. But we remain optimistic on the entire logistics stroke transportation related sector. On IGI, well, as far as my knowledge goes, there is no listed entity to do a comparison with the kind of business that IGI is into. And of course, the listing and the up move that we've seen on IGI remains to be a stock which should be in your spotlight. I won't give a specific comment on IGI since we have not covered it on the fundamental side. The other stocks that your colleague has spoken about is Bharat Forge and Ultratech. We remain positive on Ultratech. Was in news last week also because of some stake in India Cement, if I'm not mistaken. And the entire cement sector, Hiral, I think, like we spoke about the spotlight sector being infra. And infra is very closely connected with cement manufacturing capabilities and capacities in India. And also the fact, Hiral, is that there are a lot of entry barriers for new production capacities to come up as far as the cement manufacturing is concerned. So we've already seen a lot of M&As. We are continuing to see the M&A. And I think as we go into 2025, we will definitely see a lot of M&As happening, wherein smaller, weak manufacturing companies of cement will be a potential target by mid or large cap manufacturing companies. Bharat Forge, auto ancillary stroke defense play. This stock also looks quite well placed in terms of earnings visibility and growth.
Right. Thank you, Gaurang, for that. Now, moving on, fourth theme in focus is the year gone by for the banking space. The Bank Nifty has relatively underperformed the Nifty 50. Harsh joins us with the details on how the segment fared in 2024.
Well, yes. So, trying to break this down, it's been a tough year for banks. You've just been given a 6% return on the Bank Nifty versus the 9% on the Nifty 50. This is year to date. And, within this universe as well, the top gainers, which have significantly outperformed, ICICI, SBI, Federal Bank, those are the ones which have done very, very well. And Can Bank and PNB also outperforming to a certain extent. PNB not so much, but you just have about 4 banks which have outperformed the Nifty Banking Index as well as the Nifty 50. In terms of where you stack up the underperformers, and there are so many, as you can see. IndusInd down 41%, IDFC First down 30%, AU Small down 29%. A chunk being taken out of each of those in terms of returns for shareholders. A lot of it to do with the kind of stability that banking business has done in 2024. That's been the first key highlight for me this year. Stable earnings have been rewarded very well. SBI being able to maintain the 1% plus ROA, ICICI Bank being able to maintain 2.3% plus ROA. Just the stability in earnings has really allowed the stocks to fly. The second key highlight for me was the focus has shifted more towards deposit growth. Strong deposit franchise has been able to do better. Loan to deposit ratios being healthy, those banks have done relatively better. ICICI, SBI, both of them doing fairly well on both of those metrics. Where asset quality issues have come towards the fag end of this year, we've started to see that again. Now the focus has started to shift towards asset quality as we close 2024. So likely a lot of this will get carried into 2025, and those sustaining those kind of numbers with regard to asset quality will likely do better in 2025 as well. Loan growth, well, that's begun to taper towards the fag end of 2024. How much of that gets carried to 2025 is going to hold another key piece with regard to how returns will shape up. So what are currently headwinds, or what are things that we need to watch out for rather in 2025? Will asset quality issues sustain, or will it go off as quickly as they've come in? So likely the current view seems to be it will sustain in 2025, and therefore good banks with good asset quality will get rewarded disproportionately. Loan to deposit ratio likely to shrink. Deposit growth has already picked up pace, loan growth has tapered, and therefore the band in which loan to deposit ratio has been incremental, has definitely shrunk by quite a bit. And that's what's already playing out and will continue to play out in 2025. Can system loan growth sustain? How low will it go? Will it sustain double digit? Will it go lower? Then some of the faster growing banks will start to take precedence, and those ones will be the ones which will do well. Margins, ROA to shrink if the RBI will raise rates. This is something we'll have to really look at, because there'll be some banks where the margins will shrink sharply and quickly. Some banks will be able to hold on to margins. The ones which are able to hold on to margins will hold on to ROAs and will definitely do better temporarily. It may be a 2-quarter thing, but nonetheless that will still impact numbers for 2 quarters. Now, in terms of how the price to book has shaped up, nearly all of these are trading at least a 10% discount. Nearly all. That's how it's playing out. So despite HDFC, ICICI being at those multiples, they're still trading at least a 10% discount to 5-year average, right? And you look at a Kotak at 2.2 times and Axis Bank at 1.7, IndusInd now at 0.9 times. This is all 1 year forward. SBI at 1.4 and Bob at 0.9. And this brings me beautifully to the kind of upside that analysts are seeing on some of these. IndusInd 54%. AU and Axis, these are the other two which are favorites after the outperformance that we've seen from an ICICI. Some of those are largely the favorites. Can Bank, Bob and SBI within the PSU banking space. Federal Bank has done ever so well. 16% seems to be the consensus there as well.
Well, thank you, Harsh. Gaurang, your views on the sector considering the valuations, and also are there any undervalued banks that you recommend?
Well, our advice to investor is that, look, if you're going to build up a portfolio, then finance, that is banking and finance, needs to be a core part of that particular portfolio. Yes, we have seen some difficult times in terms of asset quality. We've seen some difficult times in terms of mobilization of deposits. There has been difficult times in maintaining CASA, gross and net NPA, whatever be it. But I'll put one simple argument forward, that if aspiration for India is to become the next $1 trillion economy, and the other aspiration for India is to become one of the largest manufacturing hubs, then I think we are going to possibly see a very strong contribution coming from banking and finance, because without banking and finance, you will not be able to become either the next $1 trillion economy or a large manufacturing hub. So we are inclined towards both private sector bank, public sector banks, and strong NBFCs. And my view is that interest rates will possibly play a little bit of role, not a very crucial role. But I think if the loan book growth is going to come through, if you are able to mobilize your funds and give it out in terms of your loan book at a very decent spread, then your margins are also going to stay intact and grow. As far as asset quality is concerned, we are convinced that we are going to see a slow and steady downtick in asset quality, which will also give a good push for the provisionings to come back onto the balance sheet.
Right. Thank you, Gaurang. Next, fifth theme is pharma companies which are in focus. Now, Gaurang, I'll directly come to you on two of the pharma companies which are in focus. One is Gland Pharma, which has received its Cenexi, which is its subsidiary, has received 10 observation. How are you reading this observation, number one? And number two, on Aarti Drugs, we've seen this profit booking today because on Tuesday, a company got EIR. So how are you reading this for both of the companies, for Gland and Aarti?
Well, so I don't recollect whether we have coverage on Gland. Aarti we definitely don't have. But the sad part about the Indian entire pharmaceutical sector is that you keep on getting Form 483s and EIRs and some kind of shortfalls in the medicines or injections that they have manufactured, and sometimes they have to even recall it because of those shortfalls. Now, this particular has its impact not only on that particular company, but also has a rippling effect on the entire sector. Having said that, the fact still remains that India was, is, and will always remain a pharmacy to the world. I don't think there is any other country that can come up with the kind of experience, capability, capacity that India currently has, and we are also growing over there. We have more than half a dozen companies in this particular sector under our coverage, including your large cap and mid caps. To name one or two mid caps, I think Zydus Life, Zydus Wellness, Aurobindo Pharma, Natco Pharma. These are some of the names which we have coverage. On the large cap side, we like Dr. Reddy's, Divi's, Sun Pharma, Cipla. And I would also go to the extent to say that don't keep yourself restricted to pharma. Also take into consideration diagnostic sectors as well as healthcare like hospitals, because all three makes a very stable investment platform. As far as hospitals, Apollo, Narayan Rudalaya and Fortis. On the diagnosis side, we like, excuse me, Dr. Lal Path Labs.
Right. Thank you so much, Gaurang, for answering all the questions. It was great having you. Well, with that, it's a wrap on the edition of Hot Money, but stay tuned to NDTV Profit as a special conversation on India's defense sector is coming up on the other side.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed.
Welcome to our year-end special Big Ideas 2025. Today we're discussing the defense sector. In fact, brokerages are absolutely positive on the the India defense sector, and clearly big order wins that could be in the offing. In fact, analysts have picked this as one of their top sectors as well. To discuss more, joining me is my colleague Anushi as well. And on our guest lineup, we have Amit Mahajan, Director at Paras Defence and Space Technologies, as well as Harshit Kapadia, VP Consumer Durable and Electrical and Capital Goods at Elara Capital. Welcome to the show, gentlemen. Firstly, before I come to Harshit, one thing, Amit, I want to ask you is the way the sector has been growing. Now, analysts like Harshit are clearly saying that Q3 and Q4 is going to be a half yearly to be watching out for in terms of big order wins and the kind of pipeline that is expected to come through. How are you looking at it, and how is it stacking up for a Paras Defence?
Firstly, thank you so much for having me over, and it's always a pleasure to interact with Harshit as well. We've interacted at multiple occasions. Yeah, the sector in general looks very, very promising. The order book, if you know, and it's a public information with Paras Defence, the order book is at all-time high. Our H1 results have also shown that we are on track to achieve something that we not just projected, but also far and beyond industry average. So I think there are only reasons to smile. As we are closing in with Q3 and coming Q4, we are looking at achieving a good projected growth, and the continual orders, which is orders inflow, will ensure that the next year also goes in a similar fashion. I think this is a good time to be in Indian manufacturing.
All right, a good year for the defense manufacturing. But Harshit, coming to you, your headline itself is very catchy. If you can see, expect fireworks in Q4 as indigenization is expected to go up. I want to talk to you about this for the outlook of next H2 FY25. Of course, the defense capex has to be met. So what is the expectations that one can expect from the next half of the year in terms of the order picture, in terms of inflows that we can be seen, and which are some of these programs that could benefit out of it?
Thanks for having me on the show, and it's always nice to interact with Amit from Paras. So on the second half of this year, so the overall spending has been very low if you look at the first half of this year. And given that they want to exhaust the budget of 1.72 lakh crore, this next 2 months, next 3 months are going to be the very cautious month where we are going to see incremental spending of close to around 1 lakh crore. Now this number, if you look at 2 years back, there was a one single day order outflow which happened from the Ministry of Defence of 60,000 crores in March 2023. Maybe we can have a similar repeat, or it could be staggered across the next 3 months, coming from Jan to March. And some large import orders are also being part of this order inflow. One being Rafale M, which we are importing from France, and a US drone, MQ-9B drone. So those are 2 big ticket items. But apart from that, there are a lot of domestic items which are also in pipeline. And if you look at the allocation of 1.72 lakh crore, almost 75% has been allocated to domestic companies. Hence, companies like Paras Defence will also get benefit once we see the MOD getting into action mode.
Right. Harshit, with this, when you talk about the ongoing unrest with regards to Europe, the wars that are happening in the Middle East, as well as a failed coup in East Asia. All of this, yes, bad news, but augurs well for this sector from an Indian context perspective. How are you expecting that to pan out for the sector from here on? Because I think the projections are almost $130 billion over the next 5 years. Do you think that's something which is achievable, taking into consideration the capacities that we already have?
Yes, so that number is a cumulative number of $130 billion that one is looking at. On the export side, given that globally, most of the big exporters like Russia, they are already fighting their war. So there is limited inventory which they can, sell to the other countries. And given the geopolitical tension, the countries like India are able to give products at a very reasonable price, like Paras is trying to do itself. So in that way, India export market is rising, led by PSUs and even private share. So if you look at the private share has increased close to around 70% of the overall export. So that is one area that we are very positive about as far as defense is concerned.
Increasing exports, huge headroom for opportunity in terms of where domestic spending is concerned. This gives us a huge thrust on the defense spending for the next 3 to 4 years. Amit, I want to come to you on this one. Considering the size of this defense spending that is expected over the next 4 to 5 years and the projections going forward, where do you stand to benefit from this opportunity? Can you give us your market size in this, how you could benefit from the further orders that are expected to take place in the next half, as well as the next 2-3 years as well, if we can get a broader picture in this?
Paras Defense, today it's a fortunate situation for us that we exist in tier 3, tier 2, as well as in some areas tier 1 supplier. So if you look at the spectrum of defense spending that is happening at the top level, where the big six or the big PSUs and the big larger companies who are working in the defense sector, they are being the OEMs in this particular sector. Companies like us will serve these programs at multiple occasions. Paras Defense exclusively is a manufacturer of components, manufacturer of subsystems, and complete integrator of larger complex systems. So when we look at we serving these programs, we are slated to be in almost all the programs that you can think of in the Indian defense sector. Said that, are two major verticals that we will be focusing on, and these are the ones that have immense amount of potential, are optics and optronic systems. And on the other hand, defense engineering, which comprises of defense electronics, defense electromagnetic pulse protection, and heavy engineering. So all of this, if you see, these are fundamental blocks of engineering when it comes to any large program. So our contribution to a particular program will be from a pin to aeroplane, from a smallest component to one of the most biggest and the most complex system. Just to give you a perspective, a submarine periscope is a complete system done solely by Paras Defense.
So Amit, one quick question on the optical system space, right? The opportunity is close to $1 billion. You want to have around 50% share over the next 3 years. How are you planning to do this? Because if that is the trajectory over the next 3 years, what's the capex that you will require? That's one part of it. And with regards to defense engineering as well, how big are you expected to grow? And again, how much input will you need?
So, like I mentioned, we are present in the tier 3, tier 2 segment also. And most of the capex that is required to manufacture components and subsystems, we already have put in place. What we are doing now are we are moving up the value chain. When we are moving up the value chain, the dependency on the capex is minimal. All the infrastructure or the space which is required for us to grow and execute larger orders and take a larger pie of the opportunities, we already have in place. All that we will be required to do is maybe construct a few square meters of space to integrate certain technologies that we've already manufactured. So those are some things that will not put any strain on the capex. We will be able to do it through our internal accruals. So we don't calculate that as capex. So moving forward, we should be able to scale up very, very fast. And to a much larger extent than what we are today without having any capex requirement. That's evident also from the recent QIP that we did. If you see the QIP that we did, all of the QIP funds we allocated for the working capital requirements, and none of that was allocated for capex. That is an indication as to how secured we are when it comes to our capital expenditure, and influence is negligible on our growth to look forward.
Paras, a follow up on this one, that means is 253 odd crores is what you've done in FY24. Almost 170 odd crores in terms of revenues is what you've done in the first half of FY25. And with the scale up that you're looking at, what is that revenue target that you have 3 years from now?
This year and next year, I can for sure tell you that we are crossing 40%, or close to 50%. And I hope that I should be able to continue this trend in the third year as well, because the third year from now, I am also very much looking forward for my subsidiaries to kick in. My RF and microwave, which currently contributes to the R&D spend of the company, will start giving big revenues and exponential growth from the next financial year, which will have a small impact, but next to next financial year will have a big impact. So if you look forward for the next 3 years at least, we are slated for a growth of more than 40%.
Harshit, coming to you, considering what Amit has just mentioned about Paras Defense, he said he's talked about 40% of a growth in terms of the next 2 to 3 years growth outlook. But if you're just talking about the other defense pack in general, there's a huge opportunity in terms of ordering for the next 2 to 3 years. So where are the projections overall for defense companies that we are seeing, the kind of revenue projections that can be expected, and some of the programs that would be in focus that would bring out more benefits for some of the key defense players in focus? If you can emphasize on these parameters.
Sure. So coming on the pipeline, so big projects that we are anticipating which will happen over next few years. One is LCA Tejas, 97 numbers of additional, which is another 60,000 crore project. Followed by this is a LCA Pachanda, a 60,000 crore, a 30,000 crore project. QRSAM, which is a missile, another 15,000 crore project. Next generation Corvette, which is a ship, it is a 36,000 crore project. Beyond that, there is a pipeline for MCA, there is a pipeline for LCA Mark II, there is IMRH helicopter. On the tank side, we are looking at FICVs, FRCVs. On the Navy side, we are looking at additional 3 submarines of 27,000 crores. Apart from that, P75I, another submarine project, which is slated to get tendered out next year. Overall, we are looking at around 15 lakh crores of pipeline over next 10 years. That's the number that we are working with. And looking at the ordering trend, we should see, from Q4 onwards, the ordering should start. If you look at the acceptance of necessity, almost 8.5 lakh crores of orders have been approved by the Ministry of Defense over the last 3 years. Only that this will come out in terms of final orders to the company, hopefully in next 4 to 5 years time frame. That's the number that we are looking at.
Harshit, that's quite a big opportunity that you've pointed out for the next few years in terms of defense ordering pipeline that we could be looking out for. Now, you've spoken about programs like Tejas, QRSM being in focus. I want to understand that with these programs, can you also specify the counters which would be the direct beneficiaries of this? I know there's Bharat Electronics, which is involved in QRSM, there's HAL, but if you can give us an outline on some of the key stocks that one should be watching out for in terms of these order opportunities that we are seeing.
Sure. So coming to Tejas, Hindustan Aeronautics is the biggest beneficiary, followed by Bharat Electronics. There is Dynamatic Technologies, L&T, Data Patterns up to some extent, Astra Microwave for these projects. When it came to submarine project, let's say the P-75I or even the extension of 3 submarines, we have Bharat Electronics, Paras Defense as one of the beneficiaries within this bracket. Apollo Microsystem is another name. Coming to QRSAM, it would be Bharat Electronics, as you rightly pointed out. Apart from that, Bharat Dynamics would be also another beneficiary, followed by companies like Centrum Electronics. These are some names that we are working with. Another name which we think has been doing very good is Data Patterns and Zen Technologies. So they have been doing exceptional work in their field, which I would like to point out.
Right, so these are topics coming in for the defense space. Amit, and sorry for calling you Paras the previous time, but clearly, in terms of what you're looking at, growth guidance we take into consideration. Now, with regards to drones and anti-drones, you plan to become one of the top 5 in drones and number 1 in terms of anti-drones. How big a segment is this going to be for you? And currently, where does it stand? Where do you see it in the next 3 to 5 years?
As we started off drones and anti-drones, when we started off in the drone segment, I think except for Idea 4, there weren't any players working in the drone segment. We were very bullish on this segment, but very rightly so, as required for this segment, the government opened up a lot of barriers, and it allowed a lot of players to come in. Paras Defense is a little spoiled company when it comes to all of this. So when there is a lot of competition, Paras Defense would like to shy away from these. And I'm not saying we're going to go away from the drone segment, but we are not going to be very bullish with this segment. We are right now in the process of making sure that we introduce certain technologies in the drone segment which do not exist currently, and that's where we will be the differentiator. There will be drones which will be something like a heavy lift cargo drones. These drones can be used not just by propellers, but maybe hydrogen fuel cells. I don't want to use or give you a peep into the future, but what I'm trying to tell you is we will bring disruptive technologies even in the drone segment. And that is where, when that happens, which will be very, very soon, we will then talk bullish when it comes to drones.
So Amit, the reason I ask you this is, so currently, what is the kind of capex that you've already incurred with regards to where drones as a segment goes, which is now on a back burner? And when do you see it actually giving results? What contribution to your revenues will you look at it? Maybe 3rd or 5th year from now, because it always helps us do our projections as well.
So drones is very similar to our defense engineering segment, where it is not capex intensive. We do not have to put any machineries for us to, we are not manufacturing the propellers. We are not manufacturing the batteries. So it's a supply chain. It's an organized design. The design is controlled by us, and then we outsource the manufacturing parts, and then we integrate these drones. The software, the controls, everything is designed and manufactured in-house. So what happens is, if you look at drone as a product, to make a product work or be exported also, you don't need a capex to be done. Said that, again, let me come to the RF and microwave, the anti-drone segment. If you look here with a very limited capex, RF and microwave is one domain which is so complex, and it is so much necessary for the kind of opportunities that are going to be there right now and also in the near future, that there are very limited number of companies who are in this segment. All the companies that that Harshit also spoke about, we have Data Patterns, we have Astra Microwave. All of these are RF and microwave companies, and the amount of work that is going to come in this segment is humongous. You get 10 more companies and they all will be stocked up with a lot of work. And hence Paras Defense, although it being a very complex technology segment, has entered into RF and microwave through its subsidiary called as Paras Anti-Drone Technologies. A sign of what kind of team that we have today. We have almost 80 to 90 people working in this subsidiary, and the the capability and the expertise that we have is can be seen that we have won 4 IDEX challenges. I don't think many companies, I don't know many companies who won 4 IDEX challenges, and these are challenges from the smallest to the Aditi 1.0. So we have proved to the team members that our RF and microwave capabilities are substantial and they are extremely scalable. This is the confidence which gives me that couple of years from now, this will contribute to almost 15 to 20% of our revenues, if not more. I'm being very, very conservative here.
Okay, so 15 to 20% of growth is what we are seeing from this new technology coming in. But coming back to the broader perspective on the defense side, I want to understand, Harshit, from you. Now, we've seen a recent correction in the last 6 months or so. Many of these counters have seen sort of correction. Maybe it is because of the kind of rally that has happened before, along with muted order inflows that we've seen in the first half, as you pointed out. But with this, is this a good entry point again for some of the defense counters which are in focus? And if yes, can you point out which are some of those counters that we should be looking out for?
Yes, I believe that this is a very right time to enter into this defense stock. Our picks are Hindustan Aeronautics, Bharat Electronics, BDL, and GRSA. This is something which we like. On the private side, we like Zen Technologies, Data Patterns, Paras Defense. Though we don't cover these names, but this is something that we like, including Extra Microwave, because they are into very niche technologies, and that's where we are sensing a lot of ordering trend to come. And they will be part of the subsystem category once the OEM gets the order. So that's where we are seeing the growth coming to for the defense sector.
Harshit, one key question that I have for you is with regards to the reduction that we've seen in terms of defense exports, right? On the back of localization and indigenization from here on, how much further can we see that dropping? And do you think there is ever a chance that India could become a net exporter in terms of defense?
Yes, India does have the capability to become a next exporter, given our acceptability of product has seen a rise, and we are, building a lot of momentum into this. So when we speak to companies, at least there are 10 to 11 countries with which they are interacting on a very regular basis. Across the globe, from South America to Middle East to the Southeast Asia region, where we are getting our orders, being displayed. Their armed forces are coming to India, us checking our product, testing our products, and then we'll see the order inflow momentum to pick up. Given that this is geopolitical, a lot of things takes time, but we can become a net exporter, and our import contribution has been on a decline. So both is on the positive side for India.
On the positive side for India. Amit, my key question to you is, getting into 2025, the PLI scheme becomes absolutely important. The R&D spends become absolutely important. What is your expectation from the budget?
I'm looking for DLI schemes.
Okay.
So you have development linked or design linked incentive, because production is one thing. Doing when we are looking at being self-reliant or Atmanirbhar when it comes to defense technologies, you should incentivize the design and development of these technologies in-house. And I think that if I have to sense the government, the way they are taking positive steps, surely they will introduce a DLI scheme very, very soon.
Well, Harshit, coming to you, you've spoken a lot of positives that are there in the defense sector. We have upcoming budget to watch out for, new technologies, exports, and more. But what could be the potential headwinds also that we should be wary of when investing in a defense sector or looking at a particular company in general?
So the risk, one would be, one is expectation of the budget. We have been looking at a budget of a 9% CAGR growth. Now, can this number come down to, let's say, a significantly low single digit for a year or some year? So that may impact your order inflow capability of a company. Secondly, the other thing is on the valuation side. So the comfort has to be there. At what valuation you would want to enter the stock. Given the growth trajectory looks to be good, but given that defense takes a time, right from testing a product to getting an order, it's a longer journey time. So you have to be patient in that. Maybe a year or two, you may not find performance up to what has been expected from them, but you have to hold on to your horses, and that's where the risk is. So it's a longer term trajectory. That's where the thing is.
Right. I mean, that's an interesting take coming in as well. But thank you, Amit. Thank you, Harshit, so much for joining us on the show. And defense as a sector is going to be one of the big themes that India Inc. is going to focus on as well. But completely out of time. With that, it's a wrap on this special edition of Big Ideas 2025. A thank you from Anushi and the team that has put the show together, and myself. Lots more lined up on the other side. Please stay tuned.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Hello and welcome to NDTV Profit. You're watching Market IQ and my name is Ruja Somaya. Before moving on, let's take a quick look at how the markets are faring right now. Well, pretty volatile day of markets. If we look at Nifty 50, it's marginally up in the green by about 0.08%. Well, it has given up a majority of its gains. Actually opened up at quite a bit in the green, but now have seen profit booking. Moving on to Sensex, almost flat. Nifty, Bank and IT are actually not doing good, but what I want to highlight is the banking index. Banking was really doing good at the start of the trade, as we can see on our screens, but now is down in the red. Let's take a quick look at the sectoral heat map. The highest gainer actually is autos. Nifty autos is doing well, but in the red. In the red, we have actually media, which is not doing well in trade. Nifty autos, as we can see, is up by almost 0.5% in trade. But moving on to the advances and declines, if we can have that up, of course, kind of volatile trade. Oh, yes, there we go. As we can see, at the start we had kind of more advances, but now it is moving on in the favor of declines. Almost declines are almost 2 times the advances over here. Let's take a look at the constituents of Nifty 50 index. Down in the red, we have Asian Paints, Tata Consumer not doing good. Even heavy names like HDFC Bank, ICICI, well, banks were doing really well at the start but have given up the gains. Most big names are weighing heavy on the index, but auto names like M&M, Tata Motors, Maruti actually holding up the index in the green. Moving on to Nifty IT, which was actually doing bad since the start. Most of the mid-cap names are down in the red, likes of LTTS and Emphasis are not doing good, but in the green we have names like Infosys and TCS, which are actually supporting the index to decline less, I would say. Nifty IT pretty much under pressure, but highest sectoral gainer in CY25. Moving on to Nifty Bank, down in the red we have names like AU Small, IDFC, not doing great. Okay, there we go. Nifty IT, just LTI Mindtree in the green, but Nifty Bank, Bandhan Bank, AU Small, IDFC weighing heavy on the index, down about 72 points versus positive about 200 points at the start of the trade. A few stocks which I want to highlight, which are buzzing on the back of news, is Seagull executed agreement with NHAI for 981 crore project. The stock is up about 3% in trade, so thumbs up for this one. Ola Electric, okay, this one has been volatile since a couple of days, but was up about 5% at the start because it opened about 3,200 stores. But if we look at the chart, given up all the gains, trading flat. Truly a volatile trade over here, so beware of this one. Moving on to Welspun Corporation, wins order worth 130 crore, still trading flat. A few other stocks are Surya Roshni received approval for 1:1 bonus issue, up 2%. Lastly, Raymond Lifestyle, Motilal Oswal sees 49% upside over here in Raymond Lifestyle. Yeah, there we go. Stock actually trading down 2%. Okay, that's strange, but it's market after all. Let's move on to audit firm Deloitte, which has been slapped with a 2 crore rupees fine for lapses in auditing Z Entertainment, and the fine was levied by the National Financing Reporting Authority, or the NFRA. The lapses found by the authority were actually for the fiscal years 2019 and 2020. I have my colleague Vishwanath Nair, who has closely tracked this one and is here with me to decode this one. Vishwanath, please take it over.
Right, thank you. So what we're tracking today is all of the poor track record that Deloitte has racked up over the years, not just in India, but also abroad. But let's first start with the latest news announcement that has come in. The NFRA, or the National Financial Reporting Authority of India, which is India's audit watchdog, has levied about a 2 crore fine on Deloitte. This is primarily because of lapses that NFRA found in Zee Entertainment's audits for FY19 and FY20. What exactly are the issues? Well, Deloitte was found to be guilty of professional misconduct, negligence, and failure to identify misrepresentation, that is specifically by the board. And this is why NFRA has come in and levied this penalty. It has also levied penalties on 2 specific auditors who are working on this case. Now, let's move forward and try and look at some of the other major cases where Deloitte has been involved. Well, one of the biggest ones is the IL&FS scandal in India. Back in 2018, if you remember, this was the largest financial sector scandal that happened in India. And of course, Deloitte was in the center of it all. According to what we know from information is that Deloitte was accused of window dressing IL&FS's books. And this was done primarily to retain the high ratings that IL&FS enjoyed because it was such a large lender. Deloitte has also been accused of failing to flag glaring financial irregularities. There were also fraudulent transactions and excessive borrowing by IL&FS, which were both being missed by Deloitte, which was a big problem. Let's take a look at what exactly has happened after that, or before that actually, in multiple continents across the world where Deloitte has been found to be lacking. The first of which is the one that happened in UK, where the Financial Reporting Council, or the FRC, which is the audit watchdog in the UK, fined £15 million. This is because of the lapses that the UK watchdog found in Autonomy, an IT firm, the audit for this firm. FRC said that Deloitte had failed to act with integrity and objectivity. Another important case was one in China, where Huarong Asset Management Co., where again Deloitte was the auditor, and there again they found material lapses, $30.8 million fine on Deloitte because of that. In fact, Huarong's former head, Lai Zhaomin, was actually sentenced to death over certain aspects of this case. Another important audit where Deloitte was found lacking was the one that happened in Malaysia. Of course, the biggest scandal in Malaysia, the 1MDB scandal. There again, Deloitte had agreed to settle for an $80 million sort of settlement amount, but the Malaysian watchdog did find that it was involved in swindling about $4.5 billion between 2009 and 2014 in the 1MDB scandal, and that was a big one. For our viewers, another important case where Deloitte was found to be lacking was the one in the United States of America, where mortgage lender Taylor Bean and Whitaker was one of the firms that Deloitte had audited. There again, Deloitte had paid $149 million settlement amount to get out of the case. Again, highlighting the poor track record that Deloitte holds. Some of the other audit failures, of course, also include South Africa, where there was a 260 million rand settlement over failures of the Tonga toilet audit that Deloitte conducted. In Nigeria as well, you've seen cases come up where Deloitte had missed a massive fraud in the fintech firm Tingo, and that's why the Nigerian government and the watchdog had fined Deloitte. Now, of course, $470 million, where only about 50 odd million was being recorded. That was a big fraud again in Tingo. Apart from audit issues, there is also sexual harassment and workplace misconduct charges that have been placed against Deloitte. The first of which is from Australia, reporting about 144 ethics breaches in 2024. This includes cases of bullying and harassment in Australia, as well as in UK, where 20 partners were terminated over 4 years for inappropriate behavior, including sexual harassment. There has been a global scrutiny of how exactly Deloitte does its business. In China, there has been an increased oversight of all the big four audit firms. So Deloitte is one of them, of course, in high-profile corporate collapses. Thailand has approved a class action lawsuit against Deloitte over the audit of Stark Corporation. In the US, the Public Company Accounting Oversight Board reported 21% deficiency rate in Deloitte's audits for 2022 financial statements. That was another important one. Now, all of these issues, a poor track record, point to certain specific questions that we are raising here at NDTV Profit. The first one is that there is a serious question that is being raised about the commitment and ethical standards and professional integrity at Deloitte. Now, of course, Deloitte has been repeatedly saying that they are committed to high standards of professional conduct, but of course, so many cases point to that being lacking. Another important question is, can clients continue to trust a firm that repeatedly fails to uphold accountability and transparency? Because remember that clients are what make a consultancy work. Another important question that we are asking here at NDTV Profit is that should firms entrust critical financial and operational data to an entity marred by negligence and misconduct? And lastly, will Deloitte be held accountable for all of its misdeeds?
Okay, very interesting take on that one, Rishi. Thank you so much for joining us with that. But let's shift our focus back to the stock markets. Another stock on the radar right now is Reliance Industries. Well, if we look at the stock price, in last 1 year, the stock is down by about 5%. And that is really huge for a big name like Reliance, because Reliance Industries' reign as India's largest listed firm could be under threat. As I said, the stock is down about 23% from life highs and down about 5% in last 1 year because of key businesses underperforming. And because of all of this, it might also face its longest losing streak since COVID and risks breaking a decade-long positive return streak. I have Mika with me who tracks this one closely. Mika, take it over. Why is this happening and what's the outlook?
Reliance Industries not done very well this year. It's down about 5% year to date, but it's still the largest listed firm on Indian stock markets today. But the stock is down from its life high. It's down 23%, and this is a life high it did reach in July. And it will see the longest monthly losing streak since COVID's slump on the markets if the stock doesn't gain 5% before 2024 ends, and that's 3 more trading sessions and 1 more that is today. And the milestone of 10 consecutive calendar years of positive returns will be at risk if it doesn't do so. Now, what has been dragging RIL? Several factors. Up first, consensus earnings per share estimates as per Bloomberg has fallen 16% versus what it was at the start of the year. The company has failed to meet earnings estimates for the last 6 quarters. 2 of its segments, the O2C, which is a key EBITDA contributor, as well as its retail business, continue to see weak performance, and the delay in the heavy investments that have made in the new energy field has yet to be seen, and there's been no value unlocking via IPO announcements of its key business segments, which shareholders were looking out for. So which stock could dethrone RIL's top spot? Well, we have 2 contenders. Up first, we have India's largest IT company, Tata Consultancy Services, and we also have India's largest bank as per market capitalization, which is HDFC Bank. Even if you see on how the stocks have moved, okay, we can see they're very close in terms of their market caps. When we talk about TCS, the share price is up 10% in 2024, and it's the closest to dethroning RIL's top spot than it has been in years. And there's been a renewed optimism from a macro perspective on global levels with the global rate cycle easing, and this bodes well for the Indian IT sector. And lastly, when you talk about HDFC Bank, where HDFC Bank's share price finally crossed the 1,750 rupee per share level in 2024, and this is a level that the stock has been testing for almost 3 years now, and it's done so this year. And lastly, it's also set to deliver 11 consecutive years of gains. So you have HDFC Bank and TCS likely contenders to dethrone RIL's top spot in terms of market capitalization.
TCS, let's look at this one. In last 5 years, 89% up, and let's look at a 1 year stock movement, 10% up in 1 year, which is not a bad number. And HDFC Bank up about 7% in last 1 year. Possible contenders to dethroning Reliance, but let's shift our spotlight on PCBL Chemical. Well, the stock has seen some smart moves this year, jumps over 78% this year, and whooping 700% jump in last 5 years, actually more than 700%. But what is aiding the stock up move, and what is cooking in over here? I have Varsha who's joining in to explain the buzz. Varsha, take it over.
Well, thanks for that. Let's just see what the PCBL does. So, company manufactures carbon black and specialty chemicals. Now, moving ahead, let's see what is the stock performance. So, Rucha was actually speaking about that. In last 1 year, the stock has given almost 78% return, while in last 5 years, the stock has given more than 700%. Let's see what is aiding this rally. Now, we'll just divide this in section wise. Now, from FY16 to 19, if you see revenue has grown. Now, this is on the back of increase in volume of carbon black plus, but the highlighting focus here is EBITDA margin. If you see, EBITDA margin in FY16 was 7.6% and in FY19 it was 17.4%. Let's see what are the key triggers of this growth in EBITDA margin. So, the key drivers for EBITDA margin is, one is the decrease in cost of raw material, number one, and number two, the reduction in raw material cost is one of the reasons that we have seen the increase in EBITDA margin. And the other driver is shift towards high margin specialty blacks. This is the main reason that we have seen the uptick in EBITDA margin. Now, moving ahead, now if I were to see how company has shown growth from FY19 to FY24. Now, first we'll shift focus from FY19 to FY21, wherein revenue has increased. Now, this is on the back of volume increase. Revenue has decreased. Now, this is on the back of COVID era that we have seen, but over the same years, EBITDA margin has increased. Now, why? One of the reasons is because of COVID, there was low cost. So, low cost is one of the reasons there was uptick in EBITDA margin. But moving on, if you see, let's see what are the key triggers. So, economic slowdown and pandemic impact actually impacted revenue growth, and that's where we have seen the decline, while EBITDA margin improved due to cost optimization during lockdowns. But moving ahead, what happened in post-COVID era? So if I were to talk about from FY21 to FY24, what actually happened there when COVID was actually not there? So, if you see the revenue, in that, if you see the revenue was increased. Now, revenue increase was due to the demand coming back, while EBITDA decreased slightly because post-COVID the offices were open, and because of the cost, the EBITDA margin decreased. But this actually was history, but let's now talk about what's the outlook going ahead. So if I were to talk about the outlook, what company will do going ahead, company is going to they have an aim to reach capacity of 1 million tons from FY27 to 28. So huge increase in capacity that we are speaking about. Number two, increasing share of specialty grade, which are actually margin accretive, which will increase margin for the company going forward. Moving ahead, let's see what company is focusing on. So, company is focusing on polymer and green application in water treatment and detergents. Now, this is through one of their subsidiaries that they have acquired. They also have a target to achieve capex of almost 2,500 crore in carbon black domain over next 4 to 5 years. So huge capex that company is doing, which will aid growth for the company. And they are actually expecting volume CAGR of 10 to 11% in carbon black domain for next 4 to 5 years. And lastly, if you see, they are actually confident when it comes to maintaining their EBITDA per ton at 21,000 per ton. So this will actually increase their margins. And the other growth leg, the other next leg of growth for the company is the JV agreement with Kinda, so through this they are actually entering into, you can say, EVs. So they're going to make some silicon products which will use in anodes for lithium ion batteries. So this is basically the outlook what company is pegging in. But lastly, the most important point where investors should be focusing on is the valuation analysis. Let's take two cases, wherein one is bull case, wherein if the revenue is expected to grow at 35% CAGR and the EPS will come at around 27.8 basis FY26 value. Now, if you just if I were to talk about the PE, what PE it is trading on at FY26 value, so it's around 16x, 16 times of FY26. But if I were to talk about the bear case or the base case, if company does 20% of revenue growth in FY25 and 26, the EPS comes out almost 19 rupees in FY26. So if the PE based on FY26 stands at around 24 times. So all in all, if I were to say on the bull case, the company is kind of cheap as compared to other companies when it comes to valuation. But yeah, on the base case, company is trading at 24x times.
Okay, thank you so much for that, Varsha. But let's shift our focus to stocks which are buzzing on the back of M&A action, and this one is IGI. Well, let's pull up the stock over here. This one is up about 9% in trade. 10% upper circuit is what the company has logged. This is on the back of acquisition made by IGI, which is International Gemological Institute. It acquired 100% stake in IGI Netherlands for an $88 million kind of consideration. Also acquired 100% stake in International Gemological Institute BV for an acquisition of for an amount of $69 million. Actually, the company got listed on the bourses on the 20th of December at 22% premium. Let's talk about turnover of these two companies. Netherlands turnover in FY23 is at about 116 crore or 116 million, and the turnover of the other company is at about 152 crore rupees. Actually, the company had mentioned the purpose of this acquisition to expand its core business in an important market. So pretty much stellar returns is what this recently listed stock has given us. But let's move on and talk about how the curtains are down on 2024. We bring you top 9 stocks with expectation of the highest upside next year. Harsh, who has broke this down for us, tells us more about this. Harsh, please take this over.
Well, yes, 9 Nifty 50 stocks which have upside of more than 30%. This is as per Bloomberg's consensus analyst estimates. These are all analysts combined. It's the average target price on all of these stocks, and all of them have a 30% plus upside, all Nifty 50 large cap stocks, and that's what really stands out for me. Not sure where the Nifty goes on the back of this, but this is how it's standing. Adani Enterprises first off, 82% upside. Of course, it's an incubator of sorts as a company. We've seen some bit of correction on the stock price as well, but as a result of that, analysts see consensus view and the average upside is 4255. 82% upside is what the general analyst view is. Let's move on though. The second one, IndusInd Bank. This one has seen a correction on the back of the poor Q2 piece on asset quality, and that's why you've seen a bit of a correction on the stock price. It's languishing. 52% upside from here. They seem to have over provided to a certain extent. That's what the Q2 commentary suggested. They are being conservative, and therefore likely the analysts seem to be quite bullish. The correction on the stock also helping that particular number, 1441 being the target price. SBI Life, 42% upside from here, target price being 2,000 rupees a share. Again, some bit of regulatory overhang in the life insurance space, allowing you the bandwidth to maybe purchase this, and that's where the upside is what analysts seem to suggest to be, 42%. The next one is Adani Ports. Now, this one again, 1682 being the target price, 41% upside, top ports developer in the country, and of course operator in the country, and therefore the bit of correction that we've seen in the stock, likely an opportunity, is what analysts seem to suggest. The fifth one, again with a 40% upside here, is Coal India. 70 to 80% market share in the coal business and domestic coal business, of course, and 40% upside from here, 536, a large correction in the stock price, allowing for that bandwidth to likely buy into this one. The next one, again, 4 companies with 30% to 40% upside. First one from the Tata Group stable in the Nifty 50, 34% upside, 1211, Tata Consumer Products. The next one is again NTPC, a PSU, 34% upside, 446 being the target price. the largest thermal power generating company in India, this one. Again, a Tata Group company, Tata Motors, 32% upside, 956 being the target price. And the last one, the ninth counter on our list is ONGC, 31% upside, 317 being the target price, linked to oil prices, of course. But large upsides on Nifty 50 counters, not too common, but that's the big idea for 2025.
Well, thank you so much for that, Harsh. Lots more ideas for 2025, and we hope that that it really benefits the investors. Well, as we wrap up 2024, let's take a closer look at the trends and the highlights in the primary markets. We saw some major interests in IPOs this year with some top new listings like Bajaj Housing, Ola Electric and Swiggy. My colleague Sajid Manghat brings you the complete breakdown of IPOs this year. Take a quick look on what he has to say.
2024 has been a year of initial public offerings. As the markets climbed to an all-time high, so did the appetite of the investors to invest in IPOs only to sell and book profits on the listing day. The benchmark indices like the Nifty 50 and Sensex has risen by over 12 to 14% this year, but that does not reflect the euphoria we saw in the primary markets. To begin with, companies raised over 1.74 lakh crores via the IPO route, and a large part of this fundraise was offered for sale by existing investors like private equity and promoters. But this IPO fundraise has been one of the largest ever for the market, luring retail investors and high net worth investors to the IPO in anticipation of listing gains. On the main board, 81 companies raised over 1.74 lakh crores in 2024. 58 of these companies are trading above IPO prices, while 18 of them are trading below IPO prices. Bajaj Housing Finance, Ola Electric, Swiggy, NTPC Green and Hyundai were some of the biggest IPOs this year. Bajaj Housing Finance, Ola and Swiggy are trading above the IPO price, while Hyundai saw a disappointing listing. The year also saw renewable sector companies come to the market to raise funds. Vari Energies, Premier Energies raised money to fund capital expenditure. Among the biggest IPO gainers this year stood Jyoti CNC, KRN Heat Exchangers, Premier Energies, Platinum Industries and Bharti Hexacom. While the main board was active, the SME platform was overheating, requiring the stock exchanges and the regulator to frequently step in with curbs to discourage the retail investors from investing in SME companies that oversubscribed hundreds of times despite higher ticket size of application, putting some of the main board IPOs to shame. Over 230 small and medium companies raised over 9,540 crores in 2024 via the BSE SME platform and the NSE Emerge platform. Out of this, over 204 companies are trading above IPO prices. This has led to more retail and high net worth investors participating in large numbers in these SME IPOs. At the end of the year, only 21 SME IPOs were trading below IPO prices. 2025 holds a promise as a slew of big ticket IPOs are expected to hit the market. Korean electronics major will list its Indian arm LG Electronics on the stock exchanges, and two-wheeler maker, especially the EV maker Ether, will also hit the market in the first quarter of 2025. And of course, the market would need some clarity on the much-awaited NSE IPO.
Well, definitely all eyes on IPOs next year, but that's all that we have on show for now. From myself and my team who has put this show together, thank you very much for watching. Do stay tuned to NDTV Profit. Lots more action on the other side.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on
Thanks for tuning in to the Talking Point podcast. The topic that we have chosen today, on my back, the energy transition gigatrend. And a lot of you know that energy transition is a large sector and a large opportunity. I have had the fortune of reading one of the most well-written and well-documented pieces of work on this subject by Team Value Quest, and therefore I thought it was just important to get them on this podcast to try and understand how do they think about this particular topic, what has gone behind that months and quarters of work that they have put in, and what are the investing implications of this giga trend. Gentlemen, all of you, thank you so much for joining in. Varun Goenka, Ravi Dharamshi, Dr. Arvind Ananthanarayanan, I hope I've gotten all the names correct. Thank you so much for joining in. And Ravi, of course, you need no introduction. It's a pleasure to have you back on this show.
My pleasure to be here.
Yep, and great to have both of you as well along with.
Thank you, Neeraj. It's a pleasure to be here as well.
Thank you so much. So just before we get to energy transition, can we just start off by how you have aptly described in your amazing piece of work, that book, Giga Trend. Why do you call this a Giga Trend?
So first of all, it's a play on words, but giga is essentially associated with electricity, megawatt, gigawatt. So that's the reason. And also to highlight the fact on the enormity of that trend. Essentially, people tend to underestimate the kind of change that is happening. In my opinion, this is the biggest change that humanity is seeing since industrialization. Okay, during industrialization, we built this large capacities of manufacturing, and we learned how to manufacture things at, mass produce and build at scale. this is the most important change happening to that industrialization since then. And the best part about it is it's not like energy transition is new. You know, we have moved from sources of energy all along the last human history. But this is the energy transition which is happening with a timeline and might have the highest order of change. So renewables as a percentage of the electricity generation probably was less than 1%, 5 years back. And it will end up probably closer to 70% in the next 30, 40 years. Now, that kind of a dramatic change is definitely going to lead to a lot of value migration from one sector to another. So that is what we wanted to highlight, and that is where the term gigatrend came in. Today we talk freely about energy transition, but when we first started looking at it, there were other names like decarbonization, clean tech. Around 2019, when COP27 came in, and 190 countries or 90% of the GDP of the world agreed to a net zero target. That was the time. We had been looking at it prior to that, but honestly speaking, there were no investment opportunities in India. Biofuel was one of the first one to pick up, but that's a very small percentage and very probably restricted to few countries like India, Brazil, maybe some other Southeast Asian nations. So from that perspective, we used to call it decarbonization, clean tech, that kind of an industry. But honestly, at the core of it, what this is the transition of fossil fuel sources to renewable sources. And this is a huge change, and it is going to, impact a lot of things. It will create new leaders. It will give birth to new industries, and it is going to create tremendous wealth. So that is the reason why we called it gigatrend. And I'll let Varun, who's put together the book, add a few points to it.
So thank you, ValueQuest, because of this platform, the kind of work we have done in the last 3 years, the whole team put together. I'll give you some why this name came and some nuances of it. In simple words, one, it is a multi-decade, multi-technology, multi-terawatt and multi-trillion dollar in terms of the trend. And that's why we keep hearing the word mega trend, but this is several times bigger than mega. This is usually, for example, we had the IT boom, we had the pharma boom. They're usually in the range of 10 to 15 years odd, where there is a spurt of industry growth. But I think in case of this energy boom, and while we colloquially keep using energy transition, this is not just an energy transition story. Transition means you are just switching from a certain energy source to a new energy source. This goes way beyond it, where countries are even becoming energy independent. You were importing your energy, and now you want to become independent. You want to generate in-house, right? And the third being affordability, which we'll cover, that this is probably solar, for example, which is going to be the dominant source, is going to be the cheapest form of energy, cleanest form of energy, most scalable form of energy that we could have ever invented.
Wow. Okay. Arvind, you want to add to this? By the way, Varun just conveniently trashed the topic that we've given. We're calling it the energy transition gigatrend. You trashed it, but that's okay. Completely
what
fine.
He's saying is even energy transition is not big enough to capture the entire trend.
Yeah. It showed in the way he was talking about it. Arvind, yeah.
I mean, thank you once again for sharing our views here. In continuation with what my other colleagues have just mentioned, I would have to say that the energy transition stands at a unique point in human history. This is the first time that we are at a confluence of materials science, information technology, and financial power coming behind this sector. There is investments coming into this sector, and they're not backing something just for the sake of the planet Earth. There are hard economic reasons to do it. Now, coming back to the point of what Varun again mentioned about energy independence, renewable energies democratize energy. in the true sense of the word. There are no countries which hold the reins of energy and can extract higher than expected economic rents, causing super cycles. This is truly a flattening of the global power curves.
Please finish your point, sorry.
Yes. And this is an opportunity which, since we call it a transition, it should actually be a revolution. But then I suppose everyone thought it was the French transition till it became the revolution after a point. So that's how it is. Fundamental relationship with energy, how we generate it, how we store it, how we transport it, how we use it. It's all going to change, and it's just beginning.
Okay, so the naysayers might argue, Arvind, that when you talk of battery storage, lithium batteries are the dominant forces, and there is one nation which arguably has a stranglehold on lithium reserves largely. So there might be sporadic instances of maybe one nation or one set of people having a hold on things, but by and large, if you look at the whole ecosystem, you're saying it's very democratized.
Yes, that is what I'm trying to say. And another point that I would like to bring up here is that unlike oil, where if I don't want to extract it, I can just leave it in the ground. I have no cost of not extracting it. Whereas if I've decided that I want to dominate the world by creating refining capacities for lithium and battery assembly facilities, if I don't get to use them, depreciation is a real cost over there. So that is another point. So these are industrial facilities. They have to be used. They will get obsolete. New technologies will replace them. Stranded capacities are a reality of industrialization. So all of these serve as counterweights against the avaricious hoarding of natural resources.
Okay.
I would just like to add to that point that, this is not a single technology focused trend.
Right.
It is, and what Arvind keeps telling us all the time is this is a hands-on deck approach. Whatever technology is applicable wherever, whatever works best is going to happen. It's horses for courses, he keeps telling us. And maybe you can expand a little bit more on that. But essentially, lithium ion is but a single slice or a single piece in this entire thing. And there are, as Varun mentioned, it's multi-technology. And there are many things that are going to happen beyond lithium ion as well. But yeah.
And Arvind brings with him some real decades or real, how do I say, caps of wisdom, Ravi. I mean, I made a mistake of not introducing his accolades earlier, but PhD in physics, 2010 by University of Mumbai, some tremendous work experience. I heard you speak volumes about what he brings to the table as well for Team Value Quest too.
He has 11 patents to his names.
Amazing.
To his name.
Okay, you want to expand on that?
Yes, I'm flattered and thank you for that. Other than this, I would say that when it comes to this all hands on deck approach, it starts with one fundamental difference of renewable energies versus fossil fuels. Fossil fuels, by their very nature, are highly energy dense. Imagine that you're wanting to collect a cup of water and you're standing under the Niagara Falls. If a lot of it spills over and goes wherever it wants to, I don't care, my cup's getting filled. Renewables, on the other hand, are not that energy dense. Even the fill factors for solar are to the tune of around 25%. That's the efficiency of the panels. So you are very conscious of how you're harvesting the energy and using it. That's the first thing. Secondly, you would not want to put up solar panels. Like, for example, if I want a thermal power plant, I could put it up in the coldest of geographies. I could put it up wherever I want. I can't do that with solar. I have to make sure that the sun is available. This has been one of the bugbears of the wind sector. How do I size my turbine and hub height properly for a particular wind for a geography and the wind? And then will climate change make the winds change that these turbines will then get stranded again? So again, it's horses for courses. For batteries particularly. Now, automobile fuels, if we think about it in that sense of the word, they are at once energy dense and power dense. I can just take a lot of fuel, burn it all very rapidly and get a lot of energy in a short time, which is the definition of lot of power. Alternatively, I could burn it very slowly and extract a lot of energy over a slow period of time with the same pile of fuel. I can't do that with lithium ion or any battery chemistry. I have to take a hard choice. Do I want a battery that will give me steady energy drain out for 10-hour periods, or do I want a battery which will give me a lot of energy very rapidly? And the final problem is with the battery, if I have a lot of energy stored in something which is released instantaneously, it's not an energy storage device, that's a bomb. So then the battery management system plays an important role. So various other technologies will come together and we'll choose chemistries. NCM if I want a car, LFP if I want storage, or commercial vehicle applications, maybe other battery chemistries. So that's what it means. We are moving down multi-channels to ultimately address decarbonization and all the aspects of the energy transition, so as to speak.
Okay, I'll offer you a quote, what Dr. Arvind is trying to explain. An analysis of the history of technology shows that technological change is exponential, not linear, contrary to the common sense of intuitive linear. So we won't experience 100 years of progress in 21st century or the next. It will be more like 10,000 years of progress in a very short period. The returns such as the chip speed, right, or silicon technology, and cost effectiveness also increase exponentially. There's even an exponential growth to this exponential growth. This entire solar value chain is built on the silicon semiconductor technology. And the same things that are happening to our mobile or computers is the same learning rate, the same technological speed that is in solar, because the building blocks are the same.
Got it. What you're effectively trying to say is that the rate of change will be unprecedented and will be very, very quick or very, very fast over the course of the next, let's say, 80 years or 76 years, give or take.
And human mind is never able to comprehend exponential curves. And Ravi, in his earlier presentation, has shown the analogy of horses to cars. It took 13 years, merely 13 years for that transition to happen, where thousands of years of mobility changed when the technology inflection happened. In case of automobile, there were tires and combustion engine, etc., manufacturing assembly line and all that.
Yeah, I saw that picture. It was interesting. 2000, there was one car and all horse carriages. Yes. Sorry, 1900, and then 1913,
correct.
Yeah,
yes.
Just one horse carriage. Interesting
so
picture.
Basically, human mind tends to look for faster horses when you talk about technological change, but that's not possible. Obviously, with the combination of the fact that rubber technology came in combustion engine came in, metallurgy came in, gave rise to an application of car, which was not imaginable prior to that. And that is essentially what caused that disruption. And this is just one example. There are scores of such examples where when confluence of few technologies suddenly lead to a dramatic change. Right in 2008, when Apple was launched, the first Apple was launched, the guys like Nokia actually totally ignored it, but they didn't understand the fact that what smartphone was. They were stuck in that old mobile phone, and which itself was not a very old technology. That was barely a 10-year-old technology, and suddenly it got disrupted in the subsequent round.
Okay, so one of the things that you guys have said, and I'm trying to now correlate this to investing because that's what everybody will be out here to listen to, in addition to the, of course, the learning that all of us will get on this whole technology piece as well. And I love that line you've mentioned. I mean, you quoted somebody saying that the opportunity of a lifetime, which this seems to be, must be seized in the lifetime of the opportunity. Is this lifetime of the opportunity here and now, Ravi? Are we early? Or is this the right time, and will this be lasting for multi-decades?
Oh no, I think if I were to give you a baseball analogy, we are in probably the first inning. So I have no doubt there's a long way to go. But having said that, I think I'll just explain to you a framework that we have on how we keep tracking these mega trends. And, I mean, you could have bet on flying cars 40 years back, 50 years back when Back to the Future came in, but they never materialized, right? So it is very important to track the building blocks of that technology, and when they reach that inflection point is when suddenly the mass adoption happens. So we have a framework that has been propagated by Arvind when technological certainty is achieved, when unit economics fall in place, and when the scalability and the business models are aligned, is when that mass adoption of a technology tends to happen. And that is when we should be looking at investing in it. We are, for all practical purposes, we have been public market investors. Now we do some private equity in the late stage, growth stage, but we are not venture capital investors. We are not going to bet on a new visionary technology which is in the realm of possibilities, which may or may not become a reality 20 years down the line. We tend to invest in business models which are right here, right now, and will generate economic profits in a 5-7 year time horizon. That is what we are looking for. And from that prism, we wait for the technology to achieve all those parameters. They should satisfy all those parameters before we even start investing in it.
Okay.
And I'll let Arvind add a few points to that.
Indeed. Alexander Pope had said that in Words' fashion, the same rules hold, alike fantastic if too new or old. Be not the first on whom the new are tried, but don't be the last to cast the old aside. So to flesh out Ravi's framework, or what he just said, if we look at a 3 to 5 year horizon, it can be seen with a lens of also financial discipline. We can assign probabilities to certain outcomes, which then allows us to invest with a more clear lens. Looking further out, the funnel of possibilities becomes a virtual cornucopia of possibilities. Everything is possible 10 years down the road.
Right.
And at the same time, there can be many competing technologies which are still vying for a place. Let me give an example. If we look at the battery storage scientific literature of 3 to 5 years ago, when lithium ion was still not as developed as it is, and battery costs were about $175 odd per kilowatt hour kind of energy. Zinc batteries, redox storage batteries, these were all the rage. But then as lithium ion batteries have now suddenly become more capable, less volatile and less flammable, for example, these other chemistries are being pushed or edged out of the equation. This is why we should not look too far out into the future. The future is truly uncertain. So we like to keep this 3 to 5 year horizon where all the blocks, all the ducks are in a row in terms of scalability, in terms of the technological maturity. And by this time, certain size-related moats would have built up around the technology. So it would not be easy for some new venture capitalist to just come in and push the house down. Nevertheless, in passing, I would say that we are also careful about one clear adage. Every revolution finally consumes the revolutionary. So we are looking out to new trends which might allow that to happen.
Okay.
Neeraj, I'll offer you a case study which is there in our book, which will exactly put the facts on it. So this is the year is 1976. We have installed 1 megawatt of solar panel in the entire year. And the cost of that was $100 per watt. Today, solar panels are globally traded at a per watt. That $100 per watt price today at the end of CY23 is 15 cents per watt. So that's a 99.9985%. 99.9985%. I'm giving you the 4th decimal. So in the year when 1 megawatt was installed, the value becomes $10 million. Fast forward 37 odd years. This year, CY23, we installed 380 gigawatt. If you multiply it by 1,000, you get megawatt. So 380,000 megawatt. And the value is 15 cents. So that comes to $57 billion, which translates into 5,500 times. Despite a 99.9985% decline, the industry revenue has gone up by close to 6,000 times. And that is what Ravi was alluding to, that we tend to underestimate or focus just on one variable, which is price decline. But the kind of rate of adoption it leads to and that is seen in mobile technology or anything, anything.
Yeah, sure.
Right.
No, but this is amazing to know. Okay, so my question to you is, and I want to now nail it down to what some of these individual technologies could be like, and what are the investing opportunities out there for people as well, right? And how do you look at it from your lens? But there's a part in the book which speaks about how the multiplier for each of these: energy storage, electrified storage, hydrogen, nuclear, carbon capture and storage, and what is the multiplier factor out there. And when I look at that number, I'd love to explain this, because when they show that grid on the screen, a lot of people might not completely understand it. So on carbon capture and storage, the multiplier is 45.9 times, nuclear 8.7 times, energy storage 2.6 times. What does this mean?
So actually, the book is just the tip of the iceberg, compared to the work that the team has done. These are basically the value increase in terms of industry. So today, I'll give you one stat, what we have calculated. So there is approximately a $400 billion capex that is going to happen in India from now to the next 8 to 10 years, right? Approximately, correct me if I'm wrong, Ravi. I mean, India is a relatively lower spend compared to the developed world.
Sure.
So there is almost like a 6 to 10 times increase in the cumulative value that is standing today. So like solar is 90 gigawatt and is likely to come 500 to 600 gigawatts. So that's a 6 to 8 times from here. So that's what we had tried to map, that what is the size increase either in terms of value or capacity.
I'm hoping that we do something like this every year to measure how this goes, but because this was fascinating, and in some sense it's not a very exciting here and now subject, but it was lovely from you guys to come in and explain the way you did. It was a lot of learning for me. I'm sure a lot of learning for our listeners and viewers. To all of you, thank you so much, Team ValueQuest, for coming in today.
Thank you so much. We enjoyed it a lot.
Thank you very much.
Thank you. And viewers and listeners, thank you so much for tuning in to yet another Talking Point podcast.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the
Good afternoon and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita, with me is Neeraj Shah, and we'll take you through the last hour and a half or so of trade. Absolutely flat, slight positive bias on the Nifty. The Bank Nifty slightly negative in that sense in terms of the bias there. But it's a largely flattish kind of move across the board. Even broader markets largely trading flat. Negative bias coming in where broader markets are concerned. So that's how the Nifty mid-cap 150 is doing, and the small cap 252 around 1/3% thereabouts lower. So underperforming the benchmark. Let's look at the advanced decline, check on the breadth of the market. The breadth has been tough right from the get-go, and it has remained so, if not worsening meaningfully, but if at all worsening. But otherwise, no sign of any visible improvement currently where breadth is concerned. 2:1 nearly in favor of the declines. Let's look at the Nifty 50 one more time and its constituents thereafter. So HDFC, TCS, some of the heavyweights, not really packing a punch per se, if I can say, but a slight bit of negative bias on all of them. What's doing well seems to be M&M or Bharti. So auto seems to be in front because Maruti and M&M both are contributing decently to the Nifty. Let's pull up the heat map as well. Try and see how it's playing out with regard to, the breadth here is positive. So that's clearly, I mean, the 4-5 stocks just about trading in the green, but nonetheless the breadth seems positive, at least at the moment. What's not doing well? Asian Paints, some consumer names, Tata Consumer, Titan, JSW Steel also part of the pack. HDFC Bank down 0.5% thereabouts. What's doing very well is an Adani Port, standing out today, head and shoulders above the rest, 3.5% higher. M&M also is doing well along with a Maruti. You're seeing Tata Motors also in that top band along with Bajaj Auto, and that's likely pulling the auto pack higher. So if we pull up the heat map with regard to sectors, you likely see auto being the top gainer. There you go, 1% higher. You're seeing pharma flat, slight positive bias. PSU banks doing decently well for themselves. Media and realty within the broader markets under pressure, and Nifty metal also a tad bit lower along with IT. So IT and banks are really pulling the index down, but nonetheless the benchmark is managing to trade in the green because you have auto up 1% or thereabouts. And of course then there is Adani Ports, which is up 3.5%, which is also aiding the index. So all of this playing out. Broader markets though, and I'll bring in Neeraj for perspective here. Neeraj, broader markets seem to be underperforming today. This has now started to recur. It's happened twice in the last 3 to 4 trading sessions. Signs for, some kind of a sign of times to come?
Well, actually, to be honest, most people anticipated that the broader markets will see some very strong stock-specific activity simply because NAV management might come into play. About 1/3%, so nothing too dramatic here as yet. And even for the small caps, 0.31%. Today is also, remember, the expiry day, the rise of the volatility a little bit, so you probably expect a little bit of that to happen. But no, nothing too dramatic, I would have to say, but for the fact that volatility is really inched up in trade. Now, let's get the BSE 500 winners and losers on your screen first to just give you a snapshot of what's moved, right? So you look at Intellect Design Arena in the green after being in the red for a really long time yesterday or day before. Then you have some bit of gains in Amber Enterprises. Yet again, we spoke about this in the morning, that the denial from Amber is not very strong. And it shows in the way the stock has done well. Today, it's not just Adani Ports, by the way. Adani Green 2 up 4.5%, so strong move there. PNC Infra rises on specific news as well. So that is the interesting one. What's gone down is Hindustan Copper, extremely expensive stock, by the way, and commodities per se are going off. Now, unless China really stimulates, very difficult to see copper prices really zooming up and thereby this weakness. Aarti Drugs has come off today after the big move in Tuesday's session. And also sulking today is Bandhan Bank yet again. So those are some, what do I say, the top key names from the BSE 500 which have made a serious strong move either direction. What is missing out from this list? Sadhana Nitro, 8% lower. So that one has had a bit of an issue today after being up about 18-19% a couple of days back. So I think very, very volatile moves for Sadhana Nitro the last 3-4 days. The 1 week chart will show you and therefore difficult to trade some of these small cap names essentially. So on the losing side, that and Hathway Cable. And the winning side, Harsh, the one small addition to all the other names that we pointed out is KFin Tech. Some very strong moves in the session today.
Well, yes, absolutely. So those are some big movers in broader markets. But let me bring on board Kush Bora, founder kushbora.com, as well as G. Chokalingam, founder and MD at Economics Research, to talk to us and give us perspective on what's happening. Kush, what's the sense like on technicals? Give us levels that we can work with at this point.
Hey, hi Harsh. A very good afternoon to everyone. Well, I think it's pretty evident now that the 200-day moving average resistance at the 23,850 mark is going to perhaps hold up for some time. Has held up for the last 3 sessions, including today. Let's see if the expiry, if the last hour trade or the 3 p.m. trade, on the expiry has some surprises for us. But at least the options data setup right now shows that 23,800, 23,850. These areas have a very strong congestion of calls, so might act as the near-term resistance. Thankfully, on the downside too, 23,500, which was the low that was made a couple of sessions ago, has also been held on to. It's not even been tested. So I think this is a range. We are seeing what we call a contraction in the market. I think a couple more sessions and the time for expansion will come out. Now, which direction will the index head to? Of course, the $1 trillion question. But whichever way this range breaks will perhaps decide the the near-term trend. So 23,850 to 900 on the upside and 23,500 on the downside. These are the levels to watch for on the Nifty. From a trade perspective, I don't think there is much to be done on the Nifty till you see a range breakout on the either side. So Nifty from a trade perspective is more like an avoid for me right now.
Okay. Mr. Chokalingam, you're saying, I'll pose the same question for perspective that I, threw to Neeraj. Not sure if you were around at that time. Believe that broader markets warrant some kind of an underperformance versus the benchmark?
Certainly no. But however, there is a dichotomy within the small and mid cap segment, what I call as SMC segment. One hand you had a lot of perception driven stocks. They hit 80-100 PE, and they are the one which are correcting very badly. And it is true, such a steep correction in that particular segment of SMC also affecting the quality stock because the liquidity is limited. Then the second category within the SMC segment is a quality stock with a reasonable valuation, with a reasonable growth story or unlocking value story. They are also corrected to some extent. So I firmly believe that this second category of SMC would outperform the overall Sensex and Nifty. To some extent, it is happening in many individual high quality stocks. And large caps, including Sensex and Nifty, I expect underperformance maybe for another 1 month or so. I believe FIs are unlikely to come back in a big way even in January because they would wait for budget outcome. That's what happened in many years in the past also. So therefore, in the short term, I believe the broader market, namely small and mid cap segment, will outperform. Within that category, the ones which have a reasonable valuation and growth story, unique story in terms of deep values, they would do much better. And so therefore, my theme is that bank on domestic market, bank on domestic investors. Even the last week, 10 lakh new investors have come in, and bank on small and mid cap companies which cater to the domestic demand. This is my thematic presentation for next 1 to 3 months.
Well, interesting one there. Coach, your picks for this afternoon?
Well, I've got a mix of a long and a short. On the long side, you've got Axis Cage. The stock had, a very good run on the back of very good volumes, sustaining above, all the key averages and also broken above some of the key resistance levels, the last one being the 600 mark. So Axis Cage from a near-term perspective, can be considered on the long side for targets of 660 and 690. 600 is where you place that stop loss. On the short side, I've got M&M Fin. Now, this stock has actually seen quite a bit of trubbing and it hasn't really shown any kind of meaningful recovery. Today, it's up, but that is largely due to the rollover activities and the derivatives expiry. But once this is over, the stock could resume its downtrend. On the way down, the targets are 256, 252, 269 is where you place that stop loss, and this is for the January futures.
Okay, those are some ideas. Now, gentlemen, I urge you to hear the next conversation with PG Electroplast, because they've done some interesting things in the recent past. The very latest announcement is, of course, signing of the deal with Whirlpool, and I think Whirlpool is a repeat customer. This is for the select models of Whirlpool's branded semi-automatic washing machine. And of course, they've made some other announcements which we'll talk about too. Let's get in the MD, Mr. Vikas Gupta, who joins in right now on the show to talk about this and more. Mr. Gupta, good having you. Thanks for taking the time out. I hope all is well. This is Neeraj here. Good afternoon, and thanks for joining in. Can you tell us a bit about this deal? Because I presume Whirlpool is a repeat customer. Is this a small ancillary line that has been added, or could the semi-automatic washing machine line be meaningful for PG?
Good afternoon, Neeraj, and thanks for having me on your show. So washing machine is a regular product category, a regular business under PG Electroplast. So Whirlpool is a kind of addition to our long list of clients that for whom we are already making the washing machines. So this business or this deal with Whirlpool will be further boosting our washing machine revenue numbers for the coming FY26, and we are very bullish on this story, because what we believe is that it emphasizes and it further strengthens our belief that the outsourcing story is going to grow further, and wherever there is a mass segment products where there is an intense pricing pressure for all the brands, they will like to outsource the manufacturing of those mass segment products to contract manufacturers like us, where they can drive better price into the market. So we feel it's a further boost to the outsourcing story, which is important for companies like us.
So, a couple of questions here. One is, does this change your guidance at all? Does this incrementally add more revenue? Does it give more robustness to your guidance? That's my first part of the question. The second part is, what's the kind of competition in some of these areas?
So we would like to stick to the revenue guidance that we gave earlier, which is almost around 4,250 crores of revenue for FY25. Whatever update on the revenue guidance will be coming, it will be coming only once we release the results for the third quarter of FY25. So regarding guidance, there is no further update on that. So when we see a washing machine as a business, it's a business which has been growing for us in last 7-8 years, and it has grown at a very rapid clip. We are hopeful that we should be able to continue a CAGR growth of almost around 35 to 40% in washing machine category for the coming 2-3 years as well.
But sir, again, sorry if I'm pushing this a little bit further. Want to understand what kind of competition is currently existing. So many players doing EMS, right? How is competition playing out? One, and what makes you stand out when some of these partnerships and bids come through?
What we feel, competition is always welcome. It brings best out of you. And the competitive landscape is going to become quite intense in going forward. We feel that way. And I feel the size of the opportunity is very large, and there should be adequate market share for all the players. At the end of the day, what we feel is the most important thing in our business is the quality, cost, and delivery. If we are able to deliver on these three parameters to our clients, they will try to stick to us. So execution is a key part in our business. And I think that is the edge that we have with us, and we are hopeful that we will maintain that way.
And what does this do to your margins, sir? Is it margin accretive for you? And how quickly does production start for you on this contract or on this agreement?
So we are hoping to start the production under this contract by first quarter of, I think, beginning of the next financial year. And I think the overall numbers will be captured only in the FY26. In FY25, we don't see any impact of this deal on our guidance.
Vikas, I heard you say that the size of the opportunity is immense, and there are a clutch of companies doing clutch of EMS work for clutch of products as well. And there are PLI schemes out there, quite a number of them, and maybe more on the anvil. How large can this sector be? And I don't know if market share is the right way to look at it, because there are so many different products, but is there a concept of what kind of market share do you have within the EMS space?
So, Neeraj, I think it's a very tricky question to answer in a very simple way. Like, please understand, the market share depends on what is the level of outsourcing in each product category. So dynamics for each product category are different when we talk about air conditioners or televisions or washing machines, which are the three large product categories for our company. So the market share will be very different based on what is the size of the outsourcing opportunity. So if you look at maybe as per our estimates, our internal estimates, in the case of washing machines, almost around 35 to, I think, around 30% of the washing machines are being outsourced. In that, I think we are holding a market share of almost around 15 to 20% in that.
Got it. Okay. Fair call. Now, I know, you probably spoke to us when you did the Spiro deal as well, but I'm just inclined to ask this to you, because that's not first nature to see an EMS company making quote-unquote back-end manufacturing for an electric two-wheeler company, right? That's just a different product category, if you will. But I'm just trying to understand, for you, will this nature of will this also depend on, or do you have any share of the success of Spiro? Or is this just like any other deal wherein you manufacture X quantum of batteries and X quantum of bikes or components of the bikes and hand it over to the company?
So, Neeraj, our agreement with Spiro is a pure manufacturing agreement, and we will be manufacturing a complete EV bike. If you look at our manufacturing capabilities, there are a lot of overlapping areas, like plastic molding is there, electronic sub-assemblies, PCB assemblies are there in the EV bikes. So we see some kind of overlap in our capabilities as of now. And what we feel, EV bike is an exciting area, and we are just trying to test our waters there. We are not going to make a very large investment in this. So we have entered into a manufacturing agreement where the IP or the technology belongs to Spiro. We'll be doing a manufacturing for them and supplying the EV bikes to them, and they will be taking care of the sales and marketing of that product.
Okay. But the success of the bike doesn't have any implication on your EBITDA or revenue. You effectively are manufacturing and you get paid for that, right? In some sense, it's...
Yes. So our agreements are structured that way. And so Spiro is taking care of the on the side of the sales and marketing of the EV bikes, and we are not building on a very large numbers. We are very conservative, and we feel that in the first 2 years of operations under this product category, we should be able to achieve a revenue of around 500 crores in a year.
So my final question at least is, what's your sense of what's the kind of revenue run rate of sorts that you can have in terms of visibility? So you might be in a silent period, you can't give exact numbers, which is fine. I'm not asking for the current quarter. But there are EMS companies who are talking about maintaining anywhere between 30 to 35% growth or even higher than that for the better part of this decade, the remaining 4 or 5 years. You reckon that is a possibility, or am I undermining your capabilities?
So, Neeraj, I think the kind of opportunity which is there in all the product categories that we are getting into, and we are already there, we are very hopeful, and we are in fact aligning our resources. We are doing a lot of capital investments going forward. We are building capacities. We are further strengthening our capabilities on our product offering. And we firmly believe that the growth story will continue. And we are hopeful that we should be also achieving a CAGR of almost around 35 to 40% going forward in the next 3-4 years. So we are quite bullish on this, and we are there.
Okay. Thank you so much, sir, Mr. Gupta, for coming in, speaking with us, and giving us all of that perspective.
Yeah. And season's greetings, of course. I mean,
yes.
Come out with a good bike very soon.
Thank you.
All right. Well, Harsh, confidence personified, most of these EMS players, isn't it?
Yes, but I wonder what you think about valuations in this space, because, I mean, opportunity size not in doubt. The question here really is, if you've missed the bus, do you get on now?
Yeah, but see, think of it this way. We'll ask this question to Mr. Chokalingam, but think of it this way. When Dixon was at 12,000, people would have asked this question, and the purest answer would have been too expensive. Let it correct, and look at what's happened to that, or to Amber, or Kane's Tech for that matter.
I think likely I would have only asked that question.
I know, all of us would have. So let's ask that question to Mr. Chokalingam.
Yes, Mr. Chokalingam.
Yeah, but what do you think of these EMS players, Mr. Chokalingam? Did you get a chance to hear the PG Electroplast interview as well?
So Neeraj has transferred his stress to me.
Sorry?
You have transferred your stress to me. So very difficult to recommend a buy call. But as you rightly said, such stocks, if you give sell call, then you look like a joker also. But the best way to, with a little bit of learning in the last 3.5 decades. So what I do normally, don't, compromise on some extent the valuation, in the sense, the traditional intelligence investors say that you give 100 PE, profit grows at 100%. But in this case, I would say you compromise to the extent of 50%. That is, you give 100 PE, at least profit grows consistently 50%. And that is not the case with the PG Electroplast. And secondly, these kind of businesses, they don't own the brand on their own. So one can justify high valuation if companies own the brand. And secondly, normally these are concentrated, the customers are concentrated in numbers. So there is some element of risk. Not only, I am not talking about PG Electro in particular, generally in this kind of business. So therefore, I would wonder whether one can give the PEG ratio of more than 2. That is, you give 100 PE when profit is growing up to 50%. So I have my own doubt. So I would not be comfortable in giving buy call at this price.
Is there any company, sir, within that EMS space which you find comfortable buying? Or which fits your parameters of 50% kind of profit growth with 100 PE, etc.?
My memory is right. Dixon is coming close to that with the latest business, but generally very difficult to find.
Okay, Dixon, possibly. Kush, over to you.
Thankfully, no such stress for me. PG Electroplast is a call that we had initiated earlier this month, I think for a second target of 3840 or something. and in a way past that, right? It had hit overheated territories on the daily charts, and now you're seeing some sort of consolidation. I think this is just the stock setting up for the next leg of up move from here on. The recent low that was made, close to the 900 mark should act as a positional stop loss on the way up. I think 1020, even 1070 is a good number for the stock. I mean, especially if you consider the fact that on the way down the volume is pretty thin. So I think this is just base formation for the next leg of up move. So if I didn't have a position, I would create one, and if I did have a position, I would continue riding on.
Okay, Jaman, well, let's ride on some ideas on the other side of this very quick break. Stay tuned, viewers. We'll be right back.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas.
Welcome back. You're watching India Market Close on NDTV Profit. I'm Harsh Saita. With me is Neeraj Shah, and we'll continue the show. Just quick check on where markets are at. The Nifty 50 flat, slight positive bias continues on the benchmark. The broader markets slightly underperforming. Nothing material there. 1/3% lower on both the Nifty mid cap as well as the small cap. So slight bit of underperformance where that pocket of the market is concerned. The advanced decline breadth remains firmly in favor of the declines, and that largely signals some amount of pressure, especially in the broader end of the market. Where the Nifty is concerned, I want to quickly mark out some stocks which are doing very well. Adani Ports up 5% now, so strong gains there. Some good traction on auto, M&M, Maruti, Bajaj Auto also doing well. Tata Motors also doing decently well for itself. All 1% or so higher, all of the auto pack within the Nifty 50. SBI Life doing well as well. You're seeing a Bharti Airtel and a Shriram Finance also participate. Some bit of participation there. But the heavyweights, no real move there. Consumer names seeing some bit of pressure today. Asian Paints, Titan, Nestle, Tata Consumer all under pressure. The IT pack also under pressure. PSU banks doing slightly better than the private peers, but the Nifty Bank is trading with a slight negative bias, if I can say that. So that's how it's playing out. But the entire Adani pack today in the green, led by Adani Ports, the flagship company, along with Adani Enterprises. Kush, let me come to you, especially with Adani Ports, just that move. What's your sense like? What would you do at this point?
Well, again, Harshina, from this table, Adani Ports, we've constantly maintained that, remains one of our top picks as well. Some correction, along the way, but nice support and nice base formation around the 1180 mark. If you do have a position, continue to hold on to this one. If not, you might want to consider adding, because today the stock is crossing its 20-day moving average. If these levels sustain, then you'll have a closing above this level as well, and that too after a nice consolidation. So for a fresh position, my suggestion would be to keep a stop loss at 1210. On the upside, you're looking at targets as 1275, and once that is taken out, about 1300, and that's where some supply might come in. You might also face the 50-day moving pressure, but up until 1300, I think the stock's got a good run in the coming days.
Okay, let me switch to stock of the day. The top stock of the day is Godfrey Phillips, stock up 9%. Mihika here to tell us why.
It's not done very well in the past month, but it's done great today. The stock is up 9.7% on an intraday basis, and the latest news flow is some key top management changes. Now, the board of directors has appointed Siddharth Chawla as the senior management personnel, and he is hired as the chief operating officer and will take his position at the company on Jan 7th of 2025, which is next year, just in a few days. Now, a little bit about the new CEO. The business Mr. Siddharth Chawla has 24 years of diverse experience as a senior management as well as a cross-functional leadership positions. The experience does include 18 years at ITC, 3 years at the e-commerce unicorn startup Udaan, and he also worked as the chief growth officer at Pharma Technologies. A little bit about Godfrey Phillips as a company. It's a flagship FMCG company of the KK Modi Group. They have a diversified business interest in the field of tobacco as well as confectionery. The company has an exclusive agreement to manufacture and sell the Marlboro brand in India on an exclusive basis. But overall, when you talk about the year to date, it's one of the top Nifty Small Cap 250 gainers. It's up 165%. Strong H1 FY25 performance where revenues were up 23% on a year-on-year basis and net profit was up 14.2%. When you talk about lastly the strategy going ahead, well, they are targeting new cigarette markets and they plan to to strengthen their relationships with Marlboro in India. They're also going to build on export markets to enhance the sale of unmanufactured tobacco. And lastly, they're also leveraging and monetizing distribution infrastructure. They recently signed a product supply agreement with Ferrero Rocher to distribute their manufactured sweet goods in India.
Okay. Well, thanks a lot for that. Interesting one there. I wonder, Mr. Chokalingam, is there